It's hot. Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
How are you guys?
It's dark. It's dark and rainy.
Finally got our fall weather. It's here.
This isn't even that bad. Mid-60s? I mean,
I'm not
this is the
complaining
best.
about the temperature.
October 5th, I was in my pool. I mean...
Oh, yeah. No, I was on the
can't
bike and it was
complain.
hot. Yeah, it was 85.
You know what you can complain about? Having to wear a watch on your right wrist. That's a problem.
That's weird. I don't
Okay.
know if I could do that.
So
Right.
so away from the universal problem of it getting dark too
Yeah.
early to the singular problem of you wearing your watch on your opposite
Yes,
hand.
yes,
Comprende,
yes. Yeah.
senor.
Yeah.
Okay.
You want to be outside the circle? You don't want to be outside the circle.
I want to be anywhere that's not here.
What is that? Meet the Fox? Is
You
that
should
Meet
bring
the
back.
Fockers?
You should
Meet
do
the Parents.
just like the Flava Flav clock. Then.
Oh, like a
Yeah,
big
that's
one
true.
around.
Yeah.
With my eyes, I might need one like
yeah,
that.
there you go. So
No doubt about that. Oh, unbelievable. But you are right. Up when it's dark like a mushroom. Go home when it's dark like a mushroom. It's tough.
yeah, when I left the gym yesterday, it was dark like for the first time, and I was like, oh, because I normally park really far in the parking because I like to get extra steps, and then I was like, okay, maybe I should not.
You don't
it's
try
like
to squeeze
shady.
into a spot really, really close to the door?
No, because I want because on days that I'm lifting, especially doing
I don't
leg
like that
stuff,
either.
I'm not doing like cardio after, so I was like, I'll at least get steps in.
Well, that's good. That's good.
But now I think I'm gonna get murdered, so I'm gonna park closer.
Just park under one of the lights.
I will.
Yeah.
But in the summer, I park in the shady part because it's shady.
Yeah.
But now it's just shady.
Now it's other shape.
Yeah. How was your evening, Nikki?
Good.
Don't lie to me.
No, it's good.
Good.
I mean, watch some football. It's Monday Night Football, so
Should my Chiefs lost.
Great game.
So
Did you watch the end of the game?
And the Pats won.
I didn't. I missed the last quarter and a half.
Trevor Lawrence, they're on with time running out. I mean, I don't know, 10, 15 seconds, whatever it is. Time running out. They're down by 3 or 4. He's on the 3 or 4 yard line. He drops
back. And
he gets stepped on by his guard, his right guard, steps on his foot. He falls down. He goes to get up. He falls down again, a second time. He gets up.
He's basically James Brown at this point. He's like, help me.
It was a great athletic play. And Kansas City looked like they had him buttoned up on
And then just a defender missed his legs on the tackle, and then he just scampered in to the end zone heartbreakingly.
It was awesome. It really was. Great ending to the game.
Was Taylor at the game?
No, she was on Jimmy Fallon last night. So she was in New York recording the Jimmy Fallon show.
Is she 0-2 this year when she's at the game?
I don't know what the record is.
Oh.
I honestly
Chiefs
don't.
need her. The Chiefs need her. I
honestly
mean,
don't. They need something.
yeah, they need
something. But
Travis got his touchdown though.
he did. And it
On a
was his
controversial
birthday.
play there too.
Yeah,
It was not pass interference.
Chip, yeah.
Big play.
It's not pass interference.
I love that all the Swifties are now NFL referees.
It is the most perfect alignment of just unhinged fandoms that we are twin flames basically of just the most annoying people in your office, the Chief fans and the Swifties. So it's fine. Happy to
The
be.
deadly combination.
But also the Patriots beat the Bills, so I'm not mad about that.
I know. I think that's because a viewer, Greg, went to go to that game. He went to that game. I think he's just bad luck for the Bills. He's a real big Bills fan. I think he's just bad luck for him. He's going to have to stay home from now on.
Damn.
Yeah, but I don't know. There's some shakeup. Did the Cubs win?
Oof. I didn't even.
I only saw it was tied,
think
and then
they
the second, and then I stopped looking.
played. Did they? Yesterday, 7-3. They lost to 0-2. I didn't even watch.
Ooh, oh no.
Sorry, I didn't see it.
And then I think the game comes back here then for the third game. So
Yeah. I mean, they're playing the best team in baseball. I mean,
the Brewers are the best.
I think so.
Are they?
I think one of the best.
When's the last time they won
The Brew
a
Crew?
World Series? Yeah.
Oh, it's been forever.
Oh, yeah. So okay.
Not my forte. Baseball, not my forte.
No, I like to go. I don't like to watch it.
Nick quit early on.
Baseball?
Yeah.
It was never my
Yeah, it was never
My
my.
calling, it
I mean,
was
I played when I was a
the
kid, but
side.
never my.
side sport,
Yeah.
when there's nothing else to
side
do.
cheese kind of thing.
Yeah.
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 Meh.
And the Batistas aren't fast.
No,
That was always a problem.
Not
You're
even
not built for
deceptive
speed.
speed.
Not
No,
even deceptive.
speed.
No, it's.
Although I will remember the day that you beat me in a foot race.
Oh yeah, you fell over. You tripped and fell. And this was, I think I was probably 14, 15-ish.
Sure.
So you were still young. You kind of fell over.
It was on an unlevel playing field. I mean, it was
What, like a street? the paving wasn't up to par?
paving wasn't up to par.
Yeah.
Paving wasn't up to par. And it was after dinner. I believe it was after.
Has Vinny done that yet? Has he challenged
I
you
don't
to a
think he
race?
can.
Oh, that's like a rite of passage.
Yeah. You always got to challenge your dad. I mean, that is a rite of passage.
Do you know what's like a wild statistic? I don't know the actual number. Someone can like look it up and drop it in the chat or whatever. But like 95% of people just like have just stopped sprinting. Like there comes just a point in your life where you just
And I can do that anymore.
no, you just never ran fast again.
I don't have to run from anything anymore.
No, but there's
I'm not
a
gonna do
point-
anything to make me run from anything. I'm not gonna do that anymore.
There was a point that then you just stopped running from stuff, and I just think it's
That's
really
kinda true.
It's a wild statistic, and then you think about it, you're like, damn, when's the like? So sometimes like fantasy leagues, they'll make the guys sprint, and then they're
Yeah.
all blowing out their
Oh,
hands.
for their pick,
Right, yeah.
picking order or something like that. Yeah, that's great. I love those.
But
things.
you should like start sprinting, like obviously build up to it slowly, but it's good that interval training.
What's the distance requirement? Like, does my pickleball
Well, I think
count?
it's in like intervals, so like 30 seconds. Or
Okay.
Get up to, and then try to get up to like a minute, maybe. I don't know.
Yeah.
Yeah.
Because I don't think I've done distance. I think like short.
Yeah. I was gonna say, when's the last time that you?
Distance has been probably since I played like softball. So it's
Okay.
5 or 6 years probably. But I mean, from a running perspective, when I play pickleball, I'm running back and forth.
Okay.
I mean,
okay.
but those are short bursts. It's
right,
not like
right. And that's more
a
like
sprint. We're not talking
I'm
about
not talking
like,
full sprinting,
you
right?
know,
like
a 1 mile
like
sprint,
Tom
half-mile
Cruise,
sprint.
like
yeah.
Tom Cruise blade hands.
Yeah. I can't remember the last time I've done that.
I just think it's interesting, but
Scary thought.
Scary.
That's-
Too.
I
Yeah, when's the
Stationary
last time
bikes
you
about as
think-
fast as I go these days.
Yeah, when's the last time you think that you sprinted?
Never. I just told you, stationary bike is as far as I go.
You're like I'm from Brooklyn. We strut. We don't sprint.
No
Hey.
sprinting. No sprinting.
Hey. Okay. Wow.
82. My Taiwanese sources say the Brewers. They've never won a World Series. Last time they were there was in '82. They lost to the Cardinals.
Oh, they've never won.
Yeah,
My
that's
Taiwanese
that's a good
sources say
story.
I don't fact check them
Oh,
because I
that's a
think they're
good
beautiful.
story.
It's a Cubs-esque.
Yeah.
Period of time.
I don't love that at the Brewers Stadium that when the Cubs were up there over the weekend that they shaded the Brewer side but left the
Ooh.
Cubs
Out in
in
the
like
sun?
the sun laser. I mean, yes, that is your home field advantage, but that just seems evil.
Not good.
I don't know. What do you think about it?
I think you should do it on both sides if you're going to do it at all. I mean, you know. I know.
There's other stadiums that are built like that. I think the 49ers
The
stadium.
Cowboys, too. The
in Santa
Cowboys have that.
Yeah.
They have like the
Cowboys-
Sun.
Yeah, they-
spot
right,
where,
yeah.
you know, right in the second half.
I don't know. Shenanigans all around. How's the sauna?
Sauna's doing good.
This
I'm
is good weather for it.
Yeah, no,
Do
it's
this.
been great. Actually, the pool feels cold when you go from the sauna to the pool.
You still have the pool open?
Yeah.
Liz still
October
has her
13th.
pool open.
Wow.
Yeah, I was in it 2 days ago. I mean,
Really?
Lights. I'm installing lights now in the sauna.
Ooh.
I didn't
It
think the
didn't come
sauna.
with lights.
What's that?
It didn't come with lights.
No. Everything's extra these days. You know.
Oh,
What I mean?
I don't have
Yeah.
any
no
understandings
no lights in a barrel.
of
It's a barrel
sauna construction.
Yeah, I didn't think the sauna through though because it's like I have
No.
to. I think I have to put a lock on it. Like it's a
Why?
room I can't see when the kids are over and stuff like that.
Ooh.
Gross. Gross.
I didn't think it 100% through. If you think about it.
Yeah.
Yeah.
He'll find a way. Don't worry. If you put a lock on that, be somewhere else.
I gotta do
It'll be
something.
okay.
I think.
Yeah, we'll put a lock on it then, or just put cameras in there, or just like a giant Like
Everything.
Don't
melts.
put the
You can't
cameras
put
in.
like a
anything in there.
giant mural of yourself though going
Yeah,
like this.
that's true.
You can't put anything in there. Everything melts.
Yeah, that
You know,
makes.
your
I didn't.
phone
Think. Again,
gets
I don't know
overheated.
anything about saunas.
Yeah.
Yeah, it gets hot.
Is the ice bath coming soon too?
I can't keep the ice
Cold
bath
blood.
water clean. You know what I mean? Like, it's stagnant and you have to refill
Yeah.
it all the time. Wintertime, hoses freeze.
Yeah.
Real pain in the arse.
Yeah.
Kind of thing. So I don't think I'll go that.
They got those nice ones.
You live
though.
near Lake
Yeah, I
Michigan.
don't want to go
Porcelain.
there, man.
You live near Lake Michigan. That's free.
Yeah, right.
That's
true.
Jump in the lake.
Yeah.
Just jump in
Yeah.
the lake.
Yeah, you wait long enough, it'll get cold enough.
Yeah.
Hey, we got a great show for you today. What day is it? It's Tuesday. It is. I think it's National Taco Tuesday. Like I know every Tuesday
Oh, really?
here is Taco Tuesday, but I think
Today's
this
officially the day.
I think today is officially.
We should not have tacos today then, since we have it every other day, every other Tuesday.
To be contrarian, well, I
Uh-huh.
think it's. I could eat tacos every day. I just love tacos.
Hmm.
Anyway, but yes, today is Taco Tuesday, and we got a great show for you today on this terrific Tuesday. At the top of the 8 o'clock hour, we have an options jive, the Zen of Zero, 3 ways to get neutral.
Ooh.
Interesting. I like the sort of woo-woo philosophy of that there.
Titles have gotten we've gotten good with them.
Nice.
How many
good.
messages are on your phone? Like on the indicator, like the red bubble indicators, like for your inbox or your messages, or chats or whatever.
For text messages, 0.
Oh, okay.
Yeah, but for
Emails?
for like my personal Gmail, it's like 15,000.
Wow.
Because I just leave it. I just don't.
Dad, I can't
It's-
sleep now.
Yeah.
What about you, Bat?
Yeah.
Ooh. Not as many as him.
15,000's a lot.
Not as many as you.
Just leave them. I don't know. It's just like you get all the promo emails, all that.
I'm 0. I have to.
I'm 0 inbox.
I'm 0. All
I
devices.
mean, on a work.
yeah, no, on all devices.
My Yahoo, my old Yahoo one,
Yeah.
I haven't checked forever. That's
That's what I'm saying.
Oh, that one's got.
Oh. No, you
Tens
still
of
get-
thousands.
just get
Yeah,
it in
I
there,
agree.
clean it
Yeah.
out. Well, we're gonna give you 3 ways to get to neutral when it talks about your.
Where did that come from? What was?
What did to get to 0?
Oh,
In inbox
to get to
0. So that's
neutral.
what. Yeah,
I get it. I
The
get it.
zen of 0.
Yes,
Because I
yes.
find it very zen to not have notifications
Yes, oh,
on my
that is
phone
good.
or on my desktop, but that's a me issue. Options jive at 8:40. Stock rallies and FOMO. Oh no.
It's a good
no.
one.
Okay.
Talking about fading big moves
Okay.
in the market. In specific stocks, took a basket of like 20 stocks and looked at them. So
Very interesting. That is at 8:40, and then 9 o'clock. Our market measures today. Friday rebalancing. The new must-do trade. Ooh, I love how these are sounding more like Cosmo headlines.
They're catchy.
0 to Sen. The new must-do you, girl. Look at you. Looks for fall, for autumn.
Yes.
Yeah, getting into it. That's Friday, 9 o'clock. When is the rebalancing? Do you know?
the what?
The rebalancing is Friday.
Yeah, so we're looking at like the move on Friday if it's indicative of what happens on Monday.
Okay.
So it's kind of a continuation of the topic we had yesterday of like consecutive moves and
Maybe
you know,
does it pay to hold delta over the weekend?
Yes.
Thing? Or
Yes.
does it pay to fade it over the weekend?
yes.
I gotcha. And then continuing live from the trade desk, we got Quentin and Glenn coming in.
That's G money to you.
G Money.
Yeah.
Yes, Quentin and G Money. My regards to both. G Money and Quentin. They will be in at 9:20. Just doing some things on the FX and
Yes.
crypto side of our business.
FX been moving.
It has been moving. There's opportunities.
Yen's been crazy. Crypto's been crazy. They've both been nuts.
Like France may not be a country tomorrow. Like we don't even know. Like France, girl, what is going on? Like get it together, France. As I say this, like I have issue to throw stones at France. I'm so sorry, France. But yeah, that could mean stuff is going on in the euro. Is all I meant because
Yes.
France is kind of a big deal.
I got some political instability, right?
Yes, yeah. The prime minister, he quit after 27 days. He's like, you know what? I don't need this job.
Peace out.
Right, and so now
This isn't gonna work
right,
out.
and then so like
Peace out,
Macron,
peace out.
he's got to like figure out what to do because he like kind of like canceled Parliament. So he's either got to like do some election stuff. This is my
How do you
rough
quit?
understanding
Or
of it.
I think it was like
or he
budget
has to
disputes,
resign,
right?
or Macron has to resign.
Right.
So now it's just
But I
figuring.
mean, it's
out.
budget disputes. Isn't that what they're supposed to debate about? I mean, like, I think.
I don't. Again, my
don't know.
forte is not.
Yeah.
European politics for 200, Alex. Then Liz and Jenny are live from the floor of the SIBO every Tuesday and Wednesday. The ladies are live from the floor. It's always electric. Check it out. It's always a good show. So much vibrancy and action going on. Sometimes they interview stray traders. They adopt a trader and they'll interview them. And it's always just good content. So check out the lovely Liz and Jenny at 10 a.m. live from the SIBO. That is the run of show for today. Are you ready for your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Just in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today is a terrific Tuesday.
Yes, you almost forgot.
I know. I had to look at I don't know what day it is. It's dark all the time. I'm so tired. Also, where's my present?
Oh, I have it in my car.
Yeah.
I have it in my car. I will get it after the show is over.
Trying to lure me to a second location.
I
is
do
a
have
no.
it. I do have it. It's in my car. I am
is a
so
no.
sorry.
No.
Where's my present? This is my present.
This is me.
A heart. Yeah.
It's me.
Yeah.
Yeah, here you go.
How do the Gen Zs do it?
I get like this.
Oh, that's not.
Yeah, it hurt. I
You
think I have
can't do
arthritis
that.
now. It hurts.
Yeah.
I can't do that.
That's
Oh,
the,
it's
that's
with-
the Gen Z way to do it. Yeah.
Oh.
Nikki. Nikki, that's a circle. Okay, there you go. You got it. You got it.
My fingers are all broken.
I know.
From
It's hard.
softball, so.
It's hard to do. This is the part of the show I like to call the Daily Dose. We talk about today's financial news and headlines. My name's Vanetta. Mr. Bat, any earnings?
No. Don't even worry
no.
about it. Even the
Delta and Pepsi are on Thursday. They start.
yeah,
Okay.
even the ones that are going
So
to
I
come out
will
this
wait
week, you're
till
not gonna
then.
talk
Yes.
Hey, here's a headline. Your S&P index fund might be more risky than the internet bubble. That's because the S&P 500's record concentration to a handful of stocks and a high overall value to earnings make a case for broadening your portfolio. I see some kernels of truth in there, but is it too risky to get frisky in the 500?
Can I talk about a rumor that's true but is unsustainable? It's not been validated yet about a new index that's going to come out, new cash settled.
I mean, it's
Index?
your legal.
Sure.
It's your legal risk. Go ahead.
I believe the SIBO is going to come out with a cash index that's the top 7 stocks plus 3. I believe AMD actually is one of them.
So it's going to be 10?
It's going to be 10
stocks?
10 of the
Ooh.
highest. So so if you want concentration, if you think the
Yeah.
S&P
Sure.
500 doesn't have enough concentration
Right.
for you, they're going to have it's going to be cash settled just like the SPX. That's the real.
Interesting.
Possibly Q1.
Can you do 0 days in there?
I'm sure
ma'am.
that's going to be.
Yes, ma'am.
How big is it going to be? Like, what's the pricing going to be?
Don't
Like, is
have those details.
That's
Don't have those
interesting.
details.
I wonder if they'll keep. Well, they probably do some sort of. It'll be a
I'll
different.
find out more.
It'll be a different weighting, I would imagine.
I would
Like they would probably market cap weight it. Interesting. That
would
should be fun.
interesting. Yeah.
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 Especially to see how often they would change stuff out. Like if it was like top model and like a stock got voted off every week because they weren't
Now you
certain.
got to make sure. Now
it
you
would probably be
have
quarterly.
liquidity, and we're early. We're talking about something that hasn't really been
Yeah.
publicly announced yet. So
All right. Well, speaking of the indices, what are you doing in them? S&P, Nasdaq, the all-time highs again. Russell, where do we
seems
go?
like business as usual. Doesn't matter what happens, whether it be across the oceans or here in AppLovin or anywhere else. Even the S&P is basically unchanged, slightly green. Volatility, not doing anything.
Hey,
Same as it ever was.
Yes.
Fifth Third Bancorp, that's hard to say. Fifth Third Bancorp, I thought I put it that. Is going to buy Comerica for a $10.9 billion in an all-stock deal. Yay, regional banks? I don't know.
Comerica,
I think it's CMA.
I don't know if it trades.
Yeah, it's CMA.
CMA?
Yeah, I don't know what Fifth Third is.
Oh, good for you. You're all right.
Fifth Third
$70
might be
$80.
FTB, FB,
I don't have it here. It's not.
first.
Fifth Third, I think Big West Coast Bank.
No, it wasn't one of those.
I think
One
we
of
have
the-
Fifth Third's here.
Yeah,
the ads.
Yeah, we have Fifth Third here.
Yeah.
I know we do.
It's the worst name.
Yeah. Let's see. Let's see.
But what's the regional banking ETF or whatever?
Oh God.
Oh yeah, got 1,000. Oh, not even
KB?
any in California. Completely do that across 12
We're
states.
really digging in the weeds here at the regional banking
Yeah.
ETFs.
Give it to me.
KBE is one of them.
Okay.
I think there's another one. I mean, IWM is probably really where you would trade
Sure.
these because a lot of
And they're going to be the
small
first
cap-
to report earnings.
Yes.
Banks in general, the big banks.
Yes, IWM is
Headquarters
at
in
highs.
Cincinnati, Ohio. Can't get more Midwest than that.
Yeah, that's
Completely
it.
wrong about the West Coast.
Yeah, because I was like, I'm pretty sure they're here.
Yeah.
So
completely wrong.
Yes.
Disregard that.
okay, that's it. We normally do.
Thank you.
You're welcome. All right. Well, you're not impressed by my regional bank merger story.
No.
No, that's awesome.
Fine. All right,
That's
thank
awesome.
you. Hey, well, the
Yes.
big story of yesterday is that AMD skyrocketed 23% as OpenAI was like, come on over to daddy. You want some of this sweet, sweet cash? And they're like, give it to me, baby. Yeah, OpenAI and AMD have reached a deal that could see Sam Altman's company take a 10% stake of the chip maker. So the government owns AMD, OpenAI owns AMD. AMD's going to the moon. They can't fail.
Yeah,
with that
everybody
combo.
owns AMD.
Yep.
OpenAI will deploy 6 gigawatts of AMD Instinct GPUs over multiple years. Is it?
Opened near its highs yesterday where Nikki sold it. Great job out of you. Closed near its lows. It is up another $8 this morning, kind of
Jeez.
mid-range
Yeah.
of yesterday's movement.
Volatility really expanded in there, so we'll see if it comes in a little bit today.
Ivy rank of 54.
I ended up
Correct.
selling a November strangle on the close yesterday with Jamal. I did the 170, 280 strangle at $8
Wow.
in November. We had a big wide, one standard deviation. So
Yeah, earnings November 4th. Yeah, seems good.
down. I mean, your break even is down at basically where it was trading before the
Before
move.
the whole
And
AI.
then, you got 30, 40 points to the upside. So hopefully it's a vol move. You get a little bit of a vol contraction in the next week as it chops around, a la like Oracle.
Yeah,
That
right.
if that kind of same sort of move plays out, this should
And
come
even a
in.
small down move would probably help your volatility.
sure, 'cause
too.
it'll take the
up move is
upside.
going to hurt it a little bit. We'll
Yeah.
see if there's enough
Yeah.
juice in there.
Also, why does this look like the promo for like a Disney show that I would watch about like a real smart lady scientist and like her protege? I don't know. Like, it's giving Disney Channel vibes. I don't know why, but I would watch this. They have like wacky adventures every week. No. Well, OpenAI is quite the kingmaker because Figma stock rallied on news that it was going to be part of OpenAI's third-party integration. So OpenAI is partnering with apps like Canva, Zillow, Booking.com, and Spotify. So now this seems so extraneous. You could go into ChatGPT. Start over, Vanetta. You can go into ChatGPT and say, hey, make me a playlist for my party. These kids can't do anything. They don't even know how to make a mixtape, and I'm upset.
What's wrong with that? You know what? Mixtapes are the greatest things in the entire world.
It's how you said I love you. It's how you say you're my friend.
Yeah,
It's
it was
how,
so
like,
personal.
I want to share this with you. I love this band. I think you would like them. And then now it's like, ChatGPT, make me a playlist. I'm over it.
I'm with you. Spotify looks unchanged. Zillow.
Fig was the big one.
Oh,
Yes.
Go ahead.
No, it's up a couple dollars. I was just going to say that ChatGPT is the kingmaker. Can just like over the
They're like,
overnight. It's like, oh yeah, bless you with the 100 billion here, 100 billion
Yeah.
there. It's
I saw
100
an
billion.
A+
Yeah.
tweet yesterday. I wish I had written it. Someone was like, why the F is it 85 degrees in October? And it's like, because people are asking ChatGPT to make their grocery list. Like,
true.
and I was like, anyway, do with that what you will. But congratulations to all the companies that stock went up just
Woo woo.
and make your own playlists, people. Like, it's not that
Yeah.
hard. Like, make your own playlists. Anyway,
I do like the Spotify Discover Weekly playlist.
that's fine.
That's
using
that's
AI.
one that I-
That's okay.
different.
That's fine.
Yeah, yeah,
Good
yeah.
stuff for you.
Yeah, Discover
Yeah, that's
Weekly,
okay.
that's their back end
Yeah.
computing stuff for,
Yeah, but that's AI.
Yeah, I know.
That's-
We're-
I'm being
that's
influenced by AI.
I know, yeah.
So,
In other AI news, Anthropic landed their biggest enterprise deployment with a deal with Deloitte. Deloitte is rolling out Anthropic's Claude to more than 470,000 employees across 150 countries. I believe we use the enterprise version of Claude here.
Yes, we do. I got
Yeah.
absolutely roasted for talking about Claude.
Did you?
Yeah, when I was asked my favorite, chat
AI.
program,
Yeah.
AI, and I said Claude's great because I use it for some of the programming stuff that I need help on. And everybody was like, Claude? Who uses Claude? I don't know. I think it's
Each have
good.
their different strengths. Yeah, I mean, I use AI.
I
too.
wouldn't know. I don't use anything. I use probably the research team or you, somebody else like that.
AppLovin stock tanked yesterday on a report that the SEC is investigating the company over data collection practices. AppLovin shares plummeted. The SEC has been probing the mobile advertising company over their data collection processes. They're looking into whether the company violated agreements on pushing targeted ads to consumers.
Oopsie.
I saw it under 550.
Yeah, I think the first move was like it got down to like 540-ish, 530-ish.
Yeah.
Yeah, but it's up $22 this morning.
It's 608 right now. Yeah.
Yeah.
And it's a 5x in the last year.
Yes.
I mean, it's gone from 100 to 6.
Last year, I mean, July it was in the 300s.
Yeah.
And
Next
yesterday
week,
it was
next
in
week,
700.
the U.S. government's going to own 10% of AppLovin, and it's
We'll have to put that in the portfolio then.
It's going to be fine. They're going to pay their penance, and it's going to be fine. This is, I don't know how to explain this, but Meta's Instagram says they're launching a new Rings Award that would give 25 creators a literal gold ring and matching badge on their profile. Winners would be chosen from a star-studded panel of Adam Mosseri, who's the guy that invented Instagram, Spike Lee, Mark Jacobs. What? Y'all couldn't find no women? But then there's no money in this. So I don't know how you're going to beat TikTok, but Reels is like, okay, our top creators,
gonna give you
not
this
going to give you any
badge.
money, but we're going to give you a badge and a gold ring. But that's a choice, Meta. They're spending $100 billion on AI, but they can't pay creators.
I really wish I knew, I wish it was disseminated, how much these creators really make.
Some will tell you. Some will do a breakdown of what they make a month.
I think it's real top heavy is what I'm
Sure. It's super
trying
concentrated.
to say.
Yeah.
I wonder how many are, anyway.
Believe me, I've looked into it. Girls normally on average only make $20 on OnlyFans. It's hard. It's really the top, 0.5%. So no one wants to see my feet.
Sadly, you're blessed with
I have the controls to the YouTube chat. I could put that in there if you would like to know if the chat would like to see your feet.
What is Meta doing?
You could do a poll. Yes, no.
She's trying not to answer you and deflect to find out
we
what
can
Meta's
start this
doing.
right now.
Cute feet. I have cute feet. They're super
Prove it. Meta's up $2.
No, I have cute feet.
Do it for the gram.
Yeah.
Yeah.
Meta's up
No
$2.
free feet pics.
717.
This was odd. Tesla's stock jumped 5% after posting an 8-second video. This is a reasonable market. It could be a teaser video, and it sparked speculation about maybe a roadster or a mass market model. Musk teased the next generation roadster concept back at an event in 2017. The video just ends with the numbers 10-7 indicating today's date.
Ooh.
So
Yeah, I think he got me for $100 on this thing too back then too.
on the roadster, yeah.
Did you ever get your money back for that?
I don't know if you can. I think I
think
tried, and
it's-
then I just let it go, and then
Just too much work.
just too much work.
Yeah, how much have you made in Tesla stock though over the course of trading it? You got your money back.
$5.49 for Tesla stock, by the way, down around $4.
Down $4.
Well,
Could be drone. Could be a drone.
see what happens today. I don't know.
Chips.
We'll see.
Tesla Ivy rank at 32 is pretty good. It does have earnings coming October 22nd. Now, if you were going to announce this car, wouldn't you kind of wait for your earnings?
Maybe, but it's also a hard road for them because they don't have any of the EV subsidies left. So it'll just and that's for all companies
Yeah.
too. Speaking of which, Lucid sets a record as Gravity sales pick up. Lucid Motors said they delivered a record 4,078 vehicles in the third quarter, buoyed by a combination of more Gravity SUVs hitting the road and a rush of customers like Tesla taking advantage of the EV tax credit, which expired at the end of September. What's Lucid stock doing?
It's at 24, but it's had 14 different splits, so I have no idea what
the actual price is.
It split adjusted. It's trading at 12 cents.
It was like a 10-for-1 split.
Yeah.
So it's $2.
Gotta love that math, though.
40 cents
Yeah.
or so. Yeah, it's good
I'm
math.
mad at that
Get it.
math. That math is mathing. Hey, happy Prime Day to all who celebrate. But Amazon is making a shift that could finally give its stock a jolt. AWS is known for its strength in general purpose cloud offerings, but Microsoft has been more competitive with AI-specific cloud services. Now one analyst sees Amazon upping its game in the AI cloud.
Up in the cloud, you gotta love it.
But also today and tomorrow are Prime Days. Could be binary events if you want to do your holiday.
Not the Prime Days of yesteryear. It's been going sideways here around 220-ish. It's 221, up around 50 cents. Market's basically unchanged, slightly green here. That's Amazon.
Yeah.
This is important. If they do expand into AI cloud stuff, then that's good.
Amazon and Meta both had similar moves yesterday. They were down, pretty early, pretty significantly, bounced all the way back. They're kind of at the lows. Might be time.
It just
Might be time for a catch up.
Hey, brokerages are largely bullish on buy now, pay later lender Klarna.
How?
They began coverage on Monday. Girl, you got to ask them. Though some warn that Klarna's rising costs could put pressure on near-term profitability. Shares of the Swedish fintech are up 6.5%. Well, that was yesterday. But Klarna made their long-awaited U.S. public debut last month at $52 a share. So analysts are bullish.
Yeah, I mean, maybe I'm not talking about the stock. I just don't know how you can be bullish on that industry. I mean, I think it.
Well, people are stretched thinner than ever, and they're buying now and paying later and later.
Yeah, they need to finance the Chipotle burrito.
Yeah, right. Well,
Come on.
Look, I'm just.
You better be careful because you're the bills that you get from my little man.
Oh, we've had that talk.
They might be a little cheap. He might see, instead of this being $200 right now, it'll just be $25.
I totally guilted him yesterday.
It might be $25.
Totally guilted him. He even wrote his mom, said, I think that's going to make me cry. Because I said, you know what? It's not you. I think I'm failing you. I have to change. I think I'm failing you. And he's like, Dad, why are you doing this now? It was so good. I go, no, son, it has nothing to do with your feelings. It's me. I think I'm failing you now. Oh, there's nothing like guilt. Guilt is so good. It worked with you. It works with all of them. It's so good.
I'm not mad. I'm disappointed.
That's right.
Just give him that. You give him that one. It's like,
Yeah, cool. Generational trauma. Cool.
Yes.
Hey, can we talk about Klarna?
Klarna, $43 or so, maybe
Okay.
42 and change, maybe up small. I'm looking at the November options. They're about 20 cents wide. Not bad markets. It is a hard to borrow stock, so you'll have unusual pricing in the calls versus the puts. You won't get that put call parity that you're used to seeing. The borrow rate is quite small, less than 1%. So even though it is a hard to borrow stock, it's not like one of those stocks that's hard to borrow and the percentage rate is 50%, 100%.
Gotcha.
Basically nothing.
Okay. Good
Got
to
it.
know.
But in the money calls will get exercised a lot quicker than you.
Speaking of buying now and paying later, online spending is expected to jump 5.3% year over year to a total of $253.4 billion. But that growth would still mark a slowdown from the year ago holiday period when online sales surged 8.7%. Retail sales in the U.S. have chugged along, but concerns about higher prices from tariffs and dipping consumer confidence have complicated the outlook for the overall holiday shopping season. Do you anticipate you're going to spend more, less? About
Do you
the same?
shop more online now than you ever have before?
I do because it's a time issue.
Well, whatever it is, but I mean,
Yeah, because I shop online.
It's part of life. I mean, I don't think it's going away or changing. I think it's going to continue to grow. I mean, you go into some stores sometimes, they don't even have everything that's online.
Sure,
I mean,
yeah.
it's really, I don't know, it's crazy.
Yeah.
Yeah.
The stores have just become like marketing.
Yeah.
They're not really like real for shopping.
Sure.
It's all for, looks, and you go in there, they have like one size of one of the units.
Yes.
And you try it on, then they order them online and ship them to your house.
Yes.
And that's what
You're
it
mad
is.
they don't have your size, girl?
What are you saying?
I didn't say anything. I don't body shame. It is annoying because I'm short, like I'm petite, and they don't I was like, who is this tall?
Yeah.
Like, who are these
What size shoe do you wear?
giants? 7.5.
Well
Anyway.
played. I thought it was good. You got her off her
You
game.
hear that, guys? It's 7.5. How much you paying for that? $20 a month?
Mattel, MAT, is releasing an Alona Maher Barbie doll, but not all rugby fans are thrilled with the outcome. If you remember the dynamic personality, she's cool. Her Instagram is fun. She was on Dancing with the Stars. She's a 29-year-old rugby player. I think she has a podcast with her sisters. I love her. She's really funny. But people are mad because like she's a very like built, like muscular woman, and they're like, this Barbie is still kind of svelte. Barbie was like, look, we had to rebuild molds from scratch. And this is, and they were like, this is what you came up with? Like, it just doesn't represent just like how powerful she is, I think. But I think it is a nice homage to her, so.
Don't buy it, but Mattel, $18 just kind of going sideways after jumping up.
But OpenAI is partnering with OpenAI and Mattel. So.
Partnering with OpenAI and going in the cloud, then you're
Right, yeah.
We're early.
Yeah.
Get in.
Get in now.
Buy some pre-market.
Something like that. Starbucks is bringing back eggnog lattes and Red Cup Day for the 2025 holiday season. Nothing epitomizes Christmas like eggnog, peppermint, and gingerbread. Starting November 6th, Starbucks will be adding peppermint mocha, caramel brulee latte, iced sugar cookie, iced gingerbread chai, and then later in the season, the chestnut praline latte and the eggnog latte will return.
Starbucks.
Bring
A
back
lot
the
of
red
sugar.
cups. Yeah.
That is a lot of sugar.
Starbucks can't get out of its own way. Coffee prices are high for somebody who drinks a lot of coffee, and I want to thank those people who sent me or brought me coffee. And that was very, very cool of you. 82 and change. It looks like it's up 20 cents, but it is on the low end of its range. Ivy rank of 44 in Starbucks, and earnings coming October 29th.
Of those flavors, you guys, which one would you get? Are you like a peppermint mocha guy, caramel brulee, iced sugar cookie, gingerbread, eggnog?
Did you say like a
Caramel, if I had to pick one, but I'm not
Yeah.
picking any of them. I'm a flavorless coffee guy.
Yeah.
My dad's the same way.
Yeah.
Yeah, I like coffee. Tastes
Yeah.
like coffee.
Yeah.
Yeah.
I like beer to taste
So you
like
guys
beer.
are boring and you hate
Coffee
joy.
tastes like coffee.
You hate fun.
I mean, I'm surprised you want to drink one of these. This is like your entire day's worth of calories.
I don't.
Single
I'm a
12-ounce
protein.
serving.
I'm a protein shake and a
Yeah.
black coffee kind of girl. But some of the the healthy creamers have holiday flavors. Like I have a pumpkin spice almond creamer right now. That's
Okay.
pretty good. So
I'll do like a French vanilla every once in a while.
Oh,
That's as
ooh
far.
la la.
Vanilla.
So disappointed in you.
Yeah. I mean, that's as far as I go. I'm not going caramel, macchiato, mint, surprise.
Okay, fine. So
whatever
here's
the-
a story
Half
about
flat
mint.
white foam.
Yeah.
Story about mint.
Yeah.
You guys
Yeah.
want meat?
Black coffee.
You guys want meat? Yeah.
Ice.
Yeah. Arby's is selling steak nuggets. Yes,
Oh,
this
yeah.
is real.
Sold.
First of its kind steak nuggets. A premium protein
Top round,
option.
not steak.
And a whole new way to nugget. No knife, no fork. Tender, savory steak. Juicy, hand cut, full of testosterone. Yeah. Steak
I like
nuggets.
it.
I like it if it looked like that, but I doubt it's going to look like that. I would love to see what this looks like in real life. I really would.
To
Yeah,
be determined, they will come
it's
in
gotta be so
5 or
dry.
9 count, served with a hickory barbecue sauce.
I like the angle. The angle is going after
Yeah,
like the
nationwide started yesterday.
healthier
Yeah,
side of things.
yeah.
Yeah, it's
I'll
owns
do
Arby's?
the, I'll
What
do
is
the
Arby's?
Chick-fil-A grilled chicken nuggets. They're not the best.
Chick-fil-A?
Yeah, Chick-fil-A
Yeah.
has grilled chicken nuggets.
Yeah.
which is like a healthy protein. The macros are good.
Yeah.
They taste
know,
okay.
yeah.
They're not the best. But,
yeah.
But steak nuggets.
Looks
Arby's.
good.
When's the last time you had Arby's? We have the meats.
I don't.
I don't know. We have one not too far from me in the suburbs, but it's been.
I like their curly fries, but I haven't had
Curly
Arby's.
fries are good.
Haven't had Arby's.
We don't have a
10
lot of them
years.
downtown. I remember there was one in the Metro station
Ooh.
that I don't think is still there because they redid the whole inside.
Oh.
But I mean, how can you go to Arby's when there's like a McDonald's or Chick-fil-A next
Sure.
door? Like, I don't know if I'm choosing Arby's over those other.
Well, can't wait to see all the girls in the cars eat these and review them.
They're gonna be. It's got to be dry. I mean, can you imagine it's like sitting out under a warmer? Like they just have them like. It's good.
not gonna work.
Well, we will see.
Yeah.
I don't know what's happening. This is Bunker's story. Nearly 1,000 climbers were trapped on Mount Everest by a blizzard. Several hundred are safely down, but the majority are still stuck up there. rescuers estimate there's probably over 600 people stuck at various levels on Mount Everest. 350 people were able to make their way safely down the mountain. That is a bonkers story. I'm kind of obsessed with Mount Everest. I like to watch the documentaries and like reality series, like people climbing Mount Everest. Into Thin Air by John Krakauer.
That was a good one.
It's a great book. But wow, I hope everyone will be okay. There's so many dead bodies on Everest.
When we were in Mexico playing golf, there were some mountains we had to climb, which was really not really that much of a mountain.
With your Mexican billionaire?
We walked the course until we got to the mountain, then we rode.
Yes.
So I'm not doing anything here with Mount Everest.
But now it's become like a thing. Like you need like $200,000 to climb Everest. Like it's.
And 600 people have $200,000 to climb Mount Everest.
Yeah, like $100,000. Like it's you.
$100,000, whatever.
It's a lot. It's a big business now. Yeah. This is crazy. LeBron James is teasing his second decision is coming today. I don't know what is going on with this day. You got Tesla stuff coming. It's Amazon Prime Day and some vague LeBron decision. Remember the massive decision back in 2010? Well, people say this probably just a stunt for like an ad. They don't know. Do you think LeBron retires? I'm just saying he's promoting something today. That's all I have.
All LeBron ever does is
ESPN owned by Disney. So you can look up Disney.
Sure, we can look at Disney. If
I have not traded Disney.
Ivy rank of 21.
112. I feel like it's been sitting there for forever.
Yeah, 112. A lower end of its range, if you're looking for something that hasn't rallied, I don't know if Disney would be the place to go. But Ivy rank at 21, earnings November 13th. Markets in November are good, 4, 5, 6 cents wide.
Is LeBron the GOAT?
No way.
No.
I'm just asking.
Not as a Chicago.
I'm just asking.
Yeah.
I like to just set off the chat.
I think Scottie Pippen did a great video dissing LeBron. He talked about how, he didn't stay and fight it out and build a team. He went to another city.
Oh, he kept shopping for a ring.
Yeah, finding.
I'm also shopping for a ring.
LeBron, Scottie did a great job of roasting him.
You put him on blast.
Yeah, you can Google search. It's great.
Finally today for my viral video of the day, no Taylor Swift at all. Here's a dude video for you. Pretty good slow-mo. This is pretty funny. Poor Craig.
See here.
Don't sweat today.
Oh, the guy's gonna fall on his knees.
Oh, yeah.
That is not natural movement.
That's ACL. That is ACL, MCL, meniscus.
Don't sweat today.
At least he fell in the water. I thought he was gonna fall on the.
He's lucky he didn't hit the wood on the way in. I think.
I know. Craig. Craig's on the DL. Yeah.
I like the guy climbing up the stairs, giving you like the. Yeah, that's my friend. He's not that good. Well, you're real good, Vanetta. So we're gonna take a quick 90-second break and come back. We got more Tasty Live after this. We've got confirm and send.
Yes.
We're back in 90 seconds. Tasty Live. Viewer emails.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We are back, son. You know what that means. Time for a little bit more Tasty Live. That's right, with confirm and send. But before we do, let's take a quick look at the market. Even the S&P's up 5 handles. Last night we had about a $20 move from high to low, down to 67.74, up to 67.94 and change. And we are sitting right there, just a skosh off of that. Even the S&P's expected move for today, $15.50. I quote that because yesterday it was around 17 and change. Today it's around 15 and change, so even lower than yesterday. NASDAQ up 42, Russell up 3, Dow up 25. Small move to the upside on everything. NASDAQ, your strongest of the group, cancel, crash. Volatility down 2 cents. Bonds completely unchanged at 116.08. IV rank of 8 in there. Maybe if bonds go a little bit lower here under 16, maybe we scoopy. They traded down to 16.01. Bitcoin up $320 on the cash. On the futures, down $400 to 125.8 and change. Ethereum down small, $9 to 47.55. Oil, after catching a little bit of a rally the last 2 days, taking a breather here at 61 and change. IV rank of 26. Volatility been holding steady, maybe a little bit higher. Gold up $20, just under 4,000.
It did get 4,000.
It did, yeah, overnight. Yeah, got to just over 4,000, and then hit all those stop orders and got to 10 cents. 4,
the invisible hand.
4,010 cents. That is correct. A couple of movers in the market. App Lovin' was one of them yesterday. It's one of them today. You can see the big red bar lower yesterday. After trading all the way down to 545. It looks like it's going to be about 612 this morning. I'll let you get to confirm and send, and then we can do an option jive and get to the market's opening, which we've all waiting for.
Awesome. Let's do it.
Confirm and send Tuesday.
Taco Tuesday, National Taco Tuesday, I guess. Even though we get
I'm going to have to put my foot down on Taco Tuesday and just end it here, I think.
I would support that.
Would you?
Yeah.
Okay, all right.
I'm waiting to bring back like Indian food.
I don't think I have. Yeah.
I'd like to bring back Nonsense or...
it's a restaurant that we...
Yeah, what was the other one? John, what was the good one with the tandoori chicken?
Yeah.
I want to say India House, but anyway.
Confirm and send.
Confirm and send.
Tuesday, October 7th. First question, please. I sold an SPX $10 wide at the money, iron fly at the opening. Okay. But instead of doing 0 day, I somehow sold the one expiring October 16th. Options monthly expiration. How would you approach this out trade, the self-inflicted out trade? What would you do here?
I mean, the good thing is that you probably have very little risk on this trade because it probably traded at, on a $10 wide, it probably trades at $9.25.
Yeah, which is like 9 cents in SPY, which was $1.
In risk, in terms of risk. Yeah, your credit is probably 90%-ish of the width of the spread. So the spread's not going to move. I mean, typically and in general, if you make a fat finger mistake, I find it easiest to just eat the penny or 2 pennies or nickel or whatever it costs
or dime in this case, whatever it may cost you, sure.
And just go to the trade that you want to have on. Like, I think people get caught up with, it's
now I got to make money here.
Yeah, now I got to keep this and do something with this trade. It's not personal. I mean, it happens all the time. I do it. I did it yesterday in HIMS.
Yeah.
I mean, it just happens. And then I think you just close the trade and move on and start fresh with whatever you're trading.
The good thing about this out trade is it's going to be a small fee or profit one way or the other.
Yeah.
Expected move of $100 in October makes this very tight $10 wide butterfly, basically zero delta, and volatility is the only thing. And it's not going to move that much no matter what volatility does. So for me, like you, and most out trades, especially the ones I make with myself, it's best to get out of it and move on. That's what I do too. Try to put on what I wanted to have on. It's so hard to root for something that you don't want to happen. Next question, please.
With volatility this low, do you intend to have more or less earnings trades in this upcoming season?
This should have been a good question for you. I know you like to trade earnings. I'm not really an earnings trader unless I'm going to do it kind of directional in most cases. So for me, I don't think I will be trading more earnings trades, but I think we'll trade more earnings trades on this show. So kind of a not a great answer from me, but I'll let you decide what you want to do.
I mean, I do like trading some earnings. I'm not as gung-ho about earnings just because it's instant pain or instant gain. And a lot of it is tail risk. And over my career, it's been mostly 50-50. Mm-hmm. I would not say that I feel that I have juice to squeeze on earnings.
Yeah.
They're just kind of there for engagement trades, for, high upside stuff if I'm doing diagonal spreads or something like that. I like to put them on, but I don't think I don't change now that we have volatility lower. I'm not changing my normal routine of trading for earnings season. I'm not intending to do more earnings trades now with volatility lower. I don't think anything really changes here.
I would agree with you. Yep.
Next question, please.
How are market VIX and option-specific volatility related? The VIX is low nowadays. Does that mean when the VIX goes up, say to 30, that option-specific volatility of options that already have a high IVR, Oracle, MP materials, will go up even higher?
So they're asking if market vol, if VIX goes up, does that necessarily mean that individual equities, especially some of these higher IV underlyings like the Oracles and MP materials is one of the Trump basket stocks.
Yep.
Does that affect volatility in individual equities?
Your answer?
I would say not directly. I mean, there's a correlation there. If market volatility goes up, you're likely seeing individual equity volatility go up as well. I mean, across the board as a basket. One-off stocks, this stock versus that stock, might not see the same level of change in volatility, or they might not even go in the same direction. Some stocks might see lower volatility, some might see significantly higher volatility. So it's hard to make a general statement on that. I would say if you told me that the VIX is up to 30, you're probably seeing volatility expand across the board in 90% of the stocks that you look at. There might be some of them that don't see much change, but for the most part, that sort of move in volatility is going to affect the whole market. 18 to 18, I don't think that really tells you that volatility in Oracle is going up.
That is the answer. I mean, VIX options are derived from the SPX options, so it is the market, but it's not each individual stock. So the answer there is it's random, as you pointed out. It could, if I was a betting man, and volatility, like you said, was going higher into Thursday, I would say it'd be higher in these stocks too, but it would be a pure guess, just playing the pot odds, that it would go higher. Next question, please.
So I was watching your updated look at days till expiration option management, this one that we did in the middle of last week, where you reiterated the strategy of entering iron condors around 45 days and then closing them out or managing them around the 21-day mark. But since this is a theta play, doesn't the theta curve really only accelerate when you get closer to expiration, like in the last week or so? Is that when most money can be made, or does the increase in gamma risk closer to expiration outweigh any advantage in theta? Any other reasons to get out early?
Yeah, the second half of your question here is the reason why we look to manage at 21 days and get out of that trade. But you are correct. I mean, obviously, well, not obviously, as you get closer to expiration, all options have to go to parity, and that's what theta is. You sold volatility. You're waiting for expiration to happen, and that's when it's going to contract the fastest. Now, there is an optimal, which we think is 21 days, around 21 days, when the risk versus the reward outweighs itself. And if there's too much risk for the reward, we feel that's probably time for you to, move on and find something else to do that gives you a little bit more time to be right. You want to take more risk and stay in that trade? By all means, I wish you the best of luck, and the probabilities will work out to be what they are.
Yeah.
But be careful. Sometimes these moves can be quite vicious.
It's also not one-to-one. Like the theta number goes up. Mm-hmm. Not necessarily the actual value that you can capture from that trade. And the example you could use, and it's why we manage, is if you sell something for $3, let's say it's a $10 white iron condor, you sell it for $3 and it's now marked at $1 with 1 day to go till expiration. There's more theta with that $1 trade, but you can only make $1 more. Like you'll make more on the 2 or 3 weeks of decay from 45 days versus the 2 or 3 weeks of decay going into expiration, and you don't have the same amount of that gamma risk that you mentioned here. So it's not like the theta number, the focus on theta, I think is a little bit misguided. We understand that we are on the positive side of theta decay, but focusing and hyper focusing on this number it's not the right way. Like if you wanted a really high theta number, sell 0-day SPX put spreads or call spreads.
Sure.
Your theta number will explode. I mean, because it's going to zero at the end of the day. But that doesn't.
Yes.
But there's a lot of risk to that because you have a lot of gamma risk. So there's always a risk reward, and there's a reason why we kind of focus on that 45-day mark. Next question, please.
Next question. When you have a threatened strike and you want to roll, do you roll the unthreatened side closer to the current stock price and maintain the same expiration, as I believe what they mean, or roll closer to the price of the stock and out to a longer expiration date?
So
how do you roll, son? I guess is what they're asking.
If I'm staying in, like if we're in that, 20 to 30 day range, I'm probably rolling the untested side. If we're getting closer to expiration, I'm rolling out and adjusting the delta a little bit. I think, the more aggressive adjustment is to stay in the same expiration and roll up the untested side. Being a little bit more conservative would be rolling out and adjusting the strike. So it depends on, like, if I'm trying to get out of the trade, I'm going to roll up the untested side and hope to be wrong on that adjustment and take that.
Because you're reducing delta by 50%.
Yes. If volatility's higher, I want to stay in the trade, I roll it out further out in time and I adjust the strike.
Let's be a little bit clear here, because you start off with the threatened strike. So, I'm not waiting. If I sell out of the money options, 15, 20, 30 delta options, that's usually my area. And I'm doing this basically for delta neutrality. I want the stock to stay inside the expected move and not move that much on a daily basis. And it moves quickly to one side or the other. I'm going to roll that untested side long before it becomes threatened. I have a little thing that I like to do around 15 to 20-ish deltas where I'll move the untested side in the direction that the stock is going in. So if it's going lower, I move the calls down. If it's going higher, I move the puts up. I reduce that delta to get to 5 to 10 deltas. So I reduced it by 50%. And like Nick just said, I actually want it to go in the direction of my adjustment because that's the delta direction I still have left on the trade. Yeah. That's what I'm looking to do.
You want to be wrong on it.
You want to be wrong on it. And I usually do that before the 21-day time frame, and then I'm looking to go to the back month from there. That's how I do it. Next question, please.
So I've been experimenting with putting on a calendar trade just before the close with the short leg expiring the next day. So we're talking really short-term calendar spreads here. Bought the long expiring 1 week later. I would love your thoughts and also whether they should be calls or puts. I noticed the puts are much less expensive. Basically trying to get a cheap way to leg into like a long option.
Yeah, I get it. Calls or puts on the same strike makes no difference. So use whatever one that you want. It's probably less cumbersome to use the put side because you won't have to worry about any dividend risk or early exercise if you're using the puts. That's the one thing I will put in there for you. Again, on the same strikes.
I assume this is SPX too. This is XSP or SPX or something like that. Okay. Just if they're if you use, then you have no then you have no dividend risk. I mean, I don't know. It doesn't say it here, but I get it. I mean, what do I think of the strategy? I mean, I like it. It's going to be slow moving. It's hard to pin a strike, and the lower the volatility like we have now, the more expensive these are going to be. Because think about it. If the market is saying that there's a wide range that we can expire in today, all of these strikes are going to trade relatively cheaper versus themselves because it's such a wide range. You know, pick a number in between here. The expected move is tight. And it says pick a number in between here. These are all going to trade expensive because these outside ones have no play in them. So I think the other thing that you have to keep in mind here is that because I'm assuming this is an XSP or SPX, something where you can do this, with daily options. With the cash settlement, that move is realized, right? So if you do a calendar spread, and let's say you do it at $3 or $2 debit, whatever the debit is, it doesn't even matter. And you do it on the put side and the market goes down and that put expires in the money. That is realized value. If the market is up the next day, you're not losing the $2 debit that you started with. You're losing the $2 debit plus whatever was settled the day before. So these trades, although you put them on and you might look at it and say, oh, well, I'm only paying a $2 debit. It has $2 of risk. That risk is realized on the close the day of that short option. And so if you're $10 in the money, you're $1,200 in risk on that trade, because if that long option now expires out of the money, you lose the $10 it realized in cash value plus the $2 debit you started with. So these, that's why calendar spreads are there's a variable there. And that's why, like, when you look at like a risk profile of calendar spreads, they don't, that is part of the variable. Is that, and especially with SPX, those things expire and it's cash. And it's done, it's realized. So you got to keep that in mind.
It's a tough game to play. I would almost rather you look to do some sort of directional vertical spread one way or the other. I think this is especially in this low implied volatility where they're going to trade so expensive, tough way to make a living. Anyway, even the S&P's up 13. That's a new high.
6,800. Woo! Gold 4,000. Woo!
6,802.
Buy them all. Buy it all.
NASDAQ 26,000 because we're already 25,200. So we have to wait to the next
soon.
I'm just kidding.
Sure.
Russell at 2,508. That's up 7. And the Dow at 4750, up 92. Bitcoin under 126 and volatility down 5 cents. We're going to take a quick 90-second break and come back. We've got an option jive for you immediately following these messages.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000% and I made a bunch of money and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win and it was mostly failures thereafter that. And I thought I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive. It is an option jive, son, with the mini S&Ps up 1150. What you got for me today? The Zen of Zero.
The Zen of Zero, yes. 3 ways to get neutral. What do you think?
It could be a movie title.
It's a good one.
The Zen of Zero.
Yeah. Zorro. Zen of Zorro.
Zen of Zorro.
That would work.
Zen of Nut.
What do you think the 3 ways are?
3 ways to get neutral. Option strategies, I'm assuming, obviously.
Yeah.
Strangle, Iron Condor, neutral for the last one. Maybe like a
do iron flies, calendar spreads, butterflies. Depends where you put the.
Sure.
I mean, that's ultimately.
Yep. You can be neutral on a calendar spread. You can be bullish on a. I guess you could be a little bullish on a calendar spread if you went further out of the money. Sell a option that has really no delta to it in the front month, has more delta in the back month because time has value.
Mm-hmm.
It would be more delta. Yeah, those are the 3. That's it.
Well, let's see what the team put together for us. Cooked up, as the kids would say. See what they're cooking up. So one of the benefits of options trading is the ability to be directionally neutral on trades. However, directionally neutral can be defined in several ways. What's the difference between each definition of neutral and when should each be used? And we'll look at some examples here. But first, I would ask you, because we get this question all the time, how do I stay zero delta? Have you ever been zero delta?
No, you can't. I mean, you can't. I mean, you could be within a delta, 1 delta on a position that you put on there, but it quickly changes as the stock moves. I mean, markets are dynamic. So best laid plans of mice and men, when you start out to have a delta, it can quickly change in the opposite direction that you want it to. And it mostly does for me. I mean, most of the delta neutral strategies I put on move in a direction I don't want them to move because I didn't want them to move at all.
Of course, but that's markets move. And so you want to get short delta into higher moves. You want to get long delta into lower moves.
That's right.
In the market or your positions as a whole. So I know we focus on delta neutral, but you've got to have some sort of delta number that fits your risk tolerance, right? So like you might want to lean short here and I might want to be delta long.
That's what makes a market.
And that's what makes a market. And the number is not going to be the same. Like your delta.
One investor's floor is another investor's ceiling.
Yes, there's no perfect number. And so you have to kind of build that number for yourself. But understand that if you're trading on both sides of the market, your delta is going to move, and you're going to get short delta into moves higher, long delta into moves lower.
Correct.
Next slide here. So delta neutral strangles have put and call deltas that are equally far from at the money. So we're talking about looking at a delta neutral position from the deltas specifically on both sides of the market. Delta is a theoretical change in the options price given a $1 move in the underlying. So for contracts with deltas between approximately 10 and 30 delta can be used as a proxy for the probability that that contract will expire in the money. So if you're selling a 30 delta option, it's got a 30% probability currently of expiring in the money at expiration. That will change. This strategy gives a trade where there is an equal probability of the underlying reaching either strike based on the option pricing model. So when you're looking at equidistance versus delta neutral, those are going to be different strikes, and it's based on skew. It's going to be influenced by the upside or downside skew in the market for that specific underlying. Delta neutral going to the delta.
A quick little slide here, and you're just going over the wording here, and that second bullet point there, as being a proxy for the probability the contract will expire in the money. I don't think we thought about it that way, or I didn't think about it that way for almost 30 some odd years. I just thought about it as delta as shares of the stock. Didn't think about it as a probability of it expiring in the money, which is kind of weird if you think about it for somebody who is making markets. And I don't know if the whole gamut of traders thought about it like that, but that really is a key point. So good job on them for reiterating that.
So the next one that we talk about is equidistance. So this is the next slide. We're talking price neutral. I'm ahead of myself. So price neutral strangles consists of put and calls that are approximately the same price. This strategy gives a trade where there's an equal expectation of tail risk to the upside and the downside in that underlying in the short term. It's important to understand that this does not necessarily mean that you are delta neutral. So when you look at option prices, you're going to be the value of each of those is obviously the same, but the delta is not necessarily equal, and that's because not every underlying is going to be, and this across the board with all markets really, is that it's not normally distributed. Like $10 out of the money is not this on the call side is not always going to be the same amount of value and risk to $10 out of the money on the put side.
No, that's exactly true. But again, this price neutrality right in the beginning there is such a powerful, just a statement. If you're looking at option pricing, doesn't matter what the stock is, A, B, C, D, it doesn't matter what it is, and you see the call and the put at approximately the same price, one's 570, another one's 590, that's the at the money strike. Yeah. In just about every case, except stocks that have a big dividend that day or something like that. So if somebody says to me, a stock is trading at 100 and the call is trading at $5 and the put is trading at $2, I say they don't know, or something is different underneath here. So when you look at VIX options, VIX, and you go to each month and you see the VIX trading at X up on top, $15, $16, whatever it is, and you see the 16 call and the 16 put not trading at the same price, that month's VIX is not trading at $16. You should do a little bit of research in it. Yeah. And that's why that's so powerful, even though it's just a simple little statement on a silly little option jive that we talk about easy stuff.
For sure. And that it goes to a question that I got yesterday on leap options. Because you'll see on further out options, your at the money strike, which is at the money to the stock price right now, might be a 55 or 57 delta. Like that is pricing in, the cost to carry, there's dividends, those are all values that are baked into that option. And that's why to your point on the VIX options, it's theoretically, the stock is trading at 100, but if the 50 delta option is 110, it's trading at 110 that in the future, so to speak. I mean, it's not there now, but in the future, that's where it's trading at. So yes.
And you can take advantage of that synthetically on your directional opinion, or it can cost you because of your directional opinion.
Yeah. Well, you can trade. Yeah.
You can trade it. All I'm saying. I mean, you look at an advantage, you look at a disadvantage. Depends on what your
assumption is.
That is right.
Exactly.
That's right.
Yep. All right, so the next neutral that we're going to talk about here is equal distance. So strangles have put and call strikes that are equal dollar amounts from the current price of the underlying. So when we talk about equidistant, it's $10 out of the money on either side. Again, this strategy gives us a trade based on the assumption that there is a 50-50 chance of an up or down day in the underlying, and the magnitude of those moves will be approximately the same. So this is assuming a normal distribution. Those deltas and those values of the options can and likely will be different. They're not going, $10 out of the money is not going to be the same delta. It's not going to be the same value of that option.
Correct. Good job.
Next slide here. So when you have when you are delta neutral, your goal is to remain net neutral by having multiple positions that limit directional risk, as the markets are random and unpredictable day to day. So some of the ways that you benefit from being delta neutral is systemic management strategies. So you can get, you can reduce delta in both directions. Takes out the stress of trying to choose the right direction. You're focusing on that time decay. You're focusing on that implied volatility change. And non-correlation and true diversification are easier to set up. We talk about like everything kind of moves in one direction when volatility is high, especially into downside moves. Being neutral allows you to get neutral across positions. You might be short some, long some, neutral some positions. It allows you to get long delta into down moves, short delta into up moves without having to do it yourself.
That's right.
Do it dynamically.
Next slide, please.
Yes. So to create a delta neutral portfolio, you can also mix in bullish, bearish, and neutral positions. This is what we just mentioned, using a beta weighted delta to compare the positions. To gauge the neutrality of the portfolio, look at your beta weighted delta. That is automatically calculated on the tastytrade platform. The below strategies are the most common ones we trade. And so, this is why we talk about diversification, not only in underlying, but in strategy. So, by being just long delta, short put spreads and neutral delta with strangles and adding in short calls.
And adding in futures pairs trades and adding in
currencies and cryptocurrencies. Yeah,
sure,
all those things can combine to give you that neutrality. You don't have to be net neutral and zero delta on every single position.
Right.
It's the whole portfolio together that you're looking at.
This is exactly what we did in LA and do it at the live shows with Tom and I. This option jive is exactly what we do in real time with with $100,000 in buying power. This is exactly what we do.
Next slide, please. So while delta neutral strategies start with no immediate directional exposure, it will become directional if the stock or the market as a whole approaches one side of the trade. This is when rolling comes into play. So, you start as neutral delta and you get short into up moves and you get long into down moves. This is, buying low and selling high dynamically. You're doing it into the future with your positions right now. That's what being neutral now is.
Yep. Good job.
Next slide, please. Gonna breeze through these. So a common question we get is what it means by managing a trade. One way we manage a trade is to roll it. So rolling is just a fancy term that means simultaneously closing out of our existing position and opening a new one. We can change the strikes, duration, or both. This is, again, based on your own directional assumptions. Maybe you take into account volatility, time, rolling out in time versus staying in the expiration. Those are some of the confirm and send questions we got. At tastylive, we look at rolling as a defensive tactic and roll for duration to keep the dream alive and to adjust our deltas. We will roll if our assumption is still the same. That's another important aspect of a position. If you no longer want that delta exposure, you can adjust it or close that position.
In the blink of an eye.
In the blink of an eye. And it's penny-wide markets, so in most things that we trade. So, there's very little slippage in terms of you changing your position.
So get it done. There's no excuse.
Yes. Next slide here. So the new delta, or the directional exposure of a delta neutral trade, is the opposite of the stock's movement. So you're getting short delta into increases in the stock. and you're getting long delta into decreases in the stock. So you're
sounds counterintuitive when you think about it, right? Like I'm getting longer as it goes down, I'm getting shorter as it goes up.
Well, I guess from a P&L, you would expect to be losing money into those moves, which is happening. But intuitively, that's what you want. You want to buy low and sell high. I mean, this is what your portfolio is doing for you dynamically.
Correct. And a little bit of a contrarian role.
Yes, it's contrarian into the moves in each underlying and the portfolio as a whole. So a couple takeaways here. Neutral strategies have various definitions based on the different option variables. So we're talking about delta, price, and distance, and combining them provides the best portfolio diversification. And this doesn't have to be each position being neutral. It could be, a basket of positions being net neutral to some range of delta.
Mm-hmm.
Mixing bullish, bearish, neutral strategies can keep your overall portfolio neutral while balancing your risks and returns. Delta neutral positions can profit from time decay or volatility drops, but may become directional if the stock trends in one direction or the other, requiring adjustments and rolling. It's just kind of what we do every single day.
Really great piece for an option jive to start off the day. A lot of little nuggets in there. I think everybody should go over that one more time and read it themselves so it sinks in. Even the S&P's up 9, NASDAQ up 52, Russell up 6, everything kind of holding steady after making new highs for the day on even the S&Ps, new highs for gold also, which gold is hanging out at 4,006. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell next. Back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Watch me go, 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 go. Watch me
Nicky, we are back, son, and you know what that means. The opening bell is imminent. Even the S&P is holding steady up 8.5. They were basically unchanged, up small. When I woke up this morning, they had a tight range of around 20 handles. They've expanded that range to almost 30 handles, up $8 and change. NASDAQ up 53. Russell up 4 and change, and the Dow up 65. Volatility, which has been holding tight, going sideways at the low end of its range right now, 1755, but a really tight 50 cents range here over the last 6 or 7 days. Bonds catching a bid after going down to 1601. They rallied there to 116.15, up 7 ticks. Kind of missed that. Notes are up 2.5 ticks. Bitcoin hanging out just under 126,000. Traded over 126,000 last night. 125.7 on the futures. I'm just rounding up. Ethereum up 27. Also, Ethereum higher. Bitcoin a little bit lower. You can see Ethereum here over the last 7-8 days here, catching a bid every day. Oil back down 40 cents to 61.28. Ivy rank at 26, holding steady. Also, gold is the big news. Gold just continues. It's parabolic. It's a hockey stick, up 28 to 4,004. Silver taking a small breather. It too has been on a hockey stick, move to the upside. Down 23 or so. Looking at corn, wheat, and soybeans, they're really a non-event, but some of the currencies are not a non-event. Yen off of its lows, but still down 225 ticks. It's a third of a percentage point after getting annihilated the last 48 hours. /6E, the euro also going lower, very low end of its most recent range, a range that it's been in since, August, July. Looking at $DXY, because I know you like to look at that.
There you go.
Trading close at 98.5. You can see there at the higher end of its range. That's the dollar index against a basket of currency. So the dollar catching a little bit of bid. I know people worried about the dollar going significantly lower. It's catching a small little bid here, about as high as it's been since the end of July on the index itself, not just the dollar, but the index itself. So I have right now. What are you thinking here, son? You got about a minute and a half before the market opens.
They kept vol bid all day yesterday, and then
They've kept vol bid for a few days.
For a few days, for like a week now. But into the close yesterday, the vol moved like 25-ish cents. Felt like that was like finally like a little bit of a vol crush. They're now bidding it up again. We're basically unchanged on vol right now.
Look at the daily vol at /VX, right? Not
we've hit all the round numbers, as you mentioned, 6,800, 4,000, 25, 47, 2,500 on Russell. Like we've done our
work.
We've hit them all. We've hit all the stops have been taken, all that good stuff. So maybe we get some movement today. Who knows?
Maybe we'll get some movement today. Haven't had much of it, right? I mean, yesterday it looked like we were going to get a little bit of movement, then we quickly caught a bid and stayed bid for most of the day. The bonds got a little bit weak yesterday. They caught a bid. Same thing happening so far today. Let's take a look at AppLovin when we go here about 30 seconds before the market opens. Looks like AppLovin back under 600 at 594, 595. I'd imagine that's going to be a little bit weaker today. I don't know. We'll see how it goes there. You may have to wait a couple of days before doing
I know some of the market-related reporting is not going through today, but I think we do have some Fed speak.
Because of the closing of the government, right? It doesn't matter to the market. Doesn't seem like it these days. But yes. You're going to be newsless. There's your opening bell, my son. Even the S&P is hanging, every time I quote them, up around 9-ish. That's where they are right now. Let's take a look at what's moving this market on the downside. Looks like Tesla down around $7 and change. Google down around 2-ish and change. MSTR down 2 in change. Microsoft basically unchanged, 60 cents. Amazon down small. Muted moves across the board here, except for Tesla. On the upside, you got Netflix. Netflix up almost $20. That's a big movement.
It's been a dog, though. Netflix has been a dog. I mean,
Netflix has been a dog, and it's a hard stock to trade. Markets aren't great in there.
Yeah, I have a put spread in there, but that is, the Netflix, Amazon, Meta, those are the three that I've been kind of keying on as easier to get long compared to an Apple or an Nvidia or a Microsoft, where they're basically at highs. Like these three have kind of not participated. Tesla kind of caught up within a month or so. I mean, these are the three that I've been looking at. Like at least they're not I'm not getting long at highs in these, and they have just been dogs.
They really have been. You said it correctly. There's no other way to put it. They've been dogs relative. PayPal up 2 and change. Reddit $205. That's a stock that was on everybody's radar. Got up to 280 and change. IV rank of 56 in Reddit. Up around $2. Might be something to look at for today. It does have earnings November 4th. November 21st options are still relatively wide. It's hard to get fills around mid-price in Reddit. That would be the only caveat I would say. Probably a defined risk trade if you're doing anything at Reddit. IV rank of 56 though, pretty good and growing. So maybe a wide iron condor or something like that. You could take a look to do. What do you see across the board here so far? Even the S&P's up 10.
I mean, it seems pretty mixed.
It does,
across the board. Like this seems like kind of a choppy. It's not like there's a distinct trend in the positions that I have. Like I have some currencies. Oil's down. Obviously, gold up. Then I look at some of my positions. You got like AMD up 6%. That strangle that I sold yesterday on the close has only moved 40 cents. I mean, it tells you just how high volatility is and remains in that.
And it's expanding too. IV rank of 60 has actually gone higher here today. So yeah, you didn't get the move you wanted, and you got volatility expanding. What you're trying to put out there, losing trade, but small in comparison. A roll up of the puts, if you had to or wanted to, would probably mitigate any delta risk that you put on by this $13 move in AMD.
Yeah, some of the big name stocks like Amazon basically unchanged. Microsoft is down $2, but it had a $10, $11 move yesterday. Yesterday. And then you talked about Netflix, nice little bounce there. That's kind of helping me. Meta basically unchanged. I mean, it's down $1 here. Some of the high flying stocks, your INQ is up 40, 50 cents. My Bloom Energy, that's just taking me out to the woodshed, that's up another $1 today. You got
wait a minute, Bloom Energy was doing good for you. Talking about BE?
Yeah. No, it's back up. I mean, it moves,
right.
it moves
rank of
$8 a day in both directions. But the puts do not move. You roll up those puts, and you do not. The stock's up $7. Those puts move 20 cents. It's wild.
Yeah, well, you're looking at that right here. When you watch them trade, they give you a change. Not a lot trading in BE right now. Markets are kind of wide for a $90 stock, but as you pointed out, 120% implied volatility, 107 IV rank. By the way, 0-day traders, even the S&Ps expect to move $17, actually expanding a little bit here.
Do we do one today?
We can. I think you can wait about another 10 or 15 minutes just to see where the market kind of settles in here a little bit before you do that.
I mean, you got 6,800. We're gonna chop here all day today.
You're probably right. We're at 6,800 right now. 6,800.
Beautiful, big, beautiful round number. We get the 6,800 hats out. The 7,000 hats on the way. They're getting ordered from Temu. We're going to have them for the whole office.
From Temu?
Yeah, from Temu. Yeah.
It's a good one.
I mean,
that's a good one. Yeah, I haven't heard any dings out of you yet today, so maybe we'll.
You want to do something in the bonds? I mean, we
bonds, I wanted to kind of buy them and kind of missed them. I kind of, took a little bit of a too conservative move there when they were trading around 03, 04. But maybe they would go under 116 or start flirting with that 116, 16. With an IV rank of 6, you can't even sell premium in there, so you can't even do both sides. So I think you'll wait a little bit in bonds. It's okay to watch for a moment or two. Yeah. Just watch. It'd be all right.
Oh.
SPY up $1.16, small move there. Gold up 21, now back under 4,000. Gold volatility quite high at IV rank of 39. Man,
let's do our. Train. We're gonna do something SPX.
Okay.
What do you want to do? Like a 20 delta? $10
20
wide.
delta on each side, you're saying?
Yeah, so we'll do like the 67.30, 67.20.
67.30, 67.20.
67.70. 67.80.
70.80. Sure.
Yeah, 290.
Sure. It's a relatively cheapy one. Sure.
Let's see if I'll put this in a nickel above and see if we get filled there. Market's rallying a little bit.
280 is the mid price. Doesn't look like it's moved off of that much. Even the S&P's up 12. You'll probably have to move it a nickel to get filled.
I got it at 280. We should be getting filled here. There we go.
There you go.
280. All right, so we're in on that. What do you want to do, like management wise? 90 cents.
I think 90 cents would be a home run on a small little one like that early in the morning.
80. I mean, we've done the 10% is kind of on the lower end. If you're doing the iron fly, I think 10% makes sense. For this one, I think you got to be a little bit more, 50, 60, 70 cents.
Yes, in that range.
Something like that.
Yep.
All right. So we'll put, and we can put this in.
And it was completely delta neutral, maybe 3-4 short deltas on the overall trade.
How about we go 70 cents? We do 210.
Sounds good to me.
All right. I'm going to put that in. So maybe we'll randomly get that ding in the next
good
hour and a half or so before we get off the show. That would be fun to have.
Perfect. You're leaving me on Friday. You're going to Dallas, I believe. Is that correct?
We will be in Dallas.
You're taking the whole crew with you. Katie McGurk going with you?
Of course.
Awesome. Ryan too?
No Ryan.
Oh, thank God. Oh.
I mean, he's back. We should probably pull him back in.
We should pull him back in. Trading and portfolio management, October 12th, Dallas. You want to be there, go to tastylive.com/events. See everybody from Tasty Live out there. Come support them. That's how we know we're making headway, by you come out visiting us. It is free for you.
Yes.
As is everything here at Tasty Live. So please come out and visit us. You also got Dr. Jim, I think, on the road like the following week, right? He's got his option crash course live with Dr. Jim. The Magic Stick. Don't ask me why.
We're not going to go.
Don't judge.
The kids show.
October 19th. He does a late one. The doors open at 5 p.m. Show starts at 6. So meet Dr. Jim.
It's us too. Sunday.
So yeah, right.
And if you're in Dallas, we didn't plan for this, but thankfully the Cowboys game is during the morning session. So
you can go to the game and come to your show.
Yes, we've run into that issue a couple times. We had an infamous one in Atlanta for the Georgia Clemson game, which was last year, and they were both like the 1 and 3 seats.
Yeah.
And people were emailing me like, guys, I love you.
Come on, dude.
I love you, but you can't do this on game day. So.
And I don't blame them. They're right.
They're right.
To them at game day. You're right.
Yeah.
Even the S&P's up 12. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We've got another option jive for you. Back in 90 seconds, Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Beat the opening bell.
get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
It's options. Jive.
It is time for an option jive, my son. We are back. Even the S&P is holding steady, up 11, NASDAQ up 71, Russell up 3, and for those driving up 100 on the Dow. Volatility in by 5 cents. Bonds up 5 ticks. All quiet, right? Basically, for the first 12 minutes or so of the day, we haven't really moved too much one direction or another. Bitcoin maybe a little bit softer, down 1,200 on the futures to 125. But you know what? Well, that means nothing right now when you have an option jive. Go.
Yes, we're talking about FOMO. Do you have FOMO right now? Do you look at the market and just say, damn?
You know what? I don't think I have FOMO about too many things to be quite.
Not other things. We're talking markets.
Market? I think I have FOMO in the market every day of my life, no matter how much money I've made or lost every day trading. I always feel like I could have done something better or been more aggressive someplace else or been less aggressive. Yesterday, I got caught up in Bitcoin. Today, I'm paying a little bit of the price. I mean, I always have a little bit of FOMO. Like I could have done better. Could have done better.
Yeah. I don't think there's anything you can do to not have FOMO.
Not if you're watching it as attentively as I do.
When you're looking at it every day, you're like, shoot, how did I miss that? Like,
right. It's so obvious. And it's not obvious, right?
Yeah. But when you hit it, you're like, the other side of the coin is that it's never, the wins are never big enough. The losses are never small enough.
Yeah.
Like you always look at it and you're like, well, shoot, why didn't I do 10 of those?
Yep, 100%. You know what though? It's better to it's better to make mistakes than to kind of fake perfection. You know what I mean?
Sure.
Like you say, oh man, yeah, I had that, or I have this all the time, that kind of thing.
Yes.
It's better to make mistakes. I don't mean losing money. It just might mean not doing something when you see something that's a mistake. You know what I mean? Yeah. Or it could be too aggressive when you do something. Size gets too big, or chasing something. Those are just mistakes you make.
Yes.
Let's go with an option jive.
Yes. Stock rallies and FOMO. This comes from our very talented research intern, Thomas.
Beautiful.
Some of his content. So we'll go through this. Let's check it out, see what he's got for us. So many traders fall for FOMO, the fear of missing out. For those who are just learning HODL. Do you remember HODL?
HODL.
Do you remember what October is?
October.
There you go.
I'm learning, aren't I?
We got you. So large market rallies, can induce this FOMO and make you feel like you're missing the boat. So we analyzed the statistical relationship between large rallies and subsequent price performance because we wanted to find whether the momentum continues or if mean reversion occurs more frequently post a rally. What do you think? Do you believe in mean reversion?
I do, but I think volatility is more mean reverting than the price. So I think you have to really stay patient when it comes to price.
I agree, and they go hand in hand. Mm-hmm. Next slide, please. So the study that we are looking at, these are the symbols on the right side here. You got, a basket of 20 symbols here. A lot of them are high volume, large cap stocks. We're looking at 3 years of price data. You're talking SPY and NVIDIA. You even got like J&J in there and Bank of America and BABA. It's a pretty diversified basket that we have here. We applied a rolling 100-day window to identify the maximum rally events. So we're looking at just kind of a snapshot of these big moves in these stocks. 260 rally events have been analyzed across the different market sectors and company sizes. So some of these, are mega cap stocks. Some of them are a little bit smaller, especially some of these stocks like a Palantir, which was a very small stock, which had a very, very big rally. A lot of things have changed with these underlying. So the key preview of the findings is that 72% of the rally peaks are followed by negative returns. A lot of times you have these big, big moves, and then it doesn't go on forever. I think that's correct. Not
Nothing lasts forever, son.
Nothing lasts forever. That is true. Next slide here. So the rally events. So this was the maximum price appreciation within any rolling 100-day window that we saw. So this is just the peak to trough, or the trough to peak, I should say, is the upside move. The peak to trough would be the downside move, but we're looking at the upside. So the rally peak is the price point is the terminal price of the rally event. So this is serving as our baseline. We're looking at the forward performance. So this is the percentage price change measured at 1, 2, and 3 months post the peak of the rally. So we're looking at 1, 2, and 3 months after the 100-day rally that we are measuring. We're looking at the success rate, so the proportion of the events where the price continued to appreciate beyond the rally peak. So this is after the 100 days. We're looking at how many times it went past that in that window. Okay. And then looking at, of course, the mean reversion. So this is the statistical tendency for asset prices to return towards historical averages following these extreme moves. So we're measuring to see if that comes into play here.
Let's see if it does.
So looking at some of the characteristics of these rallies, the average rally size in this basket of stocks is 26%, while the median rally size is about 18%. So this is showing that, this skews towards some of these bigger rallies. I mentioned Palantir being a small stock that became a very big stock. When you look at this distribution, it does skew towards the upside, but when you look at them as a whole, the mean is slightly lower. There's still significant rallies. 18% in 100 days is a big move. Sure. I mean, for all intents and purposes here. So the largest rally that we had in this group of stocks is Palantir. It's 126% surge in 54 days. Big move.
Big move.
You don't get a lot of doubles in just a couple of months here.
No, you don't.
So the average rally duration is 45 days, roughly 6 to 7 weeks from trough to peak. So that's from low to high, has typically been about 45 days on average. So when we get to the post-rally performance, which is our next slide here, the average return for the 1, 2, and 3 months post the rally is 6%. So the rally does kind of continue after for the first month or so. And then we've got -5% and -3% once you get past, you get past the big move, right? So 2 and 3 months later, there is a little bit of a downside skew here. And you can see that in the 1 month post-rally returns distribution, it skews to the downside. This intuitively doesn't surprise me, because when you have a 100% rally to the upside, you expect it to stall out at some point. You don't think you're not playing.
I think it's going to go on forever.
It doesn't crash back to pre-pricing, but you expect, if you go up 100%, there might be some profit taking. You might have a little bit of a pullback. Not a shock here. The best post-rally return is NVIDIA. So NVIDIA is another one in the basket where it has had astronomical returns recently, and that move was 46%. And the worst post-rally return is the United Healthcare, which had that huge move to the downside. It's since bounced back a little bit. We actually just
did something in UNH on the break.
A little call diagonal spread that we took a couple $100 out of, so that was a good one.
Nice.
So the win rate of these, the chance the stock continues going up post the rally, is 28%. So if you're a betting man, you probably expect, after about a month, when you get to the peak, you probably have a little bit of a pullback from that. We've seen that recently with like your Oracles and some of those other high-flying stocks. So the key finding here is that mean reversion dominates. Nearly 3 out of the 4 stocks decline after major rallies. I don't think this is groundbreaking to think that, after 126%, I think was the number on Palantir, that you might see a little bit of profit taking at highs. But it does, tell you that, sometimes the FOMO, there is a point where the FOMO will bite you. If you keep going, you got to stop at some point and take your money and run. You can't keep going with the FOMO here.
No, you can't keep going forever. You're right.
So the next slide here. So this is talking about volatility here. So this compares the average rally side with the 1-month forward returns post-rally to show the volatility leaders. So a noticeable pattern here is the large rallies are followed by subsequent pullbacks. So, these big rallies that we've had in Palantir and NVIDIA and Tesla and BABA, there was a point where it made sense to sell them.
Sure.
And
But nobody knows that, right? In advance, that's the whole problem.
Yes. But this goes to kind of what Ryan talks about when he talks about crypto. And he's like, at some point you gotta sell them. It gives you capital to buy them a little bit lower. Like this, after you have these massive runs, you take some profits and, you take some liquidity. Nothing lasts
forever.
forever.
It's been prudent throughout my career to do something like that. But you will get the person who gets hit over the head and says, you know what, the only way you can make money is by holding them forever. You know what I mean? Hard way to make a living, in my opinion, but there is that side of the coin.
Getting to the key takeaways here. So since 72% of the stocks decline within 1 month of the rally peaks, then rally peaks are excellent entry points for bearish trades. So you can start, it doesn't mean that right at the peak is going to be the last day. You could obviously keep going, but it's a good point to put on some short delta. If things are at highs, it's a good time to put on short delta relative to the history.
There hasn't been a better time.
Yeah.
I mean, if you're at highs, but that doesn't mean it doesn't, like you said, markets are dynamic. It can change. Matter of fact, even the S&Ps are up 5 and the Dow crashing, only up 7.
Yeah. When we investigated larger rallies, so we're talking about greater than 40%, we noticed even worse forward performance. So the bigger the rally, the more there is a pullback, the bigger the pullback. So waiting for rallies to exhaust before entering positions, you got to fight the FOMO sometimes. And this study overall quantified what behavioral finance predicts. Extreme moves often represent inflection points rather than trend accelerations. Not a shock there. One quick little slide at the end of just how you can take advantage of this. So credit spreads. So if you're selling call credit spreads, we do that, and we'll get to the last slide here if you want to do that. But we can skip the last slide. There we go. So call credit spreads, selling calls, put diagonal spreads, put calendar spreads, they all come into play here. This one I think was from an old slide, so don't worry about that.
And that's from the curve view, which I don't show a lot of, but a lot of people.
On the web-based platform, which we might show some of in the future here.
Very nice, very nice, very good, very good. Even a good little study there on bear strategies after peaks here. You don't want to do there were really no takeaways. It was just the last slide.
No, we had the takeaways.
Yeah.
That last slide was a little kerfuffle.
No worries.
Oh,
210 fill on your SPX. Look at you.
We did good.
Good job.
I'll give you a half.
Good job. Good job out of you. Good job. Matter of fact, let's take a look at the E-mini S&Ps and see what the expected move is for the rest of the day. You're looking at around 15 handles. E-mini S&Ps catch a small bid now, up 8. Volatility in by 10 cents, but you closed that trade for 210, which was a nice little buy for you. Good sale, and good cover. There's two sides to every trade, son.
Yes.
You know that?
And now they're taking a little bit of volatility out of AMD too. That strangle that we were talking about on the open, it was trading at 850. It's now at 790. With the stock basically where we opened
50 cents. That's not gonna. If stock move 50 cents, your strangle shouldn't move that much on a 50-cent.
No, especially with short delta. I mean, I have short delta on that strangle into this move. So, yeah, taking a little bit of volatility out of that. But yeah, still got some high flyers. I mean, we got some things moving. CCJ, it looks like uranium is the flavor of the day today.
CCJ.
I wonder if
if
we'll get an announcement on that government add to the portfolio.
Big 4% move. How are the markets in there? I haven't really traded. It has earnings coming November 6th.
I got all
markets are good.
Yeah, markets are good. I mean, this thing trades. I got a butterfly in the 10-day in the October expiration.
So you have a free butterfly or a
free
butterfly that you put on
85, 90, 95, and then I did a 1/3 call ratio spread in November. I'm long one of the 85s, 3 of the 95s. I did this at a $2 credit. It's marked at 4.
Oh yeah.
So I'm out a couple bucks into this move, but it's right where I kind of want it in the next 40 some odd days.
Good markets in here too.
Not bad.
Markets are relatively tight. You get some of the out of the money options, you get a little bit wider. Markets are pretty tight in there. Good job. CCJ. All right.
Cool.
We're going to take a quick 90-second break. You want to?
Sure.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? We got a market measure for you. We'll be back in 90 seconds. It's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show. Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
That's right, Nikki. We are back, my son. Even the S&P's meandering around, up around $2.75. This is about as low as they've been since we've been on the show. NASDAQ is up 37. Russell turned red by $2.80, and the Dow turned red by 10. Everything is pretty much basically unchanged. Volatility still stuck in the mud, down 5 cents. Bonds are up 7, 1, 16, and 12. You've been pretty active on the break here, doing stuff in MP, ENPH. You can see that all on the follow page.
Yeah.
You got BEMU. You closed your SPX trade. So far, you've got a nice kind of plethora of trades going on.
And I'll put some comments in those once I get off the show.
Course,
it takes a
little bit of time.
Takes a little bit of time, but yeah, it took. So the end phase was just a naked put that came in about 40 cents. About 30%.
Sweet.
We did it like last week or something like that. I mean, the stock has gone nowhere, so no sort of home run there. MP, I just bought back the puts, sold a strangle. I think this was a fast market trade from last week. The put lost like 50% of its value. The stock has had a significant rally, so I'm going to lean a little bit short into this move and just have the short call on. Get a little bit of a down move, I'll sell out the put again. I'm just kind of just playing. I'm getting a little bit more short delta without adding risk to the position.
Sure.
So just taking that one off. We talked about Bloom Energy. I mean, that stock, whoever put me in that in my Option Trading Concepts live show with my work wife a couple weeks ago, that thing is a pain in my side
Bloom Energy volatility continues to expand. IV rank of 107 means it's as high as it's ever been. Stock is up $4 and change. It's a 5% move in Bloom Energy. Yeah, you look at some of the pricing on some of these November options. I mean, you go all the way out to the 40s and 140s, and they're $5. The stock is 90. Expected move is $30. Some interesting, maybe a 1x2x1 broken wing butterfly or something down on option trades there every Tuesday and Thursday. Maybe you'll take me down in Bloom Energy.
And that'll come on the on our joint.
That's right.
Logo, the bats on the follow page.
That's right.
If you've been wondering what that is, it is the two of us together.
That's correct. We have a young picture of Nick on there and an old picture of me on there. It's okay. It's okay. I don't.
You're getting quite svelte. You're looking good.
Thank you. I'm dying on the inside, not on the outside.
Yeah. All right.
What do you got for us here? We got a market measure.
Third research of the day. 3 of them today. Yes.
Okay. Nice.
Friday rebalancing is the new must-do trade. They got to rebalance on Fridays, Pops.
Let's see what's happening here.
Let's see it. First slide, please. So this week, the market began the week up from the previous week. So, i.e., the SPY's price increase from Friday's close to Monday's open from 669.21 to 671.62. We talked about those like gap moves yesterday on the market measure. This isn't necessarily a gap because the futures trade, but this is the gap on SPY just because SPY doesn't trade 24/5. Market usually starts the week up from the previous week in typical market conditions, but in 2025 it has been far from typical. So, this is just kind of a positive drift stat. Let's review some of the statistics to understanding why Fridays deserve special attention based on how the market has been opening this week, the weeks in 2025. So when we look at the study here, so we're going to the next slide here. So we're looking at 2015 to 2025, 10 years of data, and then we're bucketing the data based on this, of course, based on the SPY price, because we're looking at SPY here, but we're doing the Friday close price for the past 10 years and then the Monday price open for the past 10 years. And we're comparing the impacts of the weekend moves from 10 years, from the past 10 years versus this year. So we're taking into context this year's trading action versus the past 10 years.
There's got to be some decent sized moves, I would think, over the weekend here on 10 years worth of data. Still goes down back only to 2015.
You think 10 years is going to be more volatile than this year? Average 10 years? That goes to 2015.
Percentage move or actual move?
Percentage. I think we do percentage in this. Yes, we're looking at percentages. I mean, we've had some pretty big volatility this year.
Yeah, I'm going to say
and
no.
Moves are big.
Yeah, I'm going to say the moves are big this year compared to 10 years.
I think so, too. I mean, think about all the tariff stuff we had. Japanese yen. I mean, we've had all sorts of stuff.
Yes. Agreed. Well, let's see what happens.
Next slide, please. So over the past 10 years, the market has opened the week up 56.3% of the time, i.e. the Monday's open was at a higher price than Friday's close, nearly 56% of the time. That sounds like a lot, but that is positive drift. Positive drift over X amount of time. It's about 52, 53% of the time. I mean, they go higher. Mostly, if you look at a long-term price chart, it's usually higher.
Yes, usually
Market's
higher.
a little higher than it was in the 80s, 90s, 2000s, 2010s.
Yes.
Higher now.
Higher now.
So similarly, the market opened up about 57% of the time on any given day from 2015 to 2025. So that's the actual percentage of the time the Monday's open was higher than the Friday's close is right in line with the last 10 years this year. So the percentage of time has been the same. Does that shock you?
A little bit. Yeah, a little bit. It does.
So we're looking at, the next slide here. So in 2025, the market has only opened the week up 51% of the time. In comparison, SPY has had about a 60% of opening up on any given day in 2025. So it has definitely skewed to the upside, which isn't a shock if you look at a chart of 2025. So the start of the week have been especially rough this year compared to any day this year. So Mondays have been kind of where you've seen a little bit of a pullback this year compared to all other days.
I don't think I could have guessed that. That would have been a pure guess.
Thought it'd be kind of.
It would be kind of flat. Yeah, yeah. Over
Mondays,
time.
you got weekend risk. There's, and you price that into options when you look at like SPX options. There is weekend risk premium to those options.
Yep.
Next slide here.
Good job.
So while the weekend movement of 2025 haven't been nearly as volatile as in 2020 COVID times, roughly 25% of the weeks that started down have been outside the one standard deviation range, so much more than the 16% we would normally expect. So basically this year has had a lot of tail risk in both directions, and we've seen that play out. When you look at our two charts that we have here, we have the SPY weekly opening changes from January to October of this year, the one standard deviation bands as well. So you can see those, each data point from this year. And then you can see when we zoom out and we give you the 10 years, you can see our little portion of this year's movement has been much, much wider than previous years. I mean, you can take any little snapshot from the past 10 years, and this one has been exceptionally volatile, and a lot of that has occurred over the weekend.
And it's amazing because you got volatility relatively low, right? You would almost think just the opposite there. So it's good to put this at light. Roughly 25% of the weeks that started down have been outside the one standard deviation range. That's significant. I mean, statistically significant too. I mean, that's 2-3 times as much as you would think, 2.5 times as much. So it's pretty cool.
Yeah.
Good little study there by the team.
Next slide, please. So weekend moves have been much more volatile and tend towards the downside in this market environment. Of course, that can change. This means at the end of the week, portfolio management, and position recentering is even more important, particularly for shorter duration trades. You got to manage those positions end of the week. You should be looking to do something. If you've been waiting at the end of the week, if something's really going against you, make that adjustment because you see.
So keep your deltas in check is really what comes to mind here, right? I mean, like when you're going through the week, it's even more important than maybe even the daily moves during the week. I mean, you really have to, because obviously it takes more time. You have more time over the weekend, then you're definitely going to have to do something about that. So good study here. Reason why a lot of times the 21 days is right before the weekend on Friday. You want to kind of, as your risk gets closer as your movement risk gets closer, as expiration gets closer, that 21-day time, again, just kind of puts you out of harm's way and the maximum or optimal time to roll right there before the weekend. So good study there too.
Last slide for our takeaways. So in typical conditions, the market is more likely to start the week up from the previous week. That's called positive drift. However, in 2025, weekend moves have been more volatile than usual and much more likely to open the week down from the previous week. So you've had kind of your big moves occurring over the weekend, news-driven, tariff, whatever you want to blame it on. Therefore, it's important to appropriately manage positions and rebalance a portfolio towards the end of the week. You want to kind of button up positions before the weekend.
Good job. Good job out of you. Good job out of the team. We got one more good job here. We've got a little bit of a match going on here at Tasty Trade, the other side of the tastylive business here. You know how we keep all of this live programming free is by you moving or transferring or bringing your account to Tasty Trade. So if we could put up that little slide on the matching at Tasty Trade.
Yes.
Taking a 1% match. There you go. You can jumpstart your trading, unlock a 1% cash max and 30 days of commission-free trading, believe it or not. You can What's that little box there, son? What are you?
Ooh, this is another thing I got to teach you about. Those are QR codes.
Those are QR codes. You got to teach me about that.
And scan that. You do that all the
My
rest.
wife doesn't want me to know what that is, so every time she's looking at like her phone or something or doing something with a QR code to get to a website, she doesn't want me to know what she's buying. So don't teach me too much.
You can scan that, and that's BTC. That's big time cash.
Big time cash, BTC.
1%.
Yeah. No, read the fine print, but absolutely 1% cash on qualifying deposits up to $2,000. So
yes,
nice job by the team. Good. Nice job out of you. We're kind of hanging steady here, not going anywhere. Volatility still down 5 cents. Bonds still up 10. Bitcoin take a little bit of a breather, down 2% to 123.8. Oil down 43 cents. Gold hanging out up $17. Let's take a quick 90-second break. You want to?
Yeah.
Take a quick 90-second break. We're going to have some time. We got Quentin and Glenn coming in live from the trade desk, immediately following these messages. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nikki, we are back son, and you know what that means. Time for a little more Tasty Live. We usually have somebody from the trade desk coming in here. They're quite...
A little kerfuffle on the desk.
Yeah, with even the S&Ps unchanged. Must be some movement underneath there, but we can get to all of that in just a moment. I have a bone to pick with our next person coming in here. I've got a new name for him. That's right, Noodles is here.
Noodles? What happened?
Noodles, let me set it up for you. Oh, sorry about that. Let me set it up here for you. We're on the road, and I can't think of a name to a fast food Italian restaurant.
Keyword fast food.
Fast food Italian restaurant. If I said to you, Nick, that's what he said. He said Noodles and Company.
A fast food? Like I would say like Olive Garden.
That's the word that's the name I couldn't come up with.
Okay, that's not fast food to me. You're still sitting down, you know? But yeah.
Unlimited breadsticks is fast food, okay? That's like... So you said noodles.
It's casual, fast casual. But I was thinking literally grab and go. And yeah, I was like, that's weird.
Noodles is sit down too, though, isn't it?
It's more of a Chipotle environment.
Is it? I thought you like sit and order. Do they have like? I don't think they have like a. It's not like buffet like.
Okay, but
scooper.
Fast food, like you don't have a server. At Olive Garden, you have a server.
Yeah.
To me, that makes a difference.
Okay.
But yeah,
that's a fair.
Mr. Batista, perhaps rightly so, was quite offended by this.
He's calling you noodles now. That's.
By,
See, I gave you G Money. We've gone. G Money sounds cool. Noodles sounds like.
Noodles sounds real.
And
like noodles, you might have to.
Noodles sounds
You
real.
might have to work somewhere else after getting noodles. If that sticks.
And he goes, "Oh,
that's not
boy,
a good one.
I hope I remember this next week." And you know, I didn't know if you would, but yeah, you did.
Noodles.
But I again apologize to you and the entire Italian American community for that.
So I've never been to an Olive Garden. Have you been to an Olive Garden?
It's been quite a while. I went a couple times in college. I mean, it was Olive Garden. It was Perkins.
I forgive you.
Yeah. No, I didn't have Daddy's credit card in college, or high school, or eighth grade.
Or
so
junior high. Or
yeah. It's,
any of the other highs.
Yeah. I worked at the bar, and then whenever I could, I made from there. I used to feed myself. But I will have some people in the chat are saying that Olive Garden is fast food with table service. They're saying it's fast food with table service. You've never been to an Olive Garden?
Food.
No.
Really?
God no.
God
knows.
Pinky
Right?
up.
Have you ever been to a Noodles and Company?
Yes. I've been to Noodles and Company. I like chicken noodle soup, so I figured that would be a good place to go if it was a mistake.
Better luck at Panera Bread, I think.
Panera has good chicken noodle soup. Yes,
Yeah, they do.
You are right. Is that you sit down there? Is that?
But you serve yourself. Like you go up to a counter.
Yeah, you order.
You get a ticket.
I see.
Grab it, and you
see the
go
logic.
or,
I see the logic.
Yeah.
See the logic.
I see the technicality. I don't know if it's logic.
It is sort of a technicality
I see the
as well.
technicality.
But I yeah.
Uh-huh.
So I get it.
All right. Well, I'll pay for that one. But
you're already paying for it because
Yes.
I look at you quite differently.
But LA was very nice.
LA was very nice.
Sunshine State? No, that's Florida. It's California.
Don't ask me. I'm the wrong person to ask. I'll say something that's not politically correct. So
Great show though.
yes,
You nailed it once again.
Yes, it was a good show. Fun, so well received. Very, very nice by the people. Even with you out there.
No, even
helping
so.
us. Even so.
Helping.
So. That's right. No, he does an excellent job with
It
the
was an
platform.
excellent job.
And actually, I think I have a webinar to do on Thursday. Are you going to be?
I am not. But we can find out who is.
Can't count on you for anything.
I know. No, yeah.
God damn it, noodles.
See
I'm heading out right after this.
See how quick that was? It happens quickly. All right, well, what do you got for us today?
Today,
Glenn?
FX markets are
I like your
moving.
mom. I'm going to call you Glenn.
Don't you bring up his mom.
Always bringing up my mother. But FX markets.
Thank God we don't have an HR department yet on this side of the business. We could be in trouble.
But yeah, we got a lot of movement. Still government shutdown. You'd think that would be boring, snooze fest for U.S. dollar. But other countries now picking up the slack, printing headlines. Right now we're looking at the Japanese yen.
Crazy move.
That's the one we're looking at. Gapped higher over the weekend, or the yen gapped lower. Dollar gaining.
I can show this on the platform here. So on the TastyFX side, you click this little button here, go to TastyFX, you'll see the popular pairs here at the top.
Yep.
USD, Japanese yen here is the one he is referencing.
So we're
that Noodles is referencing. The move to the move to the upside is the inverse of what you would see on the 6J futures. Here, Japanese yen coming down on the Japanese yen coming down, USD going up.
Not the biggest move I've ever seen in the yen, even recently. I mean, I think back in December it had a huge move lower, but the magnitude of the move here is definitely outside of standard deviation or more,
100%.
right?
Yeah, and I mean, you have 24-hour markets 5 days a week. This is a rare gap over the weekend, as we had a surprise prime minister election, and this new prime minister in favor of Abenomics, which is fiscal stimulus.
Stimmy.
And
Stimmies all around, everywhere.
We had kind of a BOJ interest rate hike in the cards, no longer because of this perceived influence. And then combined with some US dollar strength overnight, now we're sitting at 151 in the dollar yen pair, which is the high dating back to March. And now we've got a Japanese finance minister speaking overnight saying, now we're looking at the currency markets, possible intervention. I don't think at these price levels, but they are susceptible to step in around 155, 160 if they think things are starting to get a little too out of whack. So that's definitely one to watch. And then if you're not looking for US dollar exposure, yen weakening across the board. We've got even greater price extremes. We've got the Japanese yen versus the British pound. That's coming off of a high dating back to July of 2024. And the euro against the yen is now at a high dating back to, as long as TastyFX's price graphs go, so pre-2000s, somewhere in the 90s. Got to do some advanced recon on that. But that one surging to new highs. If you're looking, for a contrarian play here, maybe you would favor looking at the British pound against the yen over that euro, because we've seen this price before and we're kind of stuttering. We hit highs yesterday, now peeling off those highs. And we've got, some of the Bank of England speculation in there. Maybe their economic prospects not looking so good, so they might have to cut again when they weren't looking to. So maybe
I sold the euro yen yesterday. I sold that yesterday. It cost me $100.
Ooh.
I'm a little. Do I double down? Do you double down on that?
I don't know. You could look to. You could diversify. Still have.
With British
euro
pound.
Strong, yeah.
Yen volatility, IV rank relatively low, but these IV ranks don't move. Going away from FX for a moment, just getting to the options in the yen that much. Just to compare them, about 15% higher. I think you got like a 7 to 8% monthly implied volatility in the euro or the pound, and you got almost a 10% volatility in the yen. So maybe even on the put side there, trades about one tick off of mid price. If you're looking at around a 20-ish delta option, it only brings in around $200 with 31 days to go. Brings in around $200 to $300, $250 or so in premium on a relatively small amount of buying power. So maybe even something there to do in the yen. So I think the yen is definitely in play here.
You think like a little put spread, like a short put spread out of money? Like it's not sexy.
No, not sexy. Almost rather buy a call spread.
At the money?
Like an at the money call spread.
50-50.
Something like that, just to get a little bit of, bang for your buck here. You can do something like that in the yen. You certainly wouldn't be buying it at anywhere near the highs. You wouldn't be chasing here at 6666.
Ooh,
two.
Spooky.
Spooky is right.
What are you thinking? Like the 6667?
Yeah.
59 days.
Yeah.
All right.
Yeah.
I mean, it trades it's a 50-50 shot. A little bit Better than a 50-50.
Yeah, a little bit better than a 50-50 shot.
You're right there.
You'll see here that the futures on the platform are trading 59 days. December futures are trading at the same future that's trading in the front month right now. So you could certainly look at that if you wanted to. It's going to be a slow mover.
Yeah, I mean, it's a set it and forget it. Yeah, I did it for exactly 50% of the width.
Good.
All right, I did that. I think we have some Fed speak today. Does any of that matter?
Do we have them still with the
Yes.
shutdown? I think you probably should. You do, right?
So they're still allowed to speak. We've got some, I don't want to say B tier.
So they're still allowed to get paid?
B tier. B tier.
There will be some Fed speakers today. We've got FOMC minutes tomorrow. That's still slated. And then Big Dog Fed Chair Powell on Thursday coming in. So still got some speculation there around Fed speakers. Our next guest loves Fed speakers.
I can only imagine. I can only imagine.
But then, outside the end, I'm just looking at euro dollar. If you pull up the spot market there, we're at an interesting point, bottom of the range.
You're looking against the U.S. dollar?
Yep, I'm looking at the hourly chart. We're at the bottom of the range dating back to the start of September. So we've hit this a couple times. It'll be interesting to me if we trade through it to the dollar strengthened side to lowering in this pair, or if we get a reversion, could be a nice range trade in the shorter term than perhaps your longer term Japanese yen strategies.
What do you think on that, son?
Well, I'm short the euro against Japanese yen, so I don't want the euro to be up. Rather euro down. So,
okay. I mean, if you're trading
trying to trade the extreme.
Exactly.
Japanese yen, you get a little bit of a bounce. This would be a nice move.
So the nice part about having multiple points of exposure for playing the euro is you could even set that as a longer dated strategy, and then intraday, maybe just within the week, trade around that euro dollar if that's what you're looking to do. So that's all I got for you today.
Very nice.
Very nice.
Thank you, nudes.
All right.
How about nudes? That's from Laura. Laura gave you nudes.
See, everybody's piling on now.
Yeah,
Thank you, Tony.
it's definitely G Money. We've got G Money. The people in the chat are saying G Money is the one.
In LA. Call me G Money.
There you go.
That's my man.
There you go.
I like it. Before we get to our next guest, we'll probably have some time for phone calls, 855-238-2789 or 855-BE-TASTY. If you have a question for the YouTube chat, please write in there.
Yes.
We'll open
take some trade ideas too. I need something. I mean, this is the most movement we've had all.
This is the biggest move we've had in some
7 points to the downside. You got to buy this dip, right? 7 points.
This next guest might not be looking to buy the dip on a 7-point move. Give me some dee. From the Tasty Trade Desk. I know him as Steve, the nicest man on the trade desk that I know.
Thank you,
Mr.
sir.
Steve Rashes. How are you, sir?
We got to adjust the cameras for
Missing
him.
you. I'm a nice guy. It's finally paid off.
Yes,
Morning.
yes.
How's everybody doing?
Good morning. So the trade desk is a little busy today. Where's the action? What's the most phone calls you've been getting? I know you do a lot of risk,
so just
right?
putting in perspective, I mean, I work on the risk management team, so the trade desk support team really is just, taking care of calls, constant interaction with customers, whatever their issues might be, placing trades. So they're busy all the time. I mean, it's not like they're ever not busy. So they're a little bit in high gear today, so they recruited me to come in. So
Anything in particular they're looking at? Like, is there something flying around that people are trading, a little open door, a little something?
From my perspective, obviously AMD's been the biggest stock to play over the last couple days.
Volatility coming in there, though.
Yeah, a lot
nicely.
of the AI stuff. There are a ton of individual symbols. Like Rigetti, for example.
Yeah.
IONQ. There's just a lot of stocks that have really just been flying around, having huge moves. AMD, I mean, what are they up 30-40% in 2 days, just making a
opening on its high each day
with OpenAI.
Yeah,
I guess so. OpenAI is making deals with every chip company. Doesn't matter what it is. So obviously that's what's been in play.
Yeah.
Steve, since you're on the risk side of it, and you're always kind of putting out the fires what do you see as the biggest thing? Is it liquidity? Is it the size of the trade? Is a combination of both? What gets people in harm's way? Because we want to try to avoid that. So.
Yeah, well, I would say definitely the size of the trade, because what happens with these exaggerated moves is a position could look fine, when the stock is 160, and even your buying power usage, depending on whether you're trading in PM or Reg T, but mostly PM, your position could look fine, on day one, and then the stock is up $50, everything changes.
Yes.
So really, the people that get into trouble, and I don't like to make blanket
Sure.
generalizations,
Sure.
but lots of units for cheap prices,
Yes.
as initiating, types of positions, those are the ones that get in the most trouble when you see these exaggerated moves. So it's tough to, that's a pretty clear, that's a pretty clear cut, thing that happens pretty much all the time.
Yeah,
Right. So it brings up a lot of different issues. Can you trade spreads? Are there things you can do to mitigate it?
Yeah. Just buying the tail option. Just buying the tail to on a futures contract. It might not. You're not playing for the protection, but it'll cut your vol exposure on that sort of on a big move to the downside, and it's cheap to do that because you don't want to have to do that.
Yeah.
When that point comes.
Well, of course, and that's the problem is when you have a position like that, everything's fine until you're forced to act, and then it's too late. So the real question is, from a strategy perspective, is it better, for example, if you're going to sell 15, 20, 30, 40 cent calls, is it better to sell, a 25-cent spread, and do twice as many spreads? Because at least then you're not going to be stuck having to buy units at $10,
Yes.
Or something like that if something really goes haywire. So we've been trading for, 35 years together. So that's kind of just like, what's a core risk management philosophy that you embed in all these trades? And especially now, if you're trading some of the thinner stocks that are moving 50, 100% in, short periods of time.
Yeah.
You got to ask yourself, what's a reasonable play to make sure you don't get stuck?
Yeah.
And this doesn't have to be a surprise to the trader in the PM account, regular margin account, or anywhere else. You can easily go to the little tool that we have called cap requirement, which is what you use, right?
Yeah, exactly.
Like when somebody calls up, you go into their account, you click on cap requirement, which is on the right side of everyone's platform, not just the people on the risk team. You click on that and you look at your risk analysis, and it'll go down 1, 2, 3 standard deviations, I believe.
Yeah, it does. But it's an easy
what
way.
do you look at? Do you look at 1 standard deviation moves or 2 standard deviation moves? Because if that number becomes a negative at that 2 standard deviation move or 1 standard deviation, whatever you're looking at, you'll correct me to what it is.
Well,
that's where your risk is, and that's where your problem is from a brokerage point of view.
Yeah, no, there's no question about that. But so normally, that's already happened by the time I'm looking at somebody.
Sure, I'm trying to preempt this. This is the wing that they should be looking at.
Yeah, exactly. So, just as basic position management, you always have to know where your stress points are, right? So the easiest thing to do is basically, like you said, look at the risk profile, look at the cap rec requirement, see where your numbers are at various, price points along the way. Whether it's 1, 2, or 3, it depends on your position, right? So I tend to just quickly look, and this is just like old school way that we used to do things. You just look at your biggest strike prices where you have positions on, and then you could say, okay, how far is this out of the money? I'm looking at a 10%, out of the money move, 20, 15, whatever it might be, and you're like, okay, that's the price point that I know I'm going to start getting stressed. So I like to keep it simple, but that's a great tool, to basically just look and see where all your numbers line up and what you have to watch out for, and then you can kind of look and say, what's maybe the cheapest way to hedge this, or how can I, navigate this to, because what you really want to avoid is being forced to do something you really don't want to do.
Yeah.
That's the key.
And getting too creative, I think, is another way of trying to avoid it. And I know you're always looking for and I'm talking from a customer point of view, you're always looking for the cheapest way to avoid this conversation with the risk desk. So you're going to these shorter dated options, and you're looking to mitigate your risk there, even though you might have a position that's out in the 45-day time frame.
Sure.
I have found from my own trading when I step on my own hands and I get
you never do that.
Never get too big on something, that it's best to go in the same month that you have. It hurts because it's the opposite of what you want to do. You've been selling all this premium, and now you have to go in and buy premium, probably at exaggerated prices in volatility, probably higher than where you sold the meat of your position. But it makes it so much easier from a mental standpoint. And if things seem to move always a little bit more than you expect, if you do it in the same month, you do it that one time, you've pretty much cut your risk out, and now you can go back to possibly taking advantage of the move that you're seeing.
Yeah.
Before I want to add one other thing, and you actually taught me this because I would go into the cap requirement and see my own positions at a 1 or 2 standard deviation move and see if I had any problems there. You can quickly just click on the left side, kind of by your account number that you have there, your account, your own account.
Are you talking about the balance?
The balance, yeah.
Sure.
Which is, so tell me a little bit about that. So when I click on balance, like it has my net lick, to the left of my net lick, it says balance. You click on that balance. What is that really showing me?
Basically, the core of it is your cash position. It'll show you your cash position, your settled cash balance. Those, I don't want to go too far in depth in that because
no, I don't want you to
settle
either,
in one day. But looking at that, and it basically just gives you your start of day trade buying power, and some various pieces of what your account is made up of, so you can get a quick snapshot of what it is. Easy tool. I mean, just
so if I look at my cash balance and let's just take round numbers. I have $100,000. Let's make it a portfolio margin account first. I have a $200,000 account, and my cash balance is $30,000. What does that mean?
Well, so I guess
just from a high level,
in a high level picture, right? Whatever assets you have in the account. Let's say you bought T-bills, for example. Let's say you sold some strangles in the SPX, or you sold some naked puts, or whatever the case is. If you're an option seller, that's going to increase your cash balance because you're collecting the money, and your cash balance reflects what you collected for those options. So it's basically the net position of your account, what you've collected in terms of cash or what you paid in terms of cash. And then you can look at that and just say, well, when I close these positions, I'm going to have to pay something. So it's probably going to draw down your cash balance. And obviously what you want to avoid is having to pay more for the positions than when you sold them, right? Because that could create a position if you sell, whatever option positions you put on. If you collected $25,000 when you put them on, and you have to pay $50 to cover them, then at some point your cash balance is going to be negative, right? And then you potentially, well, you will, if it's negative, have an interest charge. So you have to think of those, of things like that in broad terms, just to make sure, obviously you don't want to be paying interest unless that's, you could be levered on the stock side, and that's okay.
Short term.
Like, okay, I understand there's an interest cost to this, but I don't care because I want the leverage.
So if you
on the option side, you got to be wary of that. So you keep that cash balance positive so you don't get clipped with any interest fees.
That's the real key there, right? Keeping your cash balance if you don't want to get clipped for the interest fee, and that's the downside of having portfolio margin. Now you can easily, in your example, you said you had some SPX strangles, some SPY strangles. We're just making up positions here, and you had some, T-bills or BIL.
Sure.
You could sell some of those T-bills or BIL if you had to, get your cash balance back up, and you don't have to take your SPX or SPY position off, right? You just got to keep your cash balance at a positive.
Yeah, correct. I mean, but and
that would be at the end of the day, right?
You can do that, but you never want to be in a position where the instruments that you're earning interest are paying 4 or 4.25, and you're paying 10, on the negative. So it's a negative spread. You want to avoid that, at all costs. So if you have to do that and your cash balance is negative, you're better off just liquidating the bill or the T-bill to get the cash to 0 or higher, and avoid that cost.
And that's why we talk about like BIL and SGov as much more liquid ways to do it. Like T-bills, you can trade them, but they're not meant to be
in and out.
You're not trying to keep this for 1 week unless you do like 1 week T-bill. But if you're buying 1 year T-bills, it's not, the liquidity isn't the same as you get with BIL or SGov, where you can close in and out and liquidate very easily to get above that cash balance.
Very good.
Can we talk all day? I mean,
we could.
Yeah, you want to hang out?
Listen, this brings back old memories. Like,
you know what, Steve? No, you're much better at this than I am. From a risk management point of view, you've been doing it so much longer now. I mean, on the trade desk, you're handling these calls every day, and you know the functionality on the platform a lot better than you. When I have questions about something, I go to you, and I have to go to you a couple of times. I feel like a customer sometimes. So, I am a customer.
I have news for you. You are a customer.
Yes, I am a customer. So you're a plethora of information. So I really love it. Do you have your list up there of
to say something?
And you
nice
get
back
lots
to
of
you
love in the
No, you don't have to. No,
remember when you taught me how to text at the San Francisco Money Show?
I do remember. I do.
Old
We were
school.
both going. We were both going through some changes in our life. I had gone through those changes already, and I said,
this
"Dude,
is pretty cool." I had a Motorola flip phone.
I said, dude, if you're gonna be out there, you gotta learn how to text. I mean, this is the greatest thing since sliced bread. And I remember when I met my now wife of 21 years, she said, I didn't think you would know how to text. So it was like the biggest surprise for her. So I had to share the wealth. I mean, listen, when you learn something, the best thing you can do is share it with people that
I just wanted to make sure everybody knew we're equal in terms of helping each other out.
We're equal idiots, 100%. No doubt.
What did you ask me? I didn't mean to deflect from. Were we talking about something else? Or
No. I'm glad you deflected. You brought back a great memory.
I was going to say there's a lot of people throwing some love your way, Steve, that have talked to you in the chat that are saying, everybody on the desk is amazing, of course. But some people asking about demos for this sort of thing. Do you guys have some in the help center, or do you guys do like weekly, monthly type demos?
In terms of like the risk management.
Yeah, the risk management tools.
I'm terrible with this. I'm sure there are some in the help center.
Okay.
But we will do them personally for anybody that needs it.
Sure.
We can just get on the phone and walk through that. I'm certain there are some in the help center. I'm just not so well versed at searching for
Awesome. I think we have a couple. I know we've had Clink on a couple times. We have on in Trading Concepts
And
Live.
anybody that ever wants, something like that, you can just reach out and ask for Steve and Margins. I'm happy to help out.
Awesome.
Very nice. Very nice.
Very
You'll
good.
Get that every place. All right. Give me your list now, my friend.
List of what?
You have a top 10 list?
Yes, I have the top 20 symbols running through the system the last 45 minutes.
No, I don't want your personal.
Well, I don't look at some of them anymore until they go down. I'm not looking.
I don't blame you.
Until you're getting phone calls about them.
No. I thought you meant my own.
No. We have a list. We go to the most active top 20 list.
I got the list for you, and we have this in the platform too.
You
So
sit there and look pretty, Steve.
yes. So if you are looking for this list, I could show you where it is in the platform. You go to the Tasty bucket here, and then you go to the fast mover. So this is the top 20 of this list. So these fast movers are all of the top symbols. So top 20 symbols going through the system in the last 45 minutes of the day. What do we start with? 10? This is 10 for Tom, right?
10 for Tom.
10 for Tom.
Yeah.
We have Meta at a 48 IV rank. You've got Amazon at 9 with a 39 IV rank. Gold at 8 with a 39 IV rank as well. iBit with a 50 IV rank. PayPal with a 60 IV rank. You've got Palantir with a 37 IV rank. SoFi at 38. NVIDIA at 12. Tesla at 28, and AMD, the top of the day, at 54. Rounding out the symbols to the downside, or to the bottom of the list, you've got APP at 11 with a 42 IV rank, Netflix at 40 with a 40 IV rank, RGTI, that's Rigetti, with a 40 IV rank, SMCI with a 21 IV rank, Robinhood at 33, that's Hood, Intel at 62, IBM at 44, MSTR at 16, IREN at 67, and Microsoft at 32. And that is our top 20 symbols of the day going through the Tasty Trade system.
I want to thank you, Steve, for coming on the show. Really appreciate it on short notice. It was awesome. Got great feedback already from
my pleasure.
Emails. And
happy to do it anytime.
Noodles, you did a great job too. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
Liz and Jenny live from the SIBO.
Love it. We'll be back in 90 seconds. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade. right where you need it. Tasty Trade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
everybody, and welcome to the Tuesday edition of the Liz and Jenny Show. My name is Jenny Andrews, and this beautiful blonde is Liz Deerking. It got loud for a second. It was quiet all morning here at the floor of the
It's
gazebo.
been pretty quiet. It got loud for a second, but I feel like we're both very quiet today. It's a mellow day.
I think I was going to cough. I was trying to stop myself during the intro. I didn't want to ruin the intro.
Frank, we saw Jeff walk by. We're trying to get him on camera. He's not complying, so maybe you should just, make him say uncle.
Funny stuff. Anywho, if you don't know who we are two former floor traders turned financial talk show hosts, I guess.
I guess you can call us that. No, but I do love being live from the SIBO every day. This is one of my two favorite days of the week, today and tomorrow.
We started on the SIBO, we're back on the SIBO, and Tuesdays and Thursdays we are sitting in the middle of the SPX pit.
So let's kick this off. Let's kick this show off with a trade.
Good idea. Let's pop into the platform.
We might need to hold on for 1 second.
Yeah, I don't know. We've got a few things going on. That's okay. We have SPOOs down 950. So with SPOOs down 950, maybe we'll put in a trade in SPX. What trade would you want to do with SPOOs down 950?
Oh, you know it. We're selling a put spread. If we can get enough. I would like the just out of the money put spread.
Just like a little
Hopefully,
Jajun trade.
like a traditional Jajun. Now, we made up the Jajun trade as the wrapped around the at the money call spread. I prefer the put spread just in case it goes your direction. You don't have to, if it stays, you don't have to close it.
Yeah.
What are your thoughts?
All right, so we'll put that
spread,
on.
Call spread,
we'll
put spread,
put
call
that
spread.
on in a minute. Are you surprised that it's as quiet as it was today when we got here?
No, I'm not, Jenny, because look at this market. So yesterday, all time, can't stop, won't stop. Gold all-time highs. Gold hit 4,000. So it's kind of like
4,000 hit.
VIX was 4,000 hit. VIX is 1636 unched.
Oh, it is unched right now. Okay, then maybe I'm not too worried about SPOOs 950. But while SPOOs are down 950, let's pop in the platform, if that's okay.
Yeah.
We'll pop into the platform and put on just a put spread. Here we go. I'm going to go just kind of aggressive, right at the money, $1.85, $1.90, $1.95, even better, and ship it. Wait
Come
for
on,
it.
big money, no whammies.
Come on, $2.
I want my $2.
I think I went in for $2.
So I had a great idea of wear my glasses, but I can only do them when I'm running the platform. I totally forgot about that. In order to see what you're doing.
You know what? They look good as a headband. If you don't want them on your head, I can take them as a headband. Oh, there, we're filled. We're
yes!
filled.
Okay, now, because it is, what time is it? 10:03. Are we taking it out for $50 or are we going for more? $50.
Yeah, $50. Okay, so we sold it for what price did we get filled?
$2.
I don't know. I've got to check. Activity, $1.95. $1.95. So we're going to buy it back for $1.45. We're going to hopefully put that order in to close this for $1.45. 145.
Perfect.
And that's going to sit here until hopefully we get a little bounce. I'm hoping for a little bounce. I did the SPX Iron Condor at 9 o'clock this morning. At that time, SPOOs were up 5.
I did the put spread. At that time, SPOOs were unched. Now we're down 12.
Yeah, now we're down 12.
Close all watertight doors. But VIX, go to the VIX so people can see what we're talking about. Oh, public service announcement. 2 public service announcements. 3 public service announcements.
Yes.
Number 1, we're going to be at 2:30 today.
Oh, yeah. We're hosting Last Call. Now every Tuesday and Wednesday, the two of us are hosting Last Call.
Yes, we will not be live from the SIBO. We'll be live from our home studios, but we will be hosting Last Call on Tuesdays and Thursdays.
It's the last call.
The last call. The last call.
Yes, the two of us will be hosting Last Call on Tuesdays and Wednesdays. Another gift from Tony Batista. And we're hosting the morning show on Friday.
He's the gift that keeps on giving. That's what I'm saying. I had 3 public service announcements. Number 1 was Last Call from 2 to 3. Number 2 is Friday morning. I'll see you bright and early.
Yes, Friday morning.
And number 3, PSA, was what Tony Batista thought he broke today, was the new product that SIBO's coming up with. That we broke in Germany.
Broke the news.
Yes, in Germany.
No, yeah. And when we were live from Germany, Tony must have missed that show.
He must have missed her. It's because we were drinking beer. He was so jealous.
Yeah,
but we found out that the SIBO, we actually might pit shop for it.
We'll see where it's going to be.
Yeah.
There's going to be a new SIBO product, the Mag 10, which is going to be cash settled, amazing.
So it's the Mag 7 plus 3 additionals.
Yes.
Yes.
And it, it can change. It's not going to be like set in stone. Those products aren't going to be set in stone.
They're going to keep moving, which is great. And then they also said, we were actually sitting there talking about what the ticker could be, about where it's going to be traded. It was a lot of fun.
I know.
Yeah,
We might have a show one day where we go around looking at other places on the floor where we could put the Mag 7.
Because it will have an open outcry. Because it will be, say it with me, cash settled.
Love it. Love it, Liz. Okay, so we put on the SPX trade. Suppose we're down 18. Let's go back into the platform if that's okay. Back in the platform. Now, we do a live trading show, but we're traders. So the market can affect our moves. Let me tell you what I did today.
Talk to me.
Okay. Yesterday, so this might explain like if I'm not in the best mood today.
What'd you do?
So yesterday, end of the day, I thought, I feel like we might get a big down move tomorrow. So I bought some puts. I bought some SPY puts. Today's SPY puts.
Yesterday,
like 259. 259 yesterday. Bought today's SPY puts. I was going to buy an SPX put, and I thought, I don't want to buy the SPX put. I'm going to cut it in half. I bought 5 SPY puts.
Yeah, because you can. You can take it to whatever manageable portion you want when you use SPY instead of SPX.
Yeah, so instead of buying like one SPX put, I bought 5 SPY puts at 258, 259 yesterday. Then this morning on the train at 8:30, when the market opened, I said, well, this isn't going to work. And I sold them all out for 40 cents. Took a loss.
Where are they now?
I'm not going to look because that might make me a little bit madder.
She might flip a table. Hold on. I'm going to look at them.
I might flip a table. I might flip a cooler.
I'm going to guess. They were the 672s.
I don't even really want to look at them because
they were $2 now is my guess.
They were, so this morning was squeezed up 5. They were only worth 40 cents. They were worth 50 cents on the open. I don't know, Liz. I don't know, but it's not putting me in a good mood. And it's not that big of a deal. It's just annoying because I was like, should I just leave these? What am I closing for 50 cents? Save myself $250 or should I just leave these?
So I will tell you, yesterday was a crazy day, though, because now we're kind of playing with the house's money a little bit in the fact that a lot of our positions. So we were talking about this. Yesterday's tape action was a tale of up moves and down moves, and we were on the lucky side of those moves. We were.
Yeah.
Because a lot of things were down yesterday, but the things that we happen to be long, which is very rare, were up. And the things that we weren't in happened to be down. So things, but that's a luck game. So you were playing on the opposite side, which allows you to.
Well, I just thought, my portfolio, I looked at my deltas. It's quite a bit. My delta's pretty long. So I thought, I've added on quite a bit. I added on like downside Q's diagonal and upside Brooklyn butterfly and SPX, and I've added on some bearish positions. But I just thought, for tomorrow, I'm just going to buy some puts for tomorrow.
Yep.
Sold them this morning when SPYs were up 5.
That's okay.
I'm just mad that I did that. SPYs are down 22 now.
SPYs down 22, and VIX has a little bit of an uptick.
And to the real kick in the teeth is that then I sold the SPX Iron Condor to try to make
the wide one
to try to make my 250 back.
Yikes! It's all right. It's gonna be okay.
Anyway, if I'm not as chipper as I usually am.
It's probably because you were absorbing all my venting that I was doing on the train this morning.
Oh, Liz had
there was steam coming out of my ears.
I walked up to Liz at the train, and you were mad.
I was hot. It had nothing to do with trading, though, but I was
She didn't even have an umbrella. She was like, just let the rain hit me. I don't care.
I was hot.
Yes, she was.
I finally come down.
She was.
Okay, SPYs are down 27. No, the other thing, breaking news, gold has reached a 4,000 level. Let's hit that, too.
Let's take a look. I'll go to GC, and let me just go to $/GC. Then we can see the big picture. Whoa.
Yeah.
Whoa.
Yeah. Oh, yeah.
Yeah.
Everybody said it was inevitable to hit 4,000, but everybody thought it would be before 2026.
Everybody?
The world, except for Tasty Trade.
So there we have
Ken Griffin from Citadel this morning said, what did he say this morning? He said what's concerning is that most people find the world is finding more value in gold than they are the dollar.
Really?
Yep. Ken Griffin.
Really?
He moved to Florida, though.
I told you, I just had to put in for my vacation day for my daughter's junior ring ceremony. That gold ring really costs quite a penny.
It's gold, Jenny.
I might have to pawn it. Cover my SPX trade.
You might have to.
All right. Yes, boost on 28. So this is interesting. As far as our positions, maybe there are some we should adjust.
Well, let's take a look.
I've got one in mind. Starbucks has been looking kind of ugly lately,
and that's a bullish trade.
And it was like a almost double trade. It was a long in the money call, Jade Lizard around it. It's looking kind of ugly, and let me close it here. Starbucks. So we have this Jade Lizard, which is a loser because our short puts the 83, and then we have there's the Jade Lizard, and then we have that long in the money call, which is so far from being in the money, it's crazy.
Okay,
pretty far out. So I think we need to adjust our Starbucks position.
Well, let's close the Jade Lizard, and if we want to, we can reestablish. But I think we're going to be going through earnings. That's why we're still in the 10-day.
Well, so
we will be.
What I would think is close our Jade Lizards, take a loss on the Jade Lizard. Okay, let's talk about management of a losing Jade Lizard.
It's the put. You basically have a short put. So however you would manage a short put is how you manage a losing Jade Lizard.
Right, because you could watch this, right? I'll take this call spread off. That's 3 cents.
Yeah.
Right? So I'll take the call spread off. That's nothing. And then the long put we bought to release capital or to make this a less capital-intensive trade.
No, what did we take in here for $1? We took $1 in. You could take this and roll this through earnings and see what you can get.
Right. So I'm going to sell out our long put and take that 33 cents. So I sold out. I bought back that short call spread. I'm selling out this long put and wait for it, trying to fill, just to get that extra 30-something cents. And then what we're left with, because usually in a Jade Lizard we don't have the extra long put. So what we're left with is this in the money losing put. That's what we have to manage.
A short put, right? So we're ignoring the long call right now because the long call is defined risk. The short put is the one that could hurt us a little bit more. So if you want to take that, it's got 10 days left. It's still got 120 cents extrinsic value. Is that correct? Yes, ish. It's 115 and 130. Okay. And you can take it out in time.
So roll it out. I mean, how do we manage a losing short put? Roll it out in time.
Yeah.
So we'll go from the 83 put out to November, regular 45-day November, and
you can all the way go down to the 80.
We can go down to the 80. We take in another $1, and then we're improving our strike from the 83 to the 80. So our cost basis, instead of having to buy Starbucks at 82, we're buying it at like 78.
There's a low rumble going on right now. Something's happening.
Well, that's why I heard a bunch of noise. I glanced up thinking SPOOs would be down in the 30 handle, but they're only down 26.
No, they actually rallied back to only down 20 a second ago. But there is something going on, and you can tell.
As far as orders, I see October 6,600 puts, October 6,450 puts. October 6,700 puts. Looks like some put buyers out there. People are starting to get nervous.
I just wanted to see what
want to go to the most active?
No, I was looking at news.
Okay.
It said the S&P 500 stalls or falls as traders await more progress on ending the shutdown. I mean, apparently the shutdown's been great for the
right. I saw a news piece that the shutdown is actually bullish for the market. You don't have any numbers to mess with the market.
You don't have any numbers. And then do they all just come out at once then?
I don't know. Shutdown's over. Here are all the numbers.
Here, PPI, CPI. What is Glenn going to do on Thursday if it all comes out?
Thursday we have Glenn. Speaking of, if we could go back in the platform. Speaking of, I want to take a look at our FX positions.
Yeah, let's take a look at our FX positions.
Oh, and we never finished Starbucks.
Oh, yeah.
Oh, sorry.
You didn't roll it yet?
No, we lost track.
Just roll that, because we know what we're going to do. We're going to roll that.
Okay, here. Oh, here.
Go on.
Our Japanese yen, FX, our U.S. dollar, Japanese yen is gone. We only had a GTC to take a winner. We did not have a stop loss, so we took a winner in that.
And we were close to it. We were very close to it, so that's good.
And I'll look at what it did, how much it moved. So USD, JPY, trade page,
chart.
Yeah, you got to hit trade to get the chart. There,
look.
Yeah,
there you go.
Look, there you go. So Glenn was right, just took a little longer than we thought.
Yeah, the trend is your friend in the yen.
Yes, the trend is your friend in the yen. Okay,
so by Glenn's, the trend is the friend in your yen. There's 3 days right there.
3 days up.
You're supposed to put it back
on the heels of 3 days up. We had 3 days up, 3 days up. We got out for a win. Maybe I'll wait for a couple, 3 days
We're gonna wait
down,
for Glenn.
and then we'll get back in.
We need our FX handler to get back in.
Wait, I want to see like what let's take a look at Euro USD, what that is doing.
We have a position in Euro USD.
I just want to see what it looks like, what's doing here.
It's staying there. Yeah. So he was saying, trend is the friend in the yen. Euro, do the opposite. Whack it.
Whack it. I forgot what the saying was. I know you had something clever.
I don't remember.
All right, I have to go back and finish this Starbucks roll. So I'm going to roll the short 83 put to the short 80 put. We're taking another credit. So I took in a credit for selling out that long put, 33 cents. Then I'm going to take in another credit here, $1.07. Then, okay, we're filled, and now we're out of the money. And should I, Liz, take in this 60 cents and just get rid of this long?
Yeah, we got a short put. We've got enough credit for it.
Right. So then I'll take in another 60-cent credit here. Not saying that trade is a winner. It's not. It's a loser. It's an in-the-money call, but it's only worth 60 cents now. But we will have... Then we'll have that short put, and it's, like you said, a decent amount of credit, $300 and something.
Yeah, that's pretty good. I'm pushing them out on both sides.
Well, I'm trying to get filled on this.
You did.
You think so?
I just pushed it out.
Okay. Okay. So now...
I hope you did.
That mess in Starbucks is just one short out of the money put now.
Yes, it is. And that's okay because we took in enough premium for it.
Now, we're net down on the original position in Starbucks, but if we take in 50% on this, we make... $180 in this, and then the next month maybe try to make another 180. If we can keep chipping away at our Starbucks position,
that's all we can do as option traders. Not everything is going to go your way at all times. Like there will be winners and there will be losers on everything.
So and then that's cleaned up. So what looked like a big mess is cleaned up with just an out of the money put. Easy peasy.
Easy peasy lemon squeezy. Yep.
And I'll put in a GTC for 50%.
Yes, I mean because it's a new trade. Okay, we also have Kai's recap of last week, which we're going to go over, and we are going to take live tweets. Put the hashtag LAZJNY, and if you can't get on Twitter, Frank the Great will put the hashtag on for you because he's awesome.
Close profit 50%, and here we go, $1.80. Oh yeah, sure. Right, here we go. Here's our Twitter. Anyone with this hashtag LAZJNY, that's what we're taking a look at.
And Frank put one in, too. That's the only reason I said that.
Okay.
It's on top of Florida 7. On top. Yeah, if you go on top.
Yeah, I feel like.
Oh.
All right, Frank the Great. This is from YouTube, Slip Streaming. Liz and Jenny, what's your favorite device to trade on, laptop or desktop, PC or Mac?
Mine? Mac.
Mac.
Mine's
yeah,
a Mac.
I mean, I just like this. This computer is what I trade on, and
That's a Mac.
I have. But I have downloaded the. Like the downloadable version. I don't use, some people use the other version.
Yes, my son uses the other version.
He does?
Mm-hmm.
Why?
And so does my father-in-law.
Why?
Well, if you ask anybody at our office, they say it's
all
better.
use the other version.
They say it's better.
Yeah, they do.
I'm a creature of habit. I like what I like.
Like this version that we're logged into here that you see on the show, that's what I use.
It's the download. That's the downloadable.
The downloaded version.
Yes. Yeah.
So, yeah, that's it. I mean, this is it. And my dogs get so excited at home when they see me carry this little Mac to the couch and bring my little. I have my son bought me a little like computer to sit on. This way, I sit on the couch, one dog on one side, one dog on the other.
Oh, that's sweet.
And make my trades. That's my True 30 to 3. But now I'm going to be on last call. I don't know what's going to happen.
Just bring your computer down. We want to see your setup.
On last call.
Yeah.
I don't know. I don't know how that lighting's going to look.
That's pretty funny.
All right.
Okay, we'll keep going forward. Florida 7, I love this question.
Okay, using the newfound Zebra Fold trade, I like the name Florida 7, putting a modified Zebra trade around an existing long stock position on a high dividend paying stock, VITO as an example, you get the advantage of the Zebra if the stock appreciates with the limited downside and the dividend.
I love this. That's one thing we never thought of when you were doing that, but you do. You get the dividend, you get everything.
You get everything.
You get it all.
I will say with Zebras, because you have those two long 70 delta calls, and the one short 50 delta call, as it's getting close, when the ex-dividend date is coming, I would pay attention to that, because if you have your two long calls, and there's less extrinsic value in those calls than the amount of the dividend, well, if they're yours, you're long.
You're long,
you would
long,
be
long.
You would be the one to exercise. So at that point, I would probably move it out in time. Move your zebra further out in time.
With a regular zebra.
Yes.
Yes.
Yeah, just like the same exercise we do with options and a dividends coming. With dividends going X next day, take a look at the options, see what the extrinsic value is. You don't want to keep it on if the extrinsic value is less than the amount of the dividend.
That is correct.
Long or short.
Yeah, but our viewers do know that when you're trading options, you kind of need to understand that. But it is true. The zebra full does let you keep the dividend.
Right, you have the stock.
Yeah.
And honestly, Florida 7, when we saw this, we were like, BITO, high dividend yield, and we looked it up. And I'll go to the platform here.
This was shocking. I did not know it was going to be this high.
Okay, BITO, if I go to the overview here and take a look at the dividend, it says 43%. So we did a little research, and it's not always that high. It's unpredictable.
Because something about a futures roll,
Here,
right?
I can read you my findings.
Okay, hit it.
Okay, so this says BITO's high yield is not a traditional dividend from company profits. Instead, it's a variable distribution based on the fund strategy of investing in Bitcoin futures contracts. When BITO rolls its futures contracts, selling expiring contracts and buying new ones, it realizes the gains and then distributes that income to the shareholders. It's variable and unpredictable. And so when we talk about the roll, remember how Dan the crypto man would talk about the futures roll and how that would kind of move the
yeah. It kind of reminds me a little bit of natural gas or CL.
Yeah.
Where if you're looking at that futures roll, they're different. They're different
prices. The futures are different.
And they have to take so much and move them in little bits as they're keeping this product alive. If it's Bitcoin futures.
So anyway, as far as BITO, that 43% dividend yield, it won't always be that.
No.
But
I want to say thanks to Florida 7 for bringing it to my attention. I have no idea. But we also kind of...
Liz is like, how much capital do I have left? All in on BITO?
No. Yes. Because I had no idea, but I've also known we always lean towards IBIT instead of BITO, but we didn't know why.
I just remember hearing...
Something had a drag, and I remember being like, one of these has a drag, and I kept being like, I think IBIT has a drag. You're like, no, I think it's BITO.
I think it's BITO. I think it has. Again, do your research, call your brokerage firm. I think when BITO came out, we heard some people say like, oh, I don't know, and I think because it's tied to a future, it could have that drag. Oftentimes, products that are tied to a future has that type of a drag.
It does.
Okay.
I was just going to look at October 1st to see if it was down by 50%, but it wasn't.
If what?
You know how the stock is decremented by the amount of the dividend?
Well, it's not good. It was only 78 cents. The dividend was only 78 cents.
I know, but why does it say 43%?
I mean, it says dividend, 76 cents.
And then it says 43%.
But that could be like the annual. That's the annualized. Like if it's a monthly.
If it thinks it's every monthly.
If it thinks it's every month.
Then that would be.
That thinks it's every month. So
and
every month.
It's a $20 product.
It must pay a dividend every month.
But it must be, so it moves every month.
Right. So if it's paying 76 every month, you're looking at
$43.
$9. That's 43% of $20.
Correct. But it's not going to be that percentage. It's just taking that percentage.
What was that? Oh, CLM. CLM is one of those that. This was one of your brother's finds,
right?
Yeah,
but that's got a legit dividend.
Here's 17%.
Yeah.
So could the strategy? No, there are no options. No options. I was going to say that strategy couldn't work with that.
No.
But it's only $8.
No, and that's a weird product.
I know. But you bought it and I bought it, and now we have a lot of shares because the dividends just
keeps reinvesting.
Keep reinvesting and adding more and more shares of CLM. But look at this day. Let me take a look at that.
Yeah, but some of those are a weird print.
Oh, you don't really see that. What it looked like on the overview, you don't really see that here.
Yeah.
But this thing has just stayed in this range.
Mm-hmm.
Okay. All right. Back to looking for trades.
Do you want to go to Kai's study? Let me see what time it is. It is 10:25.
Yeah, you're in charge.
So let's go to, it's 10:25. It's boosted on under 20. They were just 1975.
Okay, good.
Let's take a look at Kai's study, and then we'll jump in for more trades.
Okay. Option Jive, Research Corner. This is kind of a recap of last week and looking at what's to come this week.
And I like this. It's fun to kind of take a look because it gives us the numbers of what happened, and we can review and see what's happening now. Now, this is done on a Friday, so that's what I like about it, is we can see like what has come about. Because I'm going to guess after yesterday's move, we were up a lot yesterday.
How much were we up? Yeah, we were.
25 at the end of the day.
Hence my, getting those SPY puts, thinking we were going to come down today.
You were right, just early.
Well, I was right, but then...
Right and wrong.
Right and wrong.
Every trade's a winner and every trade's a loser. And the best you can hope for is to close it. It's close it at the right time. Okay, so let's go to the next one.
Okay, let's see. What do we have here? Hold on.
There you go. You got rid of it.
Government shutdown started October 1st.
However, so we're on day 7.
However, the market was up every day. Key economic data, including PMI and consumer confidence, either matched or came in slightly lower than expected.
I thought we didn't get them.
Important jobless claims report was canceled.
Okay.
Jobless claims report.
And I think going forward, everything is canceled. So that's interesting because we won't get the data.
Yeah,
or the meetings. Or the government paychecks.
I don't know. I'm not. Someone let us know when. I don't know when this is going to end. I don't know what the prediction is.
So I heard this morning that in 2003, whatever the last term he was in was, it lasted for 16 days.
Oh,
today we're on day 7.
Day 7.
Yeah.
Okay.
They said they start to feel the pain. Once again, this is the news station. They start to feel the pain when government checks are due, meaning paydays for things. So right now it doesn't matter.
Did you see Vanetta shared something on Daily Dose yesterday, and it was basically like these states are in a recession.
Oh yeah.
And it maybe looked like a decent chunk of states, which I would from what I see, I would kind of think that.
I think so too.
Yeah.
And the other ones weren't.
Right.
Yes.
Right.
We're in a recession.
We're in a recession. I'm going to go to Indiana this weekend. They're
not in a recession.
I'll let you know if things seem different over there.
Recession? Not recession. I want you to stand on the state line. Recession? Not recession. That's funny. Okay, next one.
But, I don't know. And honestly, we go to Disney quite a bit, and we're going in a couple of weeks, and the lines have not been long. It has not been busy.
Yeah, that's crazy.
Yeah.
But kids are in school.
I guess. Well, not little kids. Not preschoolers.
Well, if you say school, they're in. If you exit it with school at the end.
Not the preschoolers. The preschoolers aren't. Okay, here we go. What's next? Week ahead highlights.
Private sector data will replace government data. Okay.
Oh.
So the beginning earnings season, I think Delta and Pepsi are today.
Oh, good. Something to do.
Today, from 2:30 to 3. You can see
last
this
call.
right
I honestly don't. You think they're today? I don't know if they're today, but they're this week.
Okay. Check it out. I think they're today.
Here we have the index weekly performance, week of the 22nd versus the week of the 29th, and you could see last week up everything up. S&P up, NASDAQ, Russell, Dow Jones, everything up by quite a bit.
By quite a bit last week, yeah.
Yeah.
So that's been and we got the continuation of it Monday. So everything was up last week. We got the continuation yesterday. So that's why I kind of like looking at this, seeing how the rest of the week is shaking out.
So I think there was, are you surprised with everything up last week that the VIX was still, in the 16? Let's take a look at. I'm going to take a look at where the VIX is. That I would think the VIX would have been lower, maybe in the 15 handle. But we got VIX 1685, and last week it kept its wings up. If I could zoom in, I'm going to zoom in. You could see, kept its wings up, even though we were up even though we were up on the week.
Yeah, and that's concerning. It's not really. I think the VIX is a tell. It was unchanged when the SPOOs were down 10. Remember? Mm-hmm. Now the SPOOs are down 25, and we're up. But we're up 50 cents. I guess it's a big move.
I don't know.
I am surprised that last week we were up so much. Not up so much, but up 1%.
I guess we had that one day because with the one day that VIX popped, with the one down day where VIX popped up.
Yeah.
October 1st. Oh, I missed it. I was at the golf conference. You had TP on. Was the market crashing?
No.
Oh, and TP was on?
No. No, it was not.
VIX popped up to 17.
We were looking at it. The market was down, but it wasn't.
It wasn't. Yeah.
Yeah. Nothing of Nothing to remember. I think there's a fight. Nothing to remember.
Fight?
No, just like argument. Go on, keep going.
Do you see my face? A fight?
She's excited. She wants to get in there.
All right, expected move, weekly expected move. So we're looking at SPX this week compared to last week. Last week, plus or minus 78.
So that's what we're saying. The VIX is what the expected move is. So they've got it. You know what I mean? So the VIX is 16, the VIX is 15. You're seeing a higher VIX and a lower expected move last
But
week.
it's weird because like we're down 24 now, but yesterday we were up 24. So net we haven't moved.
We haven't moved.
We haven't moved. If you look at the last couple of days, we haven't really moved. What we're down today, we were up yesterday.
Yeah, right now.
Yeah.
We'll see how the day ends, but we haven't moved. So let's take a look. So that was last week's expected move. So I'm going to
78.
go into today's, like this week's expected move.
So,
which would bring us to October 10th. And it was 74.
Take us to the end of the week. Now we're looking at 61, plus or minus 61 between now and the end of the week, which is really nothing.
It is nothing.
I mean, $20 a day. Wednesday, Thursday, Friday.
Yeah.
20 spoo coins. They asked me to go speak at the stock market club, and I was thinking of teaching...
After your wonderful picks?
After my great picks. And I was thinking of just teaching them, like, lingo, trading floor lingo.
Oh, that's a good idea.
How, people in the Gen Pop talk about the Dow, and we don't.
Yeah, that's a good idea.
We talk about, we refer to the spoos
I feel like Lily could give this speech. She knows what the VIX is. The VIX is, you could teach them what the VIX is because I think a lot of kids probably don't.
Right, yeah, teach them about the spoos, teach them about the VIX, teach them how to trade 0DT SPX.
We're going to teach them that.
I'm going to teach you kids how
You're going to teach them the zebra foul, full. You're not going to believe this? Buckle up, kids.
I mean, all I asked the teacher was, do I have a whiteboard and a marker? That's all I need. Whiteboard and a marker, please.
I think language is good, and you got to teach them. I think kids love this the best. I mean, they're teenagers; they're not little kids.
Yeah.
But why bulls and bears?
Oh,
you know this.
yeah, the bulls and bears. Right.
Okay, so for those of you just joining us, it's because...
yeah, maybe we want to go on full screen for
because
Liz's demonstration and description.
So the Bulls and the Bears are Chicago teams, and the reason is because of the financial markets, and it's the way they fight. So then, like, if you say you're bull, it's because bulls go like this when they fight, and bears go down when they fight. So if you're bearish, you're fighting down, and if you're bullish, you're fighting out.
So hence the Bulls and the Bears. So
are you going to do the visual when you go to the club?
If you're a bull... If you're a bear,
I think I got it. I think I'm ready for the stock market.
Yes, that is a true fact, and that's why the Chicago teams are called the Bulls and the Bears.
I will tell that story.
Yes.
Excellent.
Yeah.
Maybe you want to.
And then you'll be like, and scene.
Maybe you want to save that for our next road show. Make a mental note. Make a mental note. We can add that to our.
You can come in dressed as a bear. I'll come in dressed like a bull.
That's a good idea. Actually, that's not a bad idea. Okay. All right. Let's go back to the research corner, or the option jive, and moving on. Major assets IVR. What changed last week?
Do you know what we haven't looked at this week? Bonds. I'm gonna take a look.
It says bonds. The IVR didn't change at all.
I know. What handle do you think ZB is in?
17.
1623 right now, but it's almost 17.
It's 16. You get to 1632. You're at 17.
I know.
It's not 99.
You're close. You're close. But yeah, 16 handle. That's usually where we don't mind getting long, but the IVR is not up.
No. I want to get long at in the low end of the 16.
Yeah.
handle.
No, I know what you mean. But the IVR is very low. It's got a 5 rank right now.
So when we look at this, when we get this page, what I do is look at the green arrows. Where's their green arrow? A big boost in IVR, and then look for premium selling strategies in those. So we've got crude oil, natural gas, Bitcoin. Euro.
I'm surprised gold is down.
Gold's down. I think maybe it's settling down. Maybe people think gold 4,000. That's it. It's just gonna hover around.
Well, that was last week.
Right.
It's got an IVR of 43.
All right, pick one from here, and we'll go look for a trade.
So you see what I'm saying? Gold has an IVR right now of 43.
And it's down.
And it's down.
It must have been much
higher.
It's
over 4,000.
Right, but it was down last week.
Yeah.
I don't mean gold's down. I mean the IVR.
Yeah. I was like, oh no, it's up.
All right, so here.
Well, we're in natural gas. I wanted to take a look at MCL because we got into and out of our MCL. That's the crude oil position.
Let's look at that. I know we had short points we got out of it, but maybe we get in with a strangle.
We'll take a look. We'll see what it did. Because I feel like oil was down.
Is it down? No, it's not really moving. So yesterday, we had this little pop. Oh, yeah, because look at this. What would you call that? Maybe a spinning block? No.
I
So
don't
you barely see this line.
We
There's
still have to contact Tim Knight, so I'm trying to. I will reach out to him. I don't know if it's going to be today.
No, we haven't talked to him.
But maybe tomorrow.
Maybe we can get him on tomorrow.
Yeah. I'll ask him.
We'll see.
I'll text him after the show.
Okay, and my favorite story, and maybe I'll save it. I'll save it for a day we have Tim Knight on.
Yeah.
My favorite Tim Knight story.
Yeah. I think we should save our Tim Knight stories.
Yeah.
Because we're going to be a friendly host to him.
Yeah, he'd be happy to come on our show.
Yeah.
I mean, we'd all
We'd
have a
be
good
happy
time.
to have him.
We'd be happy to have him. He'd be happy to come on. We'd all get along. Okay, so way down here, I know we got out of our puts. Let me see how far out in time they were. Activity.
We just got out of them a couple days ago.
We just got out of them, I think, yesterday. Yeah.
MCL? No, it was 2 days ago, wasn't it?
And it was the 41 days. It was October 6th. It was yesterday. I hesitate to put something right back on.
No, I don't want to put it back on, but let's just see what the price is right now.
We got out of the 57s.
The 57 regular Nove.
Yeah, the 57s. We just bought them back for 99 cents or something like that. Right here. Yeah, 99 cents.
Yeah.
I mean, they're right there.
They're right there. That doesn't change much.
I guess we could change our trade. Instead of keeping those, we made a amount on that. Instead of keeping those, we could do a Jade Lizard and sell the 56 put and the 66-67 call spread. Gee, are you surprised you get nothing for the call spread?
I was thinking big lizard in it.
Big lizard?
Because it hasn't moved much. It's not like it's going anywhere. It's kind of been I shouldn't say that. Those are
the famous last words. It's not like crude oil is going anywhere.
That's the kiss of death, because it can go negative.
Okay, I'm going to go...
You can split it a little bit. Maybe go 61,
well, with
62.
It trading 61.76, I was just going to go the 62.
Well, I was going to say 61 put, 62 call spread. Like, you can kind of split it up a little bit.
Sure. 62.64.
Yeah, there you go. You got $2 wide.
65.
Whoa.
$3 wide. That's not bad, and it's only using $900.
I know, and look at where your break even is. It brings your break even all the way down to $57.75.
Not far from the put we just bought back. Big Lizard. Taking advantage of that boost in IVR.
It's got a boost in IVR. Now, granted, the IVR is only a 19. Gold's got a 43. We should look at this in gold, too.
I mean, kind of afraid of the puts in gold, honestly.
I'm more afraid of the calls, and we avoid
I'm afraid of both sides in gold.
Yeah.
Like, gold is a wild maniac.
Gold is...
It's a wild maniac. I don't want to... I'd rather do the Big Lizard and the crude oil. Yeah, look at that. $991.
Yeah, let's do it.
Okay. 327. 325.
See the trade ideas we get from Kai's Research Corner?
Oh, I love it. We're getting $325 using $990.
And I will tell you, because it's a Big Lizard, we're going to take our bar gets real low, and it's quiet.
It's quiet. Like, you would think SPOO's falling and it'd be loud, but SPOO's down 35 and it's quiet.
Yeah.
Well, those SPY puts.
Are all the numbers coming out?
I'm going to talk about it the whole train ride home.
I know you are. That's okay, because I'm finally calmed down. My blood pressure is normal.
Housing issue. College housing. College housing is the biggest ruckus there is today.
Yeah.
I mean, it's ridiculous. Where these kids have to sign leases years in advance to get a decent house.
Correct. So
it's
yes.
Crazy.
Nonetheless, it's my first rodeo. Jenny was calming me down. She's like, it's fine. It's fine.
He'll find somewhere to live. Liz was trying to bring him home.
I am bringing him home. I'm not bringing him home.
He'll find somewhere to live.
Yes.
Yeah, it'll be all right.
Pam's dreams will come true.
He'll survive. He'll survive. We all survived college. He'll survive.
I know.
I mean, think about what we lived in.
Yeah, but my parents didn't have control over me.
Exactly. So when we were in college, I mean, I lived in this house that should have been condemned. It was so terrible.
Oh, I know. Mine too. You visited our Red Door house.
Yeah. I mean,
I think it should have been condemned because of the people in it, not because of what the outside or the inside looked like in my house.
No, I mean, ours was falling apart. Windows, roof, stairs, everything falling
apart.
Ours
was beautiful. Do you remember it had that, like, I'm using beautiful, I'm making fun of it, that beautiful floral wallpaper everywhere. Do you remember that in our living room? You'd walk in, we had a pink couch, and we did not decorate it. And floral wallpaper. We had 12 girls living, and the sink was this big. No dishwasher.
I'll post your house. So I feel like Liz's house in college was at least built in the 60s.
Yeah.
Where my house in college was probably built in the 1800s or something like that. Like, it was so bad, so bad. I'll post a picture. I was just there. Lily was at U of I doing a tour, and I took a picture of it. It's still standing.
It is?
Yeah. I'll post it.
I'm sure the residents of that house love it.
So he'll survive. Wherever he lives, he'll
It'll
survive.
be fine.
He'll be all right.
Steam was coming out of my ears, but I'm fine. Jenny calmed me down. She was mad about the market.
I didn't even bring it up, you see?
Yeah,
I didn't even bring it up.
You didn't.
Didn't even bring it up.
You didn't. Okay, so let's take a look. Are you in ZB? Did we get filled? Or not ZB, MCL.
We're working it. We're working it.
Okay.
Okay. I'm going to move on.
We have a natural gas position, so let's take a look at it. Only because natural gas IVR is up so much.
I know, but what can we? There's nothing we could do with natural gas.
No. I think we might have added to it. No, we didn't add to it.
No, there's nothing we can do, and it's too late to add to it. It's up too much.
Sorry, this one's small. It's just a 9 lot. How is it?
Let's hear. How is what?
It's a 9 lot of something.
Yeah, it's a small one. Any big? Okay, let's finish the.
Let's finish this, then let's go in to see if any big orders are trading.
So, like here at this level, in my mind, there's nothing we could do in natural gas.
No, that's fine. We have a natural gas position. We're looking at the IVR. The IVR is 43.
Yeah.
That we are butterflied off. We're hoping for a pullback. Natural gas can go in any
Unless
direction.
we want to put on the upside. Unless we want to do the upside and then try to have it on both sides.
You could.
And so the way we started the downside position in natural gas, which now we have a butterfly,
was a spread. We didn't do the ratios. We didn't do the ratio spread. We did an actual defined risk spread.
Right, where we started with just a, like let's say the 355. How wide was this?
$1, like a full
355,
point.
365. So we started just like this, spread for we collect about $340, and then
That seems a bit hefty.
Yeah, $340.
Do you want to shift it up a little bit?
Well, and then that way, if we want to lock in $50, we have to buy it back for 29 cents.
Yeah.
It's going to be easier to buy it back.
I mean, that is a very, very, very close range if you think it's going down.
Okay. Then 360, 370.
So when I'm starting to the downside, I usually go to the expected move for the cycle and do it. You're within the expected move here.
Well, because we only have 21 days to go.
I know.
That's why.
But that's a dangerous move in natural gas.
Dangerous move.
Just call her Jenny Dangerously.
I mean, so, okay, we're collecting $300, max loss $700, but we locked in $50 on this one. So if it goes up, then our max loss is only $650. I only lose $650.
That's it. I don't want to lose in natural gas to the upside.
Okay, that's fair. So back to.
I mean, I like your idea. I think in concept it was great, but I think it was just a little close for my taste.
My original statement was, where there's nothing to do in natural gas.
There's nothing.
But if you force my hand, I'll sell that call spread.
And then Bitcoin, take a look at that. We looked at IBIT today.
And
we looked at BITO.
We have ETHA. We have ETHA. We have IBIT. We're okay. All right. Copper rallied quickly. Above $5. Price up 7% weekly, top 2 percentile in the past 10 years, up almost 12% monthly. Copper, HG, and this is just /HG.
Yeah, but you can look at COPX.
COPX. Okay, I was going to say, you sure that's not Cops grocery stores? Have you ever heard of a Cops grocery store?
No, where is it?
Well, by my grandma and grandpa.
Oh, is it?
You know.
So this is a copper miner ETF. That's the only reason because I'm in it.
Okay. Not a high rank, and this wasn't on the IVR page, but this is just talking about the move. The move we've had in copper.
Yeah, the move in copper. That's all I was talking about was the move.
Yeah.
Are you surprised that copper doesn't follow the gold? Like, gold's up, IVR's up.
I don't know. Does this even have options? Oh, it does.
Yes.
It does.
They're pretty wide,
Oh,
though.
yeah, look at this. No bid at $1.35. That's crazy.
Yeah. I just wanted to show the move instead of like the
And Tim Knight has been very bullish on
Palladium.
Palladium, what symbol does he use?
PALL.
PALL. Palladium ETF. Now, they do have options. Oh, but I think they're closing only.
Correct.
It depends on the day and how tight their markets are.
Correct.
So, but anyway, he's been bullish on this, and it popped up today.
Yeah.
PALL. So PALL is up, but what was the other one?
PALG. Something like that.
And that's not up.
It's not?
Well, I don't know. Look it up. Tell me what it is.
Hold on.
PALG? No.
It's PLG, I think. Hold on. It's PLG.
PLG. Look, yeah, it's down.
What the He didn't tell us that. He told us PALL.
Well, because so Liz and I were listening to Tim Knight, and we're like, okay, let's get some palladium.
But we wanted a $2 stock.
But instead of paying $122 for the stock, we thought PLG.
PLG.
We thought PLG would be a good idea because it's only $2.
And this is platinum group markets. It doesn't say palladium.
I was, when we were on the phone, I wasn't sure, but I said, all right, well, if you're
platinum is not palladium, is it?
I don't know. Is platinum palladium?
No, I think clearly platinum is down and palladium's up.
Tweet us. Is platinum palladium? So what's the difference between palladium and platinum? Okay. I bet I got to get through this option jive, or we're going to be here all day. Fear has been muted. Weekly top to bottom VIX range is 1.54, a very tight move.
That's what you had said.
Yeah, VIX is just it's not really moving too much.
Yeah, fear is muted. It's very quiet.
And even now, SPOO's down 35.
And nothing.
VIX is 16.
Yeah.
Yeah. 16.19? So, oh no, that's the low today. So current 17.17.
VIX is 17.17. It's up 5%. It's up 83 cents. It's up 83 cents, and it was unchanged when we started the show.
Yeah. All right, biggest S&P 500 movers this week. All I do when I look at this is look for the negatives and see if I can sell puts in any of those products. All your favorite, all the Vegas casinos.
They are.
MGM.
Why are all
Las Vegas Sands?
So are they all down with the DraftKings down with all that the betting markets, the prediction markets that are happening? That's the word I was looking for on the train.
The prediction market. I'm not sure. So you got Las Vegas Sands, MGM, and Wynn. VLO and Oxy. I think those are oil. So
those are all oil. VLO and Oxy are oil.
So is that why?
And then look at all the.
And is Penn Gaming down too? So Penn Gaming, that's.
It's just I just don't think it's as big as everything else. 733K.
But look at DraftKings. DraftKings is another one. This thing
can't stop, won't stop. But you see, Penn Gaming had a K next to its volume, and this is 14 million shares. Yeah.
So it has not been good news for DraftKings lately, and not good news for me either. I came in last place this weekend.
Are you blaming Jamal again?
No, I made the picks myself. I'm in last place. Yeah, look, that's not good for DraftKings.
No, it's not.
What do you do? What is a subscriber to do if they've got short puts in DraftKings?
Well, it depends on if you want to keep your short puts or not. I'm long the stock, and I have a collar around it. I'm letting it go. I'm done.
We have short puts in DraftKings. We do, here.
We just put them on, though. But I think we're okay still.
Nah, I don't know. I'm not sure.
Oh, no, we're not okay.
We've got the 36 and the 41, and it's trading 32.
Let's roll those out in time or do something with them.
Or sometimes when we have a short put that goes so deep in the money, we turn it into a zebra.
Well, I would take both of those short puts and put one zebra on.
Yeah, maybe.
Do you know what I'm saying? Close it, and then if it bounces, because here...
Close these, we're paying a debit, but we're getting out of these. And then we replace it with a zebra.
You can do the 24-day.
So here's the zebra. Sell a 50 delta, so we're getting 180, and then buy 270 deltas.
Ooh, this is a Halloween zebra.
It's $394. Not bad.
No, we just got back $1,300, and you have unlimited profit potential to this point. Now, granted, the in-the-money puts would too, because you have up until where they are. Not unlimited.
It was kind of like we were losing on 200 shares once the out of the money put went in the money. It was like we were losing on 200 shares.
Correct.
Now we're only going to have 100 shares. But $400 isn't bad. And then no matter what happens with DraftKings, that's our risk.
No, that's fine. I go. Yeah, I like it.
So that is a strategy that we use. Losing in the money put, turn it into a zebra. SPOO's down 40.
Yeah.
It's a real kick in the teeth. I'm going to lose on my SPX Iron Condor, too.
I'm sorry I'm laughing at you.
What a day, Liz. What a day. All right, let me try. I got to get filled on this. 4:15.
I've been slacking at my job.
Okay. No, I've been slacking on my job. You want me to push my?
No, I got him.
You got it.
Both sides.
Okay. We have 10 minutes to go.
We have 10 minutes to go. Fast hour of the day, done and dusted. Good news.
I thought you meant, I can't believe we still have 10 minutes. What are we going to talk about?
No, I can't believe. So now 10 minutes, it's gone super fast, but don't worry, you get an extra 30 with me today.
Last call, right? If you didn't get enough of us for an hour here, you'll see us on last call. Okay, I think so. Las Vegas MGM win. What are they? Do they all look as ugly as DraftKings, LVS, or is Nevada one of the states in a recession and no one's going to Vegas?
I think it has to do with the prediction markets, only because I can remember the word now. Prediction markets.
Yeah, I mean they had a big move down.
Not as big as DraftKings.
Yeah. Well, just wait, might be coming. MGM. Yeah, MGM does. That looks pretty ugly.
That doesn't look good. Where's your win? You love win.
I don't go to Vegas anymore.
That doesn't look nearly as bad as DraftKings either.
And I don't go to Vegas anymore. And did I tell you? This has never happened to me before, but I got contacted, and now I have a casino host.
No. That's how often you go?
I don't really. I don't.
Yes, you do.
No, I had to. So that one weekend, there was, Lily's birthday, Labor Day weekend, when I had all these girls at the condo, and the only hotel, like the closest hotel that I could even walk to from my condo has a casino. So I was there killing time for the whole weekend.
Oh, you have the host of the one near you, not the one that you and Mandy go
Yes.
to? Oh.
Yes, they called me.
She's a whale, ladies and gentlemen.
Welcome.
Do you know what? I mean, that's a good, it's good for me to call you a whale in the casino term. It's not for me because you call you a whale in,
She's kidding, but
other terms.
I was surprised.
You are a whale.
No, I had to kill.
They only give them to whales.
No, I just had to kill like a whole Labor Day weekend there while the girls were all doing their thing. They didn't want me around. Now I have a host.
What's his name?
She.
What's her name?
Why did you assume it would be a man?
I don't know. I thought they gave male hosts to females. To female whales.
Anyway, if you need anything, let me know. I'll call my girl.
Oh,
I got a guy.
I got a guy.
guy.
That's so funny.
Okay, biggest S&P movers in September.
We're still in this option jive.
Yes. It's never going to end. It's never going to end.
It's never ending options jive. Okay.
All right.
Look at Royal Caribbean's down 13%. But you look at this. MU, Intel, LRCX, those are all.
Next week AMD is going to be on it. Mm-hmm. AMD will be on the big movers. Okay, Lulu, CarMax, RCL. I don't know.
There's nothing we want to do there.
Nothing we want to do. Because RCL is still pretty expensive. You know what I do want to get into? Well, RCL. You know what? You bring
it's still super expensive.
It's still expensive. $308.
Yeah.
Yeah. Forget it, RCL.
No, I don't want it there. Who's down 40?
Ugh. Painful. Painful day. Okay. What do I think we're done. I think that's it. Here we go. Thursday, Delta and Pepsi.
Oh, shoot.
We're not on this call on Thursday.
We're going to have to do a pre-earnings earnings.
Okay, so I'm going to get to Twitter just to make sure I get to everyone. I mean, Eric Blue Wackadoo, good luck. Good luck to...
Wait, let's see where Blue Wackadoo's top strikes are.
No, the bottom strike's 67.20, and we're trading 67.05. We need a rally. We need an afternoon rally.
I don't necessarily know that we won't get it.
Oh, I don't... we might.
Yeah.
We might. I knew this was going to happen. I've been using MES the last week for my 0 to T trades with success. Have to shout out Liz and Jenny and tastylive for their education on these, growing these bite-sized accounts one day at a time.
I love it, Ashman. Thank you so much.
Yeah. And Frank on the economic calendar. You know, not too much on his economic calendar now. All right.
So he's got all that, but I mean, I don't know if any. Did that all come? Is that all coming out?
Is what?
Is the economic calendar coming out?
I don't know. I mean, that's what I kind of.
This is above our pay grade. We don't know if that's coming out or not.
I don't know what's.
But I don't know if anything's coming out.
We do have some tweets. Steve Jones. Depending on which indicator you view, casino business in Las Vegas is down about 10 to 15% compared to last year.
That's because the whale's not going there anymore.
I don't go there anymore.
They never gave her a host.
Thank you, Steve. No, okay, so Jules, no joke, Jules. So I mean, you guys all remember Jules. I don't know, we can even go on full screen if we want to, Matthew. But Jules from Tasty, he was so big in Vegas, they literally would send a private jet to get him.
Yeah.
They would send a private jet to get him, And then that's when Jules and Tom and who else?
And this is where they came up with they started to try to do this when we would go out for dinners, but that's when they were high rollers. They would literally go to restaurants and order the left side of the menu. Just be like, don't even bring it, just bring us the left side of the menu. Like everything on the left side or the right. You can pick left or right.
So then when we started traveling on the road, that's when Tom got his idea of like, hey girls, look at this. We'll take the whole menu.
I know.
And we're like, okay, well, we really don't want to eat that much, but sure. Let him bring us the whole menu.
We love it. I love the left side of the menu.
So anyway, Vegas would send a private jet, pick up Jules and his friends, fly them to Vegas. They played in these private rooms with some celebrities.
Oh my goodness, do you remember? And John, I hope you're listening, and maybe you could pull this up out of the archives. I don't know where it is, but you know remember the poker?
Yeah.
Commercial?
Maybe we can play that tomorrow.
Sure. I hope we got to find
it later this week.
Yeah, hopefully we can find that later this week, because that's hard. I mean, I'm not going to put you on the spot right now, because it's real hard to pull up.
And it's already 10:55. We're pretty much out of time.
Yeah.
But,
so Jules, she's telling the story about Jules. So Jules and our old producer Tony V are playing in a poker game. Wasn't there a third person, or was it just the four of us?
No, there were extra people in the poker
There was extra people. So yeah, it's a poker commercial. Sure, that's where we get that from.
But they talk about whales that Jules was.
Yeah,
Jules was.
Jules and Jenny. I mean, I never thought I'd say both of them are in the same.
I was shocked when I got the message.
Did you immediately go and meet the whale?
No, I haven't gone. I'm like, sorry, I have no intention of coming anytime soon. I'm busy. Don't have time to come. But I appreciate. Next time I go, I'll call you.
Oh, that's awesome.
All right, what do we want? It's boost down 39.
I know.
Well, one more stop in the platform. One more stop in the platform. Then it's back out in the rain for us, Liz.
I got my hood. All right, let's get back in the platform, take a look. Let's make sure we got to everything. I want to make sure that everything's been pushed out too.
Okay.
So
I will. And ETH down 163. All right.
Today, Bitcoin's taking a hit today.
Today we have SPX. We put on the Jejun. It'll be a miracle if that closes.
Oh, that will be a miracle. What is it? What are we down right now in it?
It's hard to tell. It's trading. Honestly, it's trading 390. So it's still $1.10 away from full loss.
I know.
Do we close it? We could have a rally. We're only down 36.
We're down 36, but we're pretty far away from it. Where's our short strike?
67.30, 67.25. We're trading 67.50.
We need it down 10.
No, yes. We're trading 67.05. We need 20. We need a 25-point spoo run. I don't know. That's kind of it. But I don't know.
So all we have left to lose is $1.50, $1.20.
So look at this. We took in $1.95. If we bought for $4, we're taking a $200 loss.
Just leave it.
I don't know. Yeah.
That's why we risked less than.
Well, here's what I'm going to do. Let's just try
how wide was your iron? I'm not trying to pour salt in the wood, but how wide was your iron condor?
15 points wide. Not that bad. It's not that big. It's not that big. It's not like I'm. Okay. I'm not even. I don't even care about that because I do those trades. I do those trades a lot. I don't even care about that because you're going to have some losers.
Yeah.
But what I'm mad about is that I sold those.
I know you're mad about that.
Okay, so this trade, what do you want me to put in to buy it back for? I'm not going to try to make money on it anymore.
No, I would scratch it.
$2 bid.
Yeah.
Yeah. So it's in for...
Yeah, that's fine. A scratch isn't a loss. Yeah. Right.
Right. And then what's up today?
And the reason you do that is if you get that slight little bounce, that's good. Kroger. Oh, close that.
You think?
Yeah, it's only got 10 days left.
Okay, sure.
That's the only reason.
Yeah. Okay, then it'll be one more thing to push out.
Yeah.
Although these markets in Kroger are a little wide. Yes, they're very wide. We might not get filled on this.
That's a P&L, like a faux P&L.
I don't know. I'm just gonna let me replace this. I'm just gonna put in. Because what do we have now? 21%. I'll put in a GTC to take 25% out of it. And if it gets filled, it gets filled.
Yeah. Well, with 10 days left, we'd be moving it either way.
I know. Okay, that's it. We're done. We're done.
Okay.
We're going to be back. It doesn't matter if we don't get to something now. We're going to be back at the end of the day.
Oh, First time ever. All right, everybody, have a wonderful afternoon. Please tune in at 2:30. Between 2:30 and 3, you'll see the two of us again. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Last Call.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at tastylive, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position.
What is an offer? So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with Jamal and Thomas. This is Westwater Tuesday. We're talking natty gas today. Is it a time to step in front of this thing that just gives us pain every single day?
You know what? I can't say anything bad about natural gas. It's been good to me recently, and I hope it stays that way.
We shall see. We shall see. But as always, Thomas is bringing the heat with natural gas futures. You like that?
I like that.
Market's red. Very rare.
BTUs.
There you go. Bringing the BTUs live. E-minis down 33, NASDAQ down 140, Bitcoin down 3,600. It was down like $4,000 a little bit earlier. Seeing some macro movements across the board. You've got some healthcare products up, UNH up a little bit, Costco's up a little bit, but everything else is pretty much red on my screen here. Interesting to see what's going on over the next couple of days, but down 32 points, that's just outside of the expected move from a day-to-day basis. But we haven't really seen this kind of a move sustained through a day, or at least continued selling. So maybe we get some more two-sided action here. Ethereum down 5%. Bitcoin down 3%, silver down, gold selling off from the highs a little bit, still net up on the day in the futures, but things moving to the upside, natty gas. What do you know? And even volatility seeing a little uptick, 3% in the VIX futures. We've got The VIX futures, the V contract at 18, the X and the Z hovering around 19.20, but the VIX itself up to 17, up 5% today. You're going to see bigger percentage moves just because the VIX is so low, but I need to see VIX above 20. That's what I'm looking for in terms of tradable, two-sided action, continuation of potential sell-offs, et cetera, et cetera.
Well, now you're asking for a lot. I mean, come on. We're down 30.
I know.
This is awesome, by the way. This is exactly what we need. I hope we stay down here. I hope we don't rally back. Seeing markets down, seeing gold down, seeing Bitcoin down, and again, this is just a pullback. I mean, this is not even anything to sneeze at. So I think this is a great thing. I hope it stays.
Thomas, how we doing? How's Westwater Farms Incorporated?
It's good. It's good. We're getting this rain. It's kind of needed. Northern Illinois is in a severe drought. So I think it's the first time it's rained in like 27, 28 days here. Pretty crazy. But right now I'm watching a mouse scamper across the other side of my room. And I haven't seen that in a while. So
perfect.
I got to get on the trapping here.
Yeah. Classic farmer's life, All animals are welcome. But yes, nice to see some rain. It's cooled off, temperatures all around. But yeah, I'm sure people with lawns, farmers, loving to see it.
Did you guys? did it happen near you? The kind of sort of mini like monsoon yesterday, or no? No, I mean near us, it was. I'm west suburbs. I mean it came like around 5 maybe p.m. Started raining kind of hard, and then winds hit, and like there's trees down everywhere around my area.
Really?
Yeah.
Interesting.
It was crazy. It was like maybe 20 minutes.
That's crazy. That did not happen here.
Yeah, usually Thomas has the crazy exposed weather systems. But yeah, I saw it was raining, but nothing too crazy in the West Loop here. Cool. I haven't done anything in this portfolio just yet today. Waiting on some positions. I mean, the Q's hedge is working out nicely with this down move. Again, UNH up 260. It got as high as like 450. I'm still holding on strong here. We've got earnings in about 3 weeks there. I've got the 400, 420 diagonal spread. And if we get a rally from earnings, that could come in nicely. But got to see Costco continue this little micro rally here. We need this thing back up at like 950, 960, something like that. But yeah, gold trying to sell off from the highs. GLD is now net down on the day after opening higher. But gold futures chugging along. Crazy, crazy move.
I did it. Like I told you before we started the show, I sold an MGC contract for gold. I am short gold as of right now. I sold it at 4,005. I figure, hey, we're around a nice round number. Let's just see if there's a sort of a turnaround at this level here. And so obviously watching it closely, but so far so good.
Yep. Love to see it. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to the Tasty Live channel. You can throw in your trade ideas, questions along the right-hand side chat. It is Cherry Picks Tuesday, so I've got the link pinned to the top of the YouTube chat to get your Cherry Picks newsletter for free before it comes out today. So go sign up for that if you haven't already. But yeah, Natty Gas at the lows of the lows the last couple of weeks. We're seeing a lot of green bars, some swift reversals from near-term lows here, and we're kind of hovering around this 345 level. But temperatures are cooling off. This is the first time I've worn a long sleeve shirt in, I don't know, since last year, I think. So what do we think, Thomas?
Sweater's on.
Yeah, I see you've got the jacket on. Nice little pullover. Is this the time to buy?
I think it is. So if you go to the Z contract, which is what I'll be trading mostly, we're above 4 now. So, we're at the level for a technical break. The weather has actually been pretty mild in the United States. But feed gas flows, which is liquefied natural gas, LNG, hit 16 billion cubic feet per day. So that is near record highs, and it's typical to see this time of year, that feed gas going higher, especially since the Ukraine war started, because countries in Europe and some countries in Asia are relying on us more and more to displace that lost gas from Russia. So it's a lot more of a market that is globally intertwined. Just even 5+ years ago, it was really more of a regional based market. Exports were a lot lower, imports were lower for a lot of countries. So it didn't have much synergy between the benchmarks. So between the European benchmark, the TTF Dutch futures, and the JKM futures, which are the benchmark for Asia. So now it's a lot more important to look at feed gas, a lot more important to look at premiums, such as what is the European premium over the US price, what is the JKM premium versus the US price. We'll be looking at a couple of those things in the slides today. And it's shaping up to be pretty bullish because of all this gas that is flowing to these export terminals. And, it's October, so we're a month away from really hitting some cold temps, especially in Europe, and they really need to bolster their inventories. So we can expect pretty reasonably that these feed gas flows are going to continue to rise, or at least maintain above these near record levels.
Yeah, I'm definitely interested to see what we've got today for the slides and what we can expect. I mean, this thing, natty gas is always volatile, but we've had a pretty sustained period over the last month and a half where we're sitting below 4. Now we're above 4. Do we break out closer to 5?
No.
No. Yeah, it's interesting because you can trade the micro natty gas contract. Could bite on that, and you can also look at QG. You can look at natty gas futures. There's a lot of different ways to do this, but yeah, why don't we pop over to the slides, walk through the data, and we'll get a trade on.
All right, yeah, so are we ready for the winter rally? There is a seasonal component, as we know, to natural gas. Demand increases in the winter because temps are colder, people are turning on their furnaces, you're using more energy, and of course the natural gas is the product that provides that energy. So let's go to the first slide. We're just going to take a look at the weather in the United States. So this is for October 14th through October 20th, so kind of the mid to later part of October. This is the one from yesterday. I think the one for today will come out shortly. But what we're seeing, and we're especially paying attention to the northern or the northeast corridor and the East Coast, where a lot of this energy demand is concentrated. We're seeing the chances for above average temperatures. That's not necessarily, if we looked at this chart in July and saw this, that would be very bullish because it means very hot temperatures, a lot of people turning on their air conditioners and things like that. Right now, it's not that bullish for just this temp outlook, and that's because temperatures average, say New York in the 60s right now. So this probably means you're looking at temps in the 70s, so relatively mild October weather. So, people are probably going to have their windows open, things like that. There's not going to be a huge demand spike from this temperature. And what we're going to want to start to see in these forecasts over the next few weeks to next couple months is actually you want to see colder than average temperatures, assuming you're bullish natural gas. If you're bearish, you would want to see the warmer than average temperatures, meaning people don't have to use their furnaces as much and other ways to heat their homes. So, it looks like a lot of this bullishness isn't really coming from internal U.S. demand, and that's where, the feed gas comes from, because that is going to those export terminals down in the Gulf of Mexico, and then they are, shipping those containers or storage shipped to Asia, Europe, and things like that. And interesting, when you store natural gas in those tankers, you're pretty much super chilling it to a very low temperature, and it actually condenses the volume down to a 1 out of 600th. So by 600 times, it shrinks. So you can fit a lot more onto those ships. And then, they have those regasification plants where those the gas will then be converted back into the normal natural gas. Let's go to the next slide. All right, so this is pretty much a regression analysis, linear regression. It's just showing the correlations and the percent of how it affects U.S. gas. So the chart on the left is the natural gas versus the U.S. premium. You see as the European gas premium rises, so does the natural gas price. And that's why you see the right and upward sloping linear regression line there. So you can expect to see if this European gas premium increases, you get higher natural gas prices. And it explains about 14.5%. That's what the R squared value means. You could say that the European premium explains 14.5% of the US natural gas price. For Asian premium, you see the same thing, a slightly stronger correlation. And then you see the R squared value, meaning it explains about 16.5% in the US price. Now, this data is ran back to 2008, circa 2009, somewhere around there. What I found, though, just by going through the data recently, is those R squared values, if you look at them just for the past few years, are actually in the 20 percentiles. And that makes sense, right? When we talked about Ukraine happening, Europe and Asia are more reliant on U.S. natural gas. So those R squared values actually higher than the traditional average of going back a couple decades. So it's just important to keep in mind when you see or you look at the premium of these European and Asian benchmarks, you want to see them going up. And as we go into November, I assume that you're going to continue to see some strength in those premiums, and that will keep the incentive to ship natural gas overseas in place, which is a type of demand. So it's strengthening demand, and you expect higher prices from there. You also, of course, want to see U.S. weather models shift to that colder side as we get into November. It's not really too important in October, but once we get into November and especially December, January, you do want to see those, again, assuming if you're bullish, you do want to see those colder than average outlooks. Let's go to the next slide. And this is just a model that pretty much takes these values from what we just looked at, and it models where the price would be. So actually, the actual U.S. price, which is the green line, we're seeing that is higher than the combined model, which is the combined European and Asian benchmarks, their traditional correlation. Again, this is going back more than 2 decades or about there. So you're seeing that this could be skewed by pre-Ukraine war and post-Ukraine war, but actually, if you were bullish, you'd want to see, at first look, the combined model higher. But I would posit that going into this demand season and going into what looks like a year where Europe will have to import a lot of U.S. gas, probably near or above a record amount, that actually could be bullish, because as we see these premiums go up, the combined model is undervalued. So maybe we get even stronger upside in the actual price. That's one way to look at it. Everyone can have their own view on the relationship between them. But overall, I think combined with this technical break above 4, in the Z contract, it sends a pretty strong message. And it sends a message to shorts also to start covering, especially, if you have a large short position, if you're a fund or even an individual trader, you say, hey, it's October, we're going into November. The short has kind of paid off through July and August and even some of September. So why not take those shorts off now? because it starts getting riskier and riskier the deeper we go into winter. So, there's a decent amount of IVR in natural gas. There usually has been recently, unlike something like crude oil, where it tends to get down into the 10, 12 range from its 20s and 30s that it usually trades in. Natty gas still offers good volatility to trade. So if you want to sell a put spread to play it in a defined risk way, you could look at some technical levels, or you could even go by the delta or anything you want and kind of say where would the pullback stop? So maybe for the current contract around 3.1, 3.2 it would be. For the Z contract, it's around, for me, and everyone's going to have a different way of looking at the technicals, it's around 3.6, 3.7. So yeah, that's my whole outlook on the natty gas market for now. I think the long makes more sense than the short. Not to say there won't be a short-term pullback, there always can be. But if you're going on a multi-week time frame for the trade to work out, where we start entering November, I think it makes sense. Some things are lining up here, so it looks like a good play.
I like it. So I'm gonna do something a little crazy here.
What?
So I'm gonna get long the micro and natty gas contract, the Z contract. I'm gonna buy that at 40.91. See if I can get filled here. It only takes $500 in buying power.
Mm-hmm. Nice price point.
Yeah. So yeah, 40.93. I was just filled at in the micro natty gas in the Z contract. So
I wonder where they come up with some of the nomenclature. Like, why do you have QG? Like, what's the Q for?
That's a great question.
Thomas, any idea? It's not a trick question. I really don't know.
Yeah, I'm not sure. I'm assuming the G stands for gas in some way. The
Right.
Q, not sure. I usually don't trade the QG. If I'm trading, an outright future, it's usually the MNG.
It's another one. Yeah.
Yeah, MNG is your 1/10 the size. But what I'm going to do here is I'm going to sell a natty gas short call spread against it. So I have the micro natty gas contract at 40.93. I'm going to sell the 4748 short call spread in the same contract, the same Z5 contract in natty gas. I've got this routed for $200. So if we rally all the way up to 4.8, the gains in my micro contract will offset all of the risk in the natty gas. So it's kind of like a Jade Lizard setup, or like a covered call setup, I guess is a better way to describe it, where all of my risk in the short call spread would be offset by the gains in the long, but I'm still reducing basis a little bit. And this natty gas short call spread is just at the upper bound in the expected move. So, yeah. A little combination trade.
Works.
I like it.
Yeah, I'll bring it down to 190. That's it. No other adjustments for that one. But yeah, I'm already long the micro natty gas. Let's see if we can get the double fill here. What position do you have on Thomas? Are you waiting to see a pullback?
I'm going to sell a put spread. Looking at doing it somewhere around 3.8, and it's pretty much your risk 1 to lose 2, around there. And I'm going off the view that we'll go higher, but technically I'm kind of setting the short put at where technical support could show up on the recent rally.
Love it. Yeah, you can get in the Z contract 48 days out. You can do the 3837, collect 380 to risk 320. You could do the 38375, get smaller, collect 200 for 300 risk, and anywhere in between. Even the 3435 still has decent premium, 220 to risk 780, or if you narrow it, 120 to risk 380. So plenty of opportunities there if you want to just sell a put to the downside. I went with a similar idea with the long micro contract, short the call spread, not filled yet, but hoping to get filled in the next 20 minutes or so. We'll see.
My approach remains the same. I've talked about it before, but for those who didn't catch it, I'm short of strangle. And natural gas, I'm short in the Z contract. I'm short to 320, 510. So I am just kind of, if anything, I would, obviously milder temperatures cause this thing to fall some. I don't necessarily want that per se, but I feel like I'm more worried about obviously a cold snap, which we see the way it often reacts when a cold snap comes around.
Yeah, definitely high return on capital there. $1,200 as it stands right now. Really wide range though. If you look at where we're at on the curve, 3.2, 5.10 is very far out. So yeah, love it. Let's see what we can get out of this thing. Someone else in the YouTube chat was asking about live cattle. Any thoughts there? Screwworm still alive and well?
Yeah, I mean, it's still coming. The headlines have been a little bit lighter about it recently with all the other stuff in the news, kind of, but it's still a threat. The thing is, live cattle had priced in a lot of this threat, right? All the way through July and August. It really rallied from 208 all the way up to 244. So pretty substantial move there, 25% around. And now we've been kind of carving out this range. We went down to 230, got back up to 242, and now we're 236. So kind of trading near the top side in the middle of that range. Technically still sound, we're holding above the 50-day moving average. We, tackled that last week. We held it. We moved higher yesterday, and now we're back above the 21-day EMA. I'm personally, the position I have on is a short put spread at 228, 229. So 236, we're about 7 above that. I'm going to let that ride a little bit. The position has about 40% of its max profit right now. I'm going to wait until I get around 50, 60%, and then I'll probably take that off. What I wouldn't expect right now is some kind of, a huge extension of the prior rally. I think right now what's going to happen is, a lot of this threat has been priced in. I expect sideways movement to continue for a few weeks, a couple months maybe. But I think a lot of the gains for the year are probably, mostly baked in at this point.
I mean, screwworms, what are those, like heartworms or something like that? Something along those lines?
The New World screwworm is, it's a type of worm that if there's a wound on a cattle, it kind of goes and plants its eggs in there. And it causes a lot of harm to the cattle. Can cause death, I think, in about 30% of cases. So it's quite devastating to the U.S. herd, and that's why earlier this year we stopped imports of beef from Mexico. We didn't want to bring in any eggs or larvae from those animals that are imported. The thing is now they're setting up stations that produce sterilized flies, and those pretty much overwhelm the population to where the mating goes down substantially, and it's a way to combat the spread of them.
I hadn't looked at this much. That's why I'm glad to be on here with you guys now talking about this. I mean, what was up with this massive rally in the summer, essentially, the July through September?
Yeah, that was the screwworm. So it started down in Central America and then started working its way into Mexico. That's when people started to get, a little scared that this thing could eventually make its way into America. But just stopping those Mexican imports also had, an upward effect on the price.
So I just got into a 30-day iron condor here. So I went to the LEZ5 contract, 31 days out, November, and I sold similar spread to where you are at. I've got the 230, 228, and then I sold the 245, 247, collected $300 for this, and the risk is $500. So kind of a chicken iron condor to play into what you've said, where maybe we chop around this range. The strikes cover the downside we've seen and above the all-time high we've seen in here. So nice range over the next couple of weeks. If we just chop around here, it'll be a nice trade. And both of these settle to the Z contract. So if you wanted to do like a diagonal spread or calendar spread, the 59-day and 31-day both settle to the same contract. So you can do that as well if you wanted to.
Yeah, Mexico did report that Nuevo Leon, which is the state of Mexico that borders Texas, they do have a case there now, identified case of screwworm. So they're definitely making their way northward. We'll have to see. I imagine this will find its way into Texas. We'll have to see how the prices react when that headline comes out. But I wouldn't expect a sell-off to occur with this going on.
Is there any way, Thomas, like that people use any type of corn or soybeans sort of trade to hedge any cattle trades at times? Is that a possible thing?
I mean, yeah, you could do that because corn is used as a feed for cattle. So it's kind of like an input cost, right? So corn gets a lot more expensive, which it's not. It's pretty cheap right now compared to historical norms. The feed is cheap, so that's not really increasing the input cost through that factor for cattle farmers. So I'm not sure. I haven't looked at the correlation between corn or feeder cattle and live cattle recently, but it'd be interesting to see if it has changed recently.
Mm-hmm.
Yeah, I think live cattle, this run up and sustained. I think, like you said, as long as we continue to have cases, I think we sustain this region. But staying small just in case I'm wrong. But I like the ability to cover the entire range we've seen from mid-August ultimately. Any other futures products on your mind, Thomas? Gold, silver?
Well, I got long gold and silver last week, and I took my gold long off yesterday because I was still in silver. Thought, I'd take some gains, reduce my risk to the products since they are correlated. Turns out silver is having a nice little pullback today, so I probably picked the wrong product to get out of, but for now, I'm going to keep it. We've been seeing some of these daily retracements, either to the downside or upside the past week. So this is a sell-off. If I wasn't long silver right now, I'd probably take this opportunity to get long via put spread right now.
Yeah, you could do that. Similar to live cattle, the 48-day and 21-day in silver both settled to the Z contract. Do we dare get into like a calendar spread here?
Do it. I mean, I'm never not going to tell you not to.
Wow, these are expensive. Wow. I guess we'll go to SLV. You can go to SLV.
It's easier way.
Yeah. Maybe a December, November.
Oh, looks like market wants to bounce back.
Yeah, December, November, long call diagonal, buying the 40, selling the 47 for $3. Let's do it.
About half, right?
Buy the dippy. Yeah. Yeah, if we get up to the expected move, which is around 47, this will be like a $300 winner. Yeah, let's see where we can get filled. 325? Gotta be filled. 325, yeah. There you go. So long SLV, buying the dip here, assuming everything just moons. But yeah, E-mini's only down 28, catching a little bid here, intraday. Let's see. What do we got here in the YouTube chat? Any thoughts on copper? Starting to have a little run up. Thomas, what do you think?
I have not been trading copper recently. I mean, the past 2 weeks has been really good. You know, we had this big drop off in I think it was the end of July where the tariffs came out of the equation mostly. We had this huge drop and then you know, consolidated for a little bit. Now we've generally been drifting higher up until early last week. I think it started to really make some upside. We're above 5 now, so you know, technical clearance of that level. I'm not going to get long right now. I think it's had a good run. If it pulls back, you know, maybe pull back to 5, 4.9 around there, I'd look at getting long. It's just it's a hard product to get small on. So, you know, if you could get small in it, I'd probably do that now, but it's just a pretty big product. So you want to make sure you're trading it diligently.
Yeah. Even the 5,499 put spread still has, it's still a $250 range ultimately. So a 5,495 risking 750 to make 500. That's in the 21 day. So yeah, like you said, even at the most narrow 0.01 tick, it's still $250. So yeah, got to stay small in there with some spreads. But yeah, I think if there's a pullback, you're obviously going to get a better price on a put spread, or you can move it down the strike plane. So yeah, I like that. Wait and see if we get a little sell off, and then go on from there. Platinum futures, the gift that keeps on giving.
I haven't looked at platinum in forever.
This is one of the favorites of the trade desk.
Is it?
Yeah.
Really?
Platinum futures. Do you trade this at all, Thomas?
I do not. I do not trade platinum. If it had options, I probably would. But it's one of those things where it's kind of a mix between industrial and precious metal. You know, some people do buy platinum to hold it as a store of value. And it's been, you know, correlated pretty well with gold recently. So kind of moving on the same premise maybe as that.
I'm old enough to remember when platinum used to trade over gold.
Yeah.
Crazy.
Rotation, baby.
Yeah.
But yeah, platinum futures alive and well at 1650-ish, just bouncing off that recent high. Tesla has a new car. That's what I'm hearing on the streets.
Did they announce it?
Or they're unveiling a new car today. Did they do it already is the question. Probably not.
So, right? Yeah. It's
20
been all
point
over the place.
20 point expected move for the rest of the day, or sorry, from this week. So trying to see some info on it on the interwebs, but yeah, should be a lower cost Model Y.
That's the rumor.
That's the rumor.
We're hoping for a 2007 like iPhone like announcement here, where it just says like boom. We'll see though.
I mean, that's kind of the trend that, you know, Apple's gone with like the cheaper base model option. Tesla's doing it. Seems like a smart move to target, you know, a broader consumer segment.
Yeah. And just like anything else, like when you think of flat screen TVs, they used to be super expensive. They were kind of niche. And now anyone can get a flat screen TV for like $100.
My first one I bought was like $1,400.
Yeah.
It was 07.
Yeah.
Yeah, that hurt at the time.
Yeah.
That
Same size, probably like $200.
Same thing, but and heavier.
Oh,
right?
yeah.
Like way heavier.
Yeah. So I mean, products will continue to improve, which makes it easier to make them cheaper.
There's a rule for that. There's a rule in chips, semi-chips. There's a rule like every I can't remember. It's like the 64 rule or something like that. That as technology improves, things get cheaper or something like that. You guys know, Chad. Help me out.
In an opposing move, Ford down big today. I wonder if that has anything to do with This
Moore's Law. That's it. Moore's Law.
implied. There you go. Wow, GM too. GM, Ford down, Tesla ripping up. So, yeah, I want to try and find a time for this announcement. Yeah, I'll have to scan the AI interwebs for that one.
Interesting. As you pulled those up, I'm looking at Stellantis is slightly up. Neo down. That's a good point. Looking at some of the other stuff in the space. I mean, this should be a decent. I mean, it should be a big announcement, right?
Yeah, I would assume so.
Moore's Law. That's right.
There you go.
Moore's Law.
Moore's Law.
You guys ever heard of this? You never heard of this?
Yeah, is that the computers get twice as fast every certain period of time?
Yeah.
Yeah, it's like the 5-minute mile. Nobody can do it. Then we see one person do it, and then everyone can do it.
Yep.
It's crazy how that happened.
Yeah.
Same thing with like motocross. If you told someone 20 years ago people would be doing double backflips, you wouldn't believe it.
I mean, skateboarding now is like, if you're not a gymnast, like you might as well just not skateboard. The stuff they're doing is absolutely nuts.
Oh yeah.
What else we got here? Scanning. People looking at Plug. What's Plug doing?
Plug has been mentioned a lot recently. I really haven't seen the huge, the continuation yet, but it has been mentioned quite a bit.
Yeah, Plug was a name that was buried for years, and now we're back, baby. Put ratio spread in Natty Gas 3436. Put ratio spread in Natty Gas. In the Z contract, 3436. So you're picking up $1,800. If we look at the risk profile here, let's get the right contract here. There you go. Okay. 3436. Yeah, I think it's totally fine if you want to do something like this. It's just a large product, so you just got to be mindful of the buying power requirement relative to max loss, significant max loss relative to buying power. But that's why it's such an efficient, interesting market. So yeah, if you've got the account size for it, I like the idea.
The Z contract, right?
Oh yeah, Tony Hawk's 900. I remember that.
I remember that
He
too.
first landed it, and now that's like everyone's base trick.
Yeah, right?
It's like, if you can't 900, what are you doing? Yeah, market's still hovering down here. Bitcoin seeing a slight bid. E-minis, NASDAQ, slight bid. Kind of a weird chop day. We do have earnings coming up in the next couple of weeks here. As for this week, Delta Airlines, before the market opens on Thursday. But as always, we've got the banks that really kick off the heart of the earnings season. That's next week. So the 14th before the market opens and the 15th as well. You've got Goldman Sachs, Citigroup, JP Morgan, Wells Fargo, and then you've got Bank of America the 15th before the market opens. And then after that, this list will get mighty long if you come back next week. We'll have plenty of earnings coming up. But yeah, you'll have all your Mag 7. So it'll be an interesting turning point for a lot of these companies because the market's been chopping around. Government numbers haven't been coming out. Speaking of government numbers, I'm looking at the prediction markets right now, and there's actually a bid in the October 10th to 14th date range. Yesterday, I think it was like 23% or 22%. Now it's 28%. October 15th or later, is coming down. That was in the 70s. Now it's at 68%. So markets are predicting more of a resolution between the 10th and 14th versus 15th or later. What do you think, Thomas? Where do you hang your hat?
With the government shutdown?
Yeah.
I don't know what these people are going to do. You know, like, I mean, I think we looked at it last week. The market tends to actually go up the longer shutdown goes on. So it starts to become noise in the background. You figure a lot more political pressure once it goes on over 2 weeks, which is why they usually stay pretty short, because you have government, including military, not getting paid. And that creates a lot more pressure once those paychecks start to run out.
Yeah. And, you know, regardless of personal sentiment, we can always look at SPX and just gauge the implied volatility of the market. And like you said, there's not much being priced in terms of volatility due to the shutdown or anything else for that matter. Over the next 3 days, only a 60-point implied move. And every day we're basically getting inside a 30-point move. Today's move to the downside, I think, boosted this implied volatility just a little bit. But still, 70 points for the rest of the week is really not that much at all.
This time around just feels different. This time around, meaning compared to 2018, like this government shutdown, it feels as though, like last time, I vaguely remember every day that would go by, it would almost be like they would give you a list of the things that if these don't get paid, there's going to be this problem. It was almost kind of like more of a, I don't think it was intentional, but it was kind of like a fear mongering, where this time around, I don't really feel like I hear about that. It's like, oh, well, 7th day, and then move on. And then 8th day, we'll move on. And it's kind of what it's been.
It's crazy. Crazy times. Should I get out of a short in Bank of America? Ahead of earnings? Certainly could, especially if you shorted at the top above 52. But yeah, I mean, if you don't want to hold through earnings, you can get out of it. You've got a couple trading sessions left here. But even into next week, you can get out pre-earnings. But yeah, it's up to you. It depends on what the short is. If it's a static short and you don't want to hold it through earnings, I think it's fine. If it's like a spread, maybe you hold it. If it's something you want to dabble in. Adobe making a double bottom here. Have you guys traded Adobe recently?
It was one that was on my list for a bounce. August, I just had this list of different names: Adobe, CRM, UNH was one of them, and it was on my list, but I never pulled the trigger on it. I'm not sure what helps it get up the mat right now. I don't know.
Yeah, they've had some pretty bad gaps to the downside, and any rally that it's had has been sold off. So we are trading at the very bottom of the range from this year. Looks like earnings are priced into the December cycle when you look at the implied volatility boost, but nothing really firm just yet. So yeah, I think if you're looking for a non-earnings trade, this one would qualify, since the November cycle is not reflecting an earnings implied volatility boost. But yeah, to Jamal's point, what could bring this thing higher given the current landscape of Adobe? Tough to say.
What's the competitor? The other starts with a D, right? God, I'm blanking on it. The other company that does the same thing. There's Adobe, and then there's it's a smaller price point too. I can't remember. Just wanted to look them up and see, like, you know, what's going on with them. Because I feel like the same kind of thing is happening, and that makes you kind of wonder. You guys know exactly what I'm talking about. I just can't think of it.
Da Vinci?
Not that. God, they do the same thing. They basically, you get them all the time. Not Figma. That's one they were trying to buy. It's another name. I can't remember. DocuSign. Thank you. DocuSign. That's why I love the chat, bro. DocuSign was the other one I was trying to think of. I mean, they look like the same thing. And my point is, like, a lot of times I like to look at the space, right? See what's going on, see how those charts look. Do they look similar? They're both kind of struggling,
Yeah, I mean, and especially when you find products that are at annual lows, when the S&P is at highs, definitely an interesting point of contention if you want to get long it. And if you believe that at some point in time it will be higher than what it is now, you can structure longer term trades to reflect that. But yeah, Adobe, DocuSign, 2 products near lows. Nike, another one in the YouTube chat, someone calling out. This one has sold off basically back to the bottom of its little rally post earnings. What did I have here? Yeah, so I placed a bearish earnings trade. I had the 63.70 put diagonal spread. The 63 fell off. I left the long put at 70, and now that we've gotten this continued sell-off closer to the strike, it's basically a scratch. So with that said, I think it might be time to throw on a short again. Let's see, my basis is $500 with the 70 strike put in December. Can I diagonalize this? 65.
That's for me, dog. Nice, Steve.
65. Yeah, let's do this. I'll sell the 65 against it into this sell-off. So pick up another $1.23, bring my basis to $3 and change, create a $5 wide diagonal spread. There you go. There you have it. Just filled instantly. Not sure I love that. But basis down to 384, 5-point wide diagonal spread. If we continue the sell-off, we'll be just fine. If we rally from here, I'll hedge the loss on the December option more effectively, since I did not have a hedge on before. But yeah, nice call out in the chat.
It's crazy because Nike is still the largest footwear company in the world, even if the stock is struggling. So that alone kind of gives it an appeal, I think, for those who want to get long it. It does feel like it's one of those, if you get long it, you get it, and you, whatever your position is, whether it's, who knows, and you just put in another account that you don't look at every day because it's going to be a slow recovery story probably.
Yeah. They need another Michael Jordan, They need something.
They do. Hey,
well, LeBron is announcing something today.
Well, it's funny you say that because I was talking to Gus about this. He's like, I just made $300. I'm like, on what? He's like, the LeBron announcement. I'm like, oh. So he's doing the prediction markets for this thing. And I guess the odds were plus 220 that this is going to be his last season and he's retiring, or plus 300, some kind of advertisement. So he hit both of them.
Oh.
And it was an advertisement for Amazon Prime Day.
Oh, really? It already came out? I didn't realize that. Oh, wow.
Yeah.
Parlay.
So there you have it. But yeah, we need another MJ for the health of the NBA. We'll say that. But yeah, Nike can't seem to find a bid. Still just churning around this gap high around 69.70. Lulu, another one. This is insane. I've got the 170 short put spread. I think we put this on.
We did, yeah.
Weeks ago.
Yeah. Aiden recently a little bit.
Yeah, but we're still out of the money. But yeah, this is not a good looking chart at all.
No.
Just gap down after gap down. But we'll see. Maybe we'll get a little bounce here. We can close that one.
It's all the drop shippers, right? The Lulu, you can just get the same thing on Temu or something for $2.
Yeah. Yeah, I mean, there's plenty of competitors, and Lulu and Nike have the similar problem. They just have the extreme tariff issues. A couple minutes left here. What about these ags? Corn, soybeans. What's your favorite one out of the three if you were to try and buy the dip here?
I'm in a couple. So I'm in corn. That's actually been doing good. I sold a few weeks ago the 400-410 put spread. So we're trading at 421 right now. I've been waiting for just the next nice little move higher to take this thing off. I'm also long soybeans. That one's not doing as well. I'm short the 1010, 1030. So 1023, I need another 7 points higher. Today's helping a little bit. And then I'm also in a wheat put spread, 510, 520. That's the worst of the three for me. So I'm kind of mixed on the softs. I don't know if you guys heard that, but I got the window open and the rooster is going. So
we did not hear it. I wish I did, but we did not. Yeah, I've got the wheat 560, 580 diagonal spread, taking some heat on it right now, but similar story, just long in here. And if we get a rally back up to the recent highs, we'll get some value back, of course, but not looking so hot right now.
It does look like China has to come in, and for this crop, they need to come in soon. So something needs to happen, and I'm sure you guys have seen the news. Farmers are starting to get pretty down on everything. So, there's going to be some kind of package announced by Brooke Rollins or Trump over the next, I'd imagine, week or two, maybe even as soon as tomorrow. But that does not mean it's going to help soybean prices themselves. This is more going to be direct payments to farmers to kind of subsidize them. It's not going to do much until we get, a move from China, an agreement from China, which I imagine has to be included in these trade negotiations at this point, to throw a bone to these guys and get some product moved out.
Yeah, I mean, it's been tough road this year for wheat specifically. But yeah, hopefully we can get a little bounce here. Crude oil, have you been trading that?
I've been staying out of crude oil. Actually, let me check it. I'm out of crude oil. I had an iron condor on, and on this down move, I took off the call side first, and then I waited a couple more days and took off the put side. But that trade worked out for that range. We're still trading. We're still holding above the bottom of this range here, and it's all the way going back to essentially you could go back to July and pretty much, we've moved a little bit under it, but we're still above 60. It's just with the economy slowing and everything, OPEC saying they're going to pump more. We've had this, big sell off the past 2 weeks. I don't know. I've been tempted to try to get a little long just on a bounce here, but the IV, it's all right, high teens, but it's not. I haven't seen a great trade in it, so I haven't took anything.
Fair enough. I'm in a small, just a one lot in the micro crude. I got it around 60. So it's up 67 cents right now, but I'm in the same boat. I'm just looking for a little bit of a move higher, get us above 62. We'll take it off for a $100 winner, and see if we can get back below 60 or near it. I think that's pretty much it. So quick recap, long the micro natty gas contract. Thomas, you have a short put spread. And then Jamal, you've got a strangle on in there. And then I'm trying to sell this call spread against it. So creating like a covered call setup at 4.748, which would, if we got up there, my gains in the micro long contract would offset my risk. So trying to just pick up another $200 in premium in a somewhat unique way. Well, let's see if we get filled there. 10 cents off, but hoping we can get a little fill there shortly. I think that's it. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. I put in the Money Match promo in the YouTube chat, tastytrade.com/moneymatch. 30-day commission-free trading, 1% match on any deposit in the 30-day window. Go check that out if you don't have an account with us, for sure. But yeah, we'll see you same time, same place, 11 a.m. Central tomorrow. Have a great rest of your trading day. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and the Ward. We're back with our guy, Gus. We got to catch up on some things, but I hope you guys are doing well. We'll get into all the market discussions, do a little tour to market. Market was pretty boring so far today, and then we got a pretty significant sell-off, so maybe we get that expansion in VIX for some more premium opportunities as well. But before we do that, UK man, what's going on?
Yeah, happy to be back. I appreciate you, carrying the torch while I was gone for these few days. I'm sorry to relegate you back to your side of the desk over there. I know this is your preferred side over here, but yeah, doing good. Still a little tired, jet lag today. My brain does not exactly know what time it is, but we're firing. I'm feeling good. We opened at some new all-time highs and things look fantastic. We've since come back down a little bit and things look not so fantastic anymore. So it's been a mixed bag for me today. But had a wonderful time in London, and I'm happy to be back. Happy to get into these markets. You know how hard it is to keep up with your portfolio while you're over there. Tell
me about the time zones. How was it? Market open.
It was
Let
strange.
us know.
I mean, it's +6, so market open is 2:30 p.m. local over there.
Okay.
So it was always kind of like just at the end of the day, like, well, you know, it was really just Friday where this even was relevant. But at the end of the day, like laying in bed, I was like, oh yeah, let me go. And it's dark outside.
Yeah.
I'm like, let me check my portfolio real quick. And
So the market, ding, ding, ding. That was like at what? 2 in the morning. Or when was it? The market opens up at 2:30.
It opens 2:30 p.m. and then
2:30 p.m.
Yeah, and then it would be open until 3:30, which is 9:30 p.m.
Okay, I got you. Oh, that's a trip. The time zones are always different. I always tell everybody, the traders that are on the West Coast, so shout out to anybody on the West Coast. You guys are cut from a different cloth. They're waking up trading the markets at 6:30. That's not to include pre-market prep.
Well, yeah, and it's everything. I mean, I always think about the West Coast just with NFL on Sundays. Like the NFL games, they start at noon here. You're telling me you got to wake up for NFL football at 10 a.m. on a Sunday? It's crazy.
I used to think about this as a kid. When Call of Duty was released at midnight, I used to think about like, dang, that sucks. You guys over there on the East Coast, boy, get on the game. I've been on this for the last 2 hours.
The West
this
Coast
side of the
people.
States.
Yeah,
So that's how it was at the West Coast growing up. But other than that, how we doing?
Yeah, doing good. Yeah, cruising. I didn't wind up having to do any management to any of my positions while I was over there, which I am grateful for.
You didn't need to, not at all.
And yeah, I've been doing a little bit of management this morning. I just closed a couple of losers this morning. Nothing super exciting. I finally had to capitulate on my Hormel Foods position.
Hormel Foods.
Yeah,
that's a terrible name.
Hormel Foods, giant distributor.
Probably a last name.
That was just one of these many completely no TA at all trades that I've taken as of late, where it just dipped 50%, and I was like, we're gonna get a recovery sentiment move here, and I was pretty much right at the money, and it's just continued to tank. I don't think that has any chance to come back. I also fully exited my RGTI position, unless it's, no, I just trimmed. I had this 2x1 to the downside. They made another leg up today. They got a $5.8 billion investment from somebody. So yeah, they took another leg up. This thing is probably sunk. I'm giving it until the end of the day just to see if this pop that we got today will pull back a little bit and at least present me a slightly better exit, which has been the case so far. I was down 108 this morning.
Yeah.
But this initially was a 2x1 to the downside. I was short 2 of these 32s and only long the 134 because I was really believing that there might be disproportionate downside in this thing.
Yeah.
And that did not work out. So I exited the part that was bleeding the most, and I'm willing to let this eat until the end of the day, maybe a little longer if it's making legs down.
Pretty fire management, honestly, especially with these stocks like RJTI. We were touching on it yesterday, IO&Q, some of those other quantum computing stocks. I kind of feel like a bubble right now.
Yeah.
So maybe we attack those again at a later date whenever that bubble seems to pop. But they're overextended, no doubt.
Up here, like right at the top of these candles is where I entered these shorts. And I was like, I am such a genius. As this was running back down, I thought it was going to be brilliant. I was so happy I did the 2x1 and it was disproportionate. And then, we get this big old run up. But any technical analysis bro will tell you, or sis will tell you that this is a doji. So
yeah, no, that's true.
Hopefully it's signaling some pullback, although it's not closed yet.
I mean, I liked it. You found where you thought you had good risk reward. You wanted to express your opinion, and you managed it accordingly. Because, I mean, even if you take it from a fundamental approach, the prices shouldn't be this high. Like, from a fundamental approach, the quantum computing stock shouldn't be at this price right now. So if we really want to crank the numbers, it's just one of those things where it's kind of turning into a bubble-type move. How far can it go now? It's almost like a move where things can get really dangerous for the short sellers, at least.
Yeah, absolutely. So flipped right on me right there. So that's perfect. We're moving in the right direction. Another trade I have on this exact same sentiment is quadruple U here, which was something that was given out in chat. And this one is working out much better than the first one. I am still right on the number with this. I have the 17.5, 18. So I would need under 17.5, which it was not at open today, but has come down to 17.5. It looks like we're going to finish right on the money there. That's 10 DTE. So I just need this to hold out for a little bit longer and let that theta cook. But yeah, this does seem to be hitting a little more resistance. This is not an RGTI situation where we came down to this level and now we're gonna go chase higher highs. It seems that this 18-19 level is pretty firm resistance. And I understand that this especially is definitely a substantiated move. That's why I went short time frame. I'm just trying to, for just the 17 DTE or whatever it was when I put this trade on, I'm just trying to grasp a little tiny pullback, and then I do think that this could run to higher highs. So a little bit of a falling knife situation, but not quite.
Were you surprised coming back everything was still at all-time highs, or was it kind of just like another one in the books? Or did you have no
I wouldn't say so. I didn't. Yesterday I was traveling all day, so I didn't look at the market at all. I came in today completely blind to what had happened all day yesterday and had to play catch up. But no, when I came in this morning and opened my platform for the first time and saw that we were at 672, I was like, this is what we do now.
Yeah.
Government shutdown.
This is what we
does
do.
not matter.
Yeah, stocks go boom, government shutdown.
Well, yeah, and you would think, like you would logically think, which is not the way to trade this market, but if you would logically think that the longer this government shutdown goes on, the more uncertainty that will build, and that the market will, reflect that uncertainty.
Right.
I'm not wishing for that at all, as long as I am, but it does seem plausible. So, only time will tell. But
yeah, the way this market be moving, I almost feel like it's always pricing in that uncertainty on my end, because I'm like, this market, man, even this morning, we can go ahead and jump into the charts here. No. Are we done there?
Yeah. We're good.
We'll jump back. We'll look at some premium positions if we want to throw something on.
Yeah, let's. We got trading view action, or
yeah, we got a little bit of. So I almost did up the charts with some emojis. I was like, nah, let me wait for my boy Gus. Putting these emojis on when he gets over here, and I almost did it before this.
You can't do. Yeah, you can't be doing emojis without me.
Yeah, exactly. But no, we can go ahead and jump to the other trading view platform over here. But as we get into it, I mean, the market was really boring this morning. We started to chop around like nobody's business. I hate having to use the word manipulation, but there are times in the market where you get that WTF action. And that was a little bit like what we saw today. And then we finally had more of a sell-off. But we'll jump into that in a moment. With us trading at all-time highs, it's been tricky. Been having to be a little bit more patient. Bob, Flower, Edward, Scotty, Trev, what's going on, guys? I don't know if any of you guys are looking at gold right now, trading gold, NASDAQ, any of those products. We put on a gold position yesterday, bro. It's working out so well, or it's working out so well, so far, whatever. And we sold an out-of-the-money call spread on gold, GLD. We didn't trade the futures products, and I didn't use the product GOLD. If you know, you know. But we went with GLD. So far, it's working out. Gold is just ripping to the upside. And we'll see if we regret this position. I had to do defined risk, especially trading a market like gold, because I don't know when things are going to cool off. I mean, this overall market, I know we got the forwards drift. I know you never bet against America and their economy. I understand all those things, but this upside is extremely impressive, I will say. And it just kind of continues to catch me off guard, especially with gold trading at these prices as well.
Yeah, this is one where I rarely trade metals at all. Yeah. I've harped on that before, but I do think that I will be looking to do something very short term, like short dated with gold to the downside whenever it looks like this shutdown is going to resolve itself, because I do think that we will at least have a slight breathing period, as much of a ripper as gold has been on. I'm not expecting anything, cataclysmic, just maybe this 350 level or something like that.
No, we need some cataclysmic.
Yeah, I mean, yes, and yeah, I mean, it certainly wouldn't be unjustified if we did get something cataclysmic, but right. Yeah, just hoping for as with a little bit more certainty snapping back in there, that gold might get knocked down a little bit. So that's sort of the trade that I'm eyeing as I keep up with the timeline on this government shutdown and when the votes are going to be.
Bro, I mean, I don't know what market we're trading. IONQ, gold, RGTI, NASDAQ, like everything's at its highs right now. And the stocks that usually aren't at its highs right now. So I don't know what kind of market we're in, but I'm not going to be complaining. I'm not complaining. Of course, I'm looking at gold, riding it to the moon. Brother, Bobby, I think you surpassed the moon. I don't know where you went with that one, but you surpassed the move on that for sure. Tesla, 448 issues. Who will stop the pain? So Tesla issued more shares there. We'll circle back around to those. But anyways, we got NASDAQ right here, guys. We're on a smaller time frame for right now. I got to show you something so dirty that the market did to me last night. Hold on. So let me go over here. Let me go ahead and pull up the executions. We're going to go to settings, execution marks. It gives us a better idea for. There we go. Now let's remove these so it's a little bit cleaner. Now when we come over here, you can see we took a couple trades today. We're panned out pretty well. We'll talk a little bit more about that here in a moment. But yesterday, the market did me so dirty. So we're looking at this this value area high over here, which is just that one standard deviation, and I was looking to buy off of this level, and I went ahead and did that last night in the evening, a little bit before I went to bed. It wasn't that late. It might have been around 7 p.m., 8 p.m., but I wanted to get long. I put in my stops. Right before I went to bed, I adjusted my stop just a little bit, just because I'm human. I was like, you know what, I'm going to adjust my stop. I even put the profit target at a higher level, because I'm like, if I'm asleep, this is either going to stop me out or it's going to put me in profit, right? The market starts to rally. I'm pretty comfortable. I have my stop in at 25,137. Now, I'm snoozing. Best dreams ever. I'm like, yo, Gus is back on the show tomorrow. Life is great. We're ripping to the upside overnight. We start to consolidate. We sell off overnight. And I think at about like 3:30 in the morning, it stops me out. 3:30 in the morning. And then we rip to my profit target. Right. But get this. So I was long one contract, right? It stops me out. I still have that working order in, a sell working order in at these prices over here. So I wake up in the morning and I'm short a contract at 25,187, right? Overnight, it stops me out and then fills me on my profit target, which then puts me net short, right? So I'm sitting here thinking like, bro, I was like break even at the time. I was like, oh, I'll give it a couple points to wiggle. It's not even a trade that I really wanted to be in. But at the same time, I was like, yo, this could end up as an accidental top tick because it ended up being the top for a little bit. So market ended up opening. I ended up closing the position just down a few points. That was unfortunate. Then we ripped to the highs. Anyways, market opens up. We sell off a little bit. We start to consolidate. That was a story from last night. I wake up, I'm just like, of course. We literally wick down to the penny to stop me out and then puts me in a separate position. So now the market's ripping to all-time highs. I'm also thinking again, like, yo, we're probably not going to get any opportunity. I'm not really fond of too much at all-time highs. Market opens up. We chop around like another barcode type price action. Whenever we get the barcode type price action, I'm like, all right, a directional move is coming, but this isn't the type of activity that I want to be inside of. So we got that. We finally got the sell-off, and then we'll get into some of the opportunity that we got today. But I just wanted to point out, market did me dirty yesterday, stopped me out at break even, but we were so far away from the stop loss and then ripped to the profit target. So look, guys, I'm standing on business when it comes to a stop loss. I'm a huge proponent of using a stop loss just because I think, you know, drawing down 100 points, 150 points is just not my cup of tea. So I'm gonna put in the stop loss, but I know everybody that's not an advocate for the stop loss is probably like, yo, look, brother, no stop loss, you would have been chilling. You would have been riding to the moon along with Bob on his gold position. But that was the trade from yesterday. The market opens up, we consolidate, chop around, we finally sell off about an hour after the bell. We sold off down to these lows. Now, one thing I want to point out is the level that we were trading off of yesterday. I don't want to get too far off track, but I had to readjust some things. Yesterday when we were on, I was looking to take a short, and when I was doing some analysis late last night, I readjusted my levels and recalculated them, and I had the wrong levels. Yesterday I was trading off of the completely wrong levels, and I didn't even realize until last night. That's why I ended up taking the long, because I recognized, I was like, oh wow, this is an obvious long. Why am I taking shorts here? And the only reason what I mean by that, because you can't predict what the market is going to do. Oh, my bad. Do we need to catch up on some stuff?
No, I'm just chuckling at there's some funny stop loss discourse going on here. Again, we need trailing stops. Trailing stops.
I've heard trailing stops 1,000 times.
Yeah, I do trailing stops if anything. I mean, not manually, but I honestly, I kind of find myself in Bob's camp. I don't often find myself putting on stop losses. I'm usually just monitoring things and kind of, I don't know, making calls by hand. But also, I do think that if you're trading in a more technical context, the way that you like to, the stop losses make a lot more sense because your levels are a lot clearer and figuring out, you know, where you actually want to get stopped out relative to the levels that you've outlined. Like that makes sense. But when I'm trading something based on, you know, they had some bearish news come out and have tanked 25%, and I'm trying to catch a move back to the upside, like that's all much more esoteric. And so it would be much harder to quantify, like at what point this actually goes away.
Yeah.
So yeah, I mean, yeah, it's whatever floats your boat, they say.
Apparently, a trailing stop loss needs to start floating everybody's boats because apparently that's one of the highest requested features. But I just want to re-break down, guys, the trade that we went over yesterday. I had to stop out of this one, and it almost like makes, I need to, you know, just stay level-headed, but it makes me so salty sometimes whenever there's like little user errors when it comes down to those things like, Errol, double check your work, but I had the wrong levels in. So one of the reasons why we even looked for a long off of this price level is because we got a lot of responsive buying off of this level. Yesterday, I was looking to get short, and you can see just based off of how we trade whenever we pull up these charts, this isn't something that we would get short into. But I was mistaken because the data, the levels in the data was positioned wrong. So yesterday, what we would have been looking at, big deal, you probably noticed this, was the buy opportunities off this value area high. Not only do we get responsive buying once, we got the sweep of the low, and then we got a massive fake out of the lows yesterday for a continued move higher. So that was unfortunate. We didn't get to capitalize on that. And although I made a mistake and it was a user mistake, you know, one thing that I was proud of, I still manage the trade. I still manage the risk accordingly, because there's going to be other times where I'm putting myself in the wrong direction. Not that I can know what's going to happen, but even if I put myself in the wrong direction of the market, I need to be able to manage myself if it goes against what my bias is, you know? So even though that could have worked out, I still need to know how to manage the trades if it goes against me. So it is what it is. The market returns to the same level overnight. Got more buying, so I was looking to get long here, just back to this next level of value. Smacked off that level. I'm glad I didn't partake in this after that or try and hold, right? If I didn't use a stop loss, it would have taken me all the way to 25,280. I would have been in a drawdown of like 100, almost 200 points. And with that being said, we sell back off to this level, right? Which was the 25,120 level. So this is what we were eyeing. We got a lot of responsive buying off this level. So I now know and understand if we get a lot of weakness through this level, kind of looks like a little bit of a change of behavior in terms of the levels that we were looking to trade off of. So I was a little hesitant there. I understood if we get back down here, I understand it could bounce here, but it could also then act as a level of resistance and flip from a level of support. So we sold off through that level, and once we came back to those same prices, that's where I was looking to get short a couple contracts. I got short a couple contracts, right? Risks just above the highs, so we're not risking too much. It's pretty much targeting the lows on the other side of value. So we took off our first position once we made new lows, left our last position in, left the last contract at break even, because again, I know when these green trades play out, they look so good in hindsight, but like it does not feel that good in the moment. So with just one contract on from this level, you know, leaving the last contract on somewhere up here, because we don't know if the market could do this, right? The market could do this and then make you just don't know what the market's going to do, and you don't know how it's going to do it. So that's kind of the reasoning there. Took it to these lows, covered the whole position, tried to get cute with it and get long at the same time. Sold one contract, tried to add to the position, got stopped out. There was another little user error there too, but I'm not going to get into all the mistakes that I've been making yesterday and today, but there's a little bit of the price action that we got into today.
Absolutely.
I know that was a mouthful. So
yeah, no, scramble everything. Can somebody fill me in on this Oracle news? I've been unplugged since Friday.
What's going on with the Oracle news?
What's the Oracle news? I only know news that is broken today. I have not yet had time to go back into news that broke over the weekend.
All I know is I seen a fat red P&L on my Oracle position, and I was like barely green yesterday. I was like, what's going on with Oracle?
It's down. I guess they didn't finalize the TikTok sale. That was my guess. I don't know what it is. Somebody will tell me.
I don't know. But we can check Oracle out over here as well. Let's just quickly see what price is doing before we get off of our soapbox on NASDAQ.
Drawing so many lines on accident.
I know.
It's tough.
I know. No, let's take a look at the gold market and then Oracle and Tesla.
Weakness in rental revenue of Blackwell chips. Interesting. Rental revenue.
That is not. There we go. Go to this 30 minutes. See what gold has been up to. I mean, boy, gold is no joke.
I see. All right, thanks, guys. That's good intel. Totally with that. And if there's anything else that happened on Friday or yesterday that I should be privy to circle back on later this week.
Okay. You've been peeping Sora AI, right? Peep that?
No. I mean, I'm familiar with it.
Yeah.
I've seen it on Reddit and stuff.
So they've been releasing a little bit more new, more. Good Lord, I can't speak. They've been releasing new information. Sam Altman and his team, and just talking about the next steps with Sora 2. You've seen the newer AI videos that's been popping off over the last week or two, have you? They look real. I saw Scooby-Doo and Shaggy get pulled over.
Well, I saw the one that OpenAI actually used as their example of Sam Altman robbing a store. Did you see that?
I didn't. I seen the one where he was on the Lakers.
I don't know if it was OpenAI directly or another big corporation, but yeah, one of the Sora demos that I saw was that it was security cam style footage of Sam Altman taking a bunch of stuff off a shelf and then running out a door, and a security guard stops him, but it looked perfect. You'd never have any idea. I also saw a really funny one that was a Sora 2 video over the weekend of Johnny Manziel, college football legend Johnny Manziel, was at the Vanderbilt Alabama game, and somebody made a Sora video of him, like he's like on the field, and there was a real moment where he's on the side and he's like chirping at some Alabama fans, and they're throwing some jabs back and forth. But then somebody took that video and put it into Sora and made him jump into the stands and start beating somebody up, which was really funny. But yeah, it is getting scary real. My friends and I this morning in our group chat, literally just like an hour ago, decided that we needed to establish a code word because AI is getting crazy and we don't want to get scammed by each other. So we landed on a code word. Make a code word with your loved ones, people. Something that AI wouldn't be able to guess.
You might have to, and we might be taking that advice a little bit more seriously within the next year. I want to say the next year or 2 or 3 years, but how fast tech is moving could be next week.
Mike, don't play with me about those salmon hats. I will short everything right now.
Salmon hats.
Salmon hats kill the market. Also, side note, when I came back through customs yesterday, I got scanned on Big Bear AI. So there's something for
You
it.
got scammed.
Yeah, no, it's like scanned. Like I did like they used the Big Bear AI facial recognition at customs to let me back through.
So it's real. It's not like some Wolf of Wall Street. It's not a real company. It doesn't exist.
Yeah, exactly. Well, and I was under the impression that it was only in the Nashville airport right now and was going to be integrated like other airports throughout the year. But yeah, and let me tell you, Big Bear does a good job of branding. You know what AI you're using when you walk up to that thing. But yeah, I never showed my passport at customs at all, which was very fascinating to me. All I did was just walk up to a Big Bear thing. There's an agent standing by each scanner thing, and they ask you if you have anything to declare. And obviously, I just said no, I didn't. And then it just scans your face, and then it said there was like a comical box actually that popped up on the screen. It was just a like green background, huge white check mark, and said citizen. So I was like, all right, thanks, Big Bear. Then they gave me a little slip that you just like walk out and hand to an agent by the door.
Okay.
But
smooth process though.
Yeah, no, super easy. And yeah, it was really fluid and really, really fast. It was actually funny because the guy was like, look at the camera, but then when I turned and looked right at the like iPad thing there, and I was not looking remotely at the camera. I was looking like way too high. And so I actually turned my head to the gate agent or the customs agent and said, wait, where's the camera? And then it was while I was sideways that it took the picture, and then it still approved me. So even just from my side profile, the facial recognition is that good.
So it helps with the convenience. You said you had a good experience. So this is something that looks like it could stay.
Yeah.
Especially if it's helping with convenience. We love that as consumers.
Absolutely. Yeah. I think it's going to be on the up and up. Yeah. And it made the customs process so much faster. You don't have to actually hand your passport to a real person. They talk to you, you get your stamp, and then the next person can go. I mean, it was literally like less than 10 seconds. I just walked up, scanned, go. And they had 10 stations. So there was no line at all. It was great.
That's nice.
Yeah.
And they had that at O'Hare, or was it in the UK?
It was O'Hare,
okay,
yes.
Cool.
And in the UK, I actually also didn't show my passport at customs, but I cannot attest that was Big Bear AI. I don't know what service or facial recognition, it doesn't, maybe not even necessarily AI, just hard-coded facial recognition that they were using. But yes, I traveled to the UK and back, and I never once had to pull out my passport outside of when I boarded the planes.
Brother,
to see that you had a passport.
We can all recognize that stash anywhere. Don't carry ID no more.
It's true. Well, I'm 18 in my passport picture, so it's like shorter than anybody here has ever seen my hair, and no mustache at all. But it don't matter.
Yeah. Oh, I love that you brought back a higher VIX for us, because we popped to 1718, 1750. Let me not get too far ahead of myself, but this could be signs for more volatility to come, and I'm excited for it. I'm looking forward to it. It's been a little bit since we breached or stayed above 17, which it feels like I'm scrounging up pocket change on the floor right here, but
that's what it feels in front of a steam.
No, that's literally what it feels like. But I mean, I think this is good signs for more volatility clusters to come. Volatility tends to cluster.
Yes. Frank and Mr. Pillows also, just to end this conversation, I think you guys both make excellent points. Because I went through this whole thought process. I was like, wow, that was really cool. And I was like, dang, that was kind of scary. And then I went, well, they have all my information either way. I really don't care. If it makes my life more convenient, I'm just here for it. So that was where I landed, is like if they want my facial recognition data, they're going to have it. At least it can make my life a little bit easier. And at least we're using a American-based company to do it as well, and not outsourcing that. Don't give up your freedom for convenience. My freedom is gone anyway.
Yeah, I've been out the door. That been gone for a minute now. No, unfortunately, I think that is.
You need to get one of those spinning tops that Leonardo DiCaprio uses in Inception. The AI heard your code word. I mean, I'm not giving you guys my code word. I just noticed I'm getting pressed for my code word. You can't have it. You can't have it.
No, what is it though? Like, just in case.
We can make our own if you want. You gotta be careful.
All right.
Yeah, that's true. Also, can Apple Intelligence just scan my text messages and figure it out anyway? I don't know.
We could do a tasty code word.
But the thesis, though, isn't that AI is going to know my code word and some Terminator stuff turn and the AI itself is going to scam me. It's that someone else would use AI to clone somebody that I know's voice, and then they would be the ones speaking or telling it what to say as the conversation goes on, in which case they would not know my code word. So, yeah, I'm not super worried about it.
And the thing is, this is going to happen.
Code word stop loss.
Code word trailing stop. There you go. But this is always going to happen because, I mean, we've seen it online, especially when social media first came about. I mean, if you have any type of presence online, you're going to get duplicate profiles of you, like 1,000 of them, and they're going to be DMing other people. Oh, yeah. So we see these behaviors at work at scale already. Just imagine, right? Because scammers are very smart people, like actually, right? Yeah. So whenever they get hold of people's voice, right? Tom was on here all the time. Like, imagine just having so much footage of somebody online. You can make a perfect clone of them.
Yeah, no, yeah, absolutely. I mean, it's something I worry about all the time with us doing this job in this capacity. Yeah,
and you know what's funny? I think a year ago, I think a year or two ago, I was worried about deep fakes. When I saw the deep fakes, maybe a few years ago, really, when it was one of the first times I seen them. But if you don't know, a deep fake is whenever you can kind of put somebody's face on somebody else's body and it looks just like them. So that's what a deep fake is. And when I saw that for the first time, I was like, oh, we're in trouble. And then I see full-on AI videos of Sam Altman dunking on LeBron, and it looks real. So I'm like, okay, we're past the deep fake. We went to like the 3D version of full-on AI can create your reality.
Oh, yeah. And I'll tell you what, man, defense attorneys are saving all these videos.
Oh, yeah.
This all of a sudden, I mean, video, like security videos and things, I mean, it becomes like, yeah, I think about that, the court aspect a lot of what could happen if, both sides of the equation. If someone legitimately is guilty of a crime but can use AI as a legitimate defense, or the other side where someone is completely innocent but they have been framed using AI, and how you would even begin to disprove that in the first place, because it is becoming so indistinguishable. I'm rare to call for regulation, but we might need some government regulation around that.
Arrow AI, joke's on you guys. This has been a demo.
Yeah. Yeah.
Arrow's actually right here.
What's something that a bot can't say? We'll prove it.
I know.
I see word is meatloaf.
I hate
stop loss. I think his code word has something to do with sports. I'm not giving you any hints. It really doesn't, though. It's random. I will say this because I don't think this would give anybody any leeway. It's a inside joke from high school with my friends.
Well, all I can say is I hope it's not meatloaf, because I hate meatloaf. Every time I hear meatloaf, someone's like, "Oh, you might not meatloaf." It's because you haven't had my meatloaf. I'm like, no. That's what the last one said.
Meatloaf,
I had their meatloaf.
Meatloaf's all right.
It's all right.
It's all right.
I'm just not a big fan.
But yeah, I would.
It's one of those things I grew up having a distaste towards.
It would never. I would never be like super excited about meatloaf, but I would never.
Neither would I.
It's solid.
Hey, look, I'm not knocking the meatloaf, but I just can't imagine waking up and be like, let me get some ketchup for this meatloaf. That doesn't sound too fire.
Next time you're on air, program an AI and go to the beach instead. Yeah, I mean, the facilities, we would just have to, well, I was going to say we'd have to script it. No, we wouldn't. Why would I think with my brain? I would have ChatGPT script it and then just feed it into whatever I'm using to clone us. It's easy. All AI should be required to have a watermark. Yeah, I absolutely agree with that. I've played around with some of these facial cloning AI services before, and it's very interesting how that you basically, it's just a paywall. Like if you get behind the paywall, they will just make you things with no watermark that can look pretty indistinguishable. I will say though, what they do a good job of is, at least in the case of famous people, they do make it pretty difficult to clone famous people. I know that for a fact. I was trying to. Some weeks ago, I was trying to make a funny video of Stephen A. Smith telling my friend happy birthday. And so I dove into this project, and I could not get it to take a picture of Stephen A. Smith, because every time it would be like, this violates our content policy, which is a good thing. I obviously did not have any malicious intent, and it was kind of frustrating to me, but holistically, I see that as a very good thing. But that stops nobody from, taking whatever. All you need is a 10-second video of somebody speaking in isolation, and it's pretty perfect. It's crazy.
No, that's nuts. I would have been dying at that Stephen A. Smith. I think Stephen A. Smith is one of the best on air. What would you even call it? On air personalities? Yeah. Like, he's quite literally amazing at what he does.
No, he is. And he says a lot of dumb stuff, but he's just. The reason ESPN pays him so much money is because people come to watch that dumb stuff and talk about it after the fact on social media, and yeah, it helps everybody.
And that dumb stuff, he knows what he's doing. He knows what he's doing.
Anyway, yeah. So I've speaking ill on Big Bear AI a couple of times on this show.
Again?
BBAI is the ticker for that.
Okay.
And not even in like a long-term context. I do think it could be widely adopted. I just thought that this run-up might be a little bit too quick with it only being in one airport. But now I need to figure out how many airports it's in, because I was not expecting to see a Big Bear AI logo as I came through customs yesterday, and I assume that it's wider scale if they have it at O'Hare. I would think it's in JFK, IAH, ATL, all those good ones.
If you like Big Bear AI, you might be early. We're trading at $7.38 right now.
Anyway, yeah, this is it's been quite the run up for Big Bear. Can it make higher highs right now? I don't know, but like that's the thing though, is that if the adoption is happening this quick and they have the resources to be able to churn these systems out to every airport, I mean, yeah, I'm not sure. It could become really wide scale really fast.
All right, guys, we're adding an alert. Just
Stephen A. needs to get out of his shell a bit.
this man been out. This man was born without the shell.
I was gonna say, I think we've been trying to put him in a shell for some time.
So I watched a documentary on Stephen A. Bro, it's always so good just watching where people come. You just learn so much more about them and this and that and the other. And like, bro, he's actually pretty inspirational.
Yeah.
Like, bro got it out the mud. Bro really fought for where he got. Like, he's definitely, He
was politics first. A lot of people don't realize that.
I didn't recognize that either.
Yeah.
Yeah. Right.
And it just spilled over.
I mean, he's a natural. I mean, he was born to do that.
Oh, yeah. Yeah, he's so good.
I mean, if he could be getting me riled up sometimes too. I'm like, yeah, you right.
No, yeah, exactly.
Right,
I mean, even when I think he's wrong, I respect the fact that he's able to make me feel those emotions. That's why he's so good.
Right. Not to get too far track again, but
what's the red and blue color on the profile?
The red and blue color.
Can you tell them apart? Blue is on the left.
The profile.
On the volume profile.
I'm actually not sure with this volume profile. Let me go into the settings. I want to make sure it's not like a delta volume profile.
Is it just, is it long and short or?
Yeah, that could be the case. But we need to see what the details are, why they're breaking it up like this. I don't even like my volume profile to have most colors. Usually I adjust the settings to where it's like only gray, because I don't care if there's, I'll look at that information from a different perspective. But let's make sure though. Let's make sure. Let's even go to the settings on here. Or let's see if we can go.
I'm not sure where you would find that.
So I know I have the fixed volume profile on right now. Would it have its own settings? Let's see. I know I pulled it from over here.
Big Deal has sent us on quite the tangent here.
Yeah.
Yes. Colorblind. Yes. for those who missed that, I was genuinely that wasn't me taking a shot. I was genuinely saying, can you tell them apart? Does you think that they're green?
No, look. I didn't even catch that. He's taking shots right now, guys. I didn't even catch that. I'm over here locked in on the volume.
Can you see what color those are, Blindy?
Someone said that to me my freshman year of college. It was my friends, and I didn't even catch it. Someone was like, "Oh, my boy Diego was like, what? Can you not hear that either?" Or like something. And all of us, we were like, "Did you just talk? What did you?" That's funny. But we'll get back to you. We'll get back to you on that, Big Deal. We'll get back to you. That line can be support or resistance. I'm not sure if you're speaking of the point of control from the volume profile. But yeah, you could use it as so.
Absolutely.
Depending on how you're viewing it.
I'll do you one better. I think that every horizontal line on this chart right now could be support or resistance.
That's also valid.
I'm pretty sure.
It depends who you're asking.
Yes, there's different levels of support and resistance at the different lines. But
can you show me?
What are these horizontal dotted lines you got going on?
So
is that your value area?
Yeah, it's the value area.
It's just above that is the value area?
So this whole thing is a value area. So this right here, value area, same thing, same zones as these over here.
Sure. And but that shaded one up above is just from a different day or something?
Yeah, it's from I forget exactly where it's from, but yes, exactly.
I'm following. Man, Andrew, I just glanced over at chat and saw WAP. Like I saw Errol in all caps and then WAP. I was like, where is this going? VWAP.
Now you know exactly where this is going.
Well, can you show me how you set up your VWAP if you happen to use one?
I don't use. So VWAP is one of the indicators that I do. Like I haven't used VWAP in a while. The volume weighted average price. I'm only a fan of volume-based indicators. So I love that VWAP was brought up.
I'm a big fan of VWAP as well. I mean, I personally set mine up. Mine's pretty close to default. I just like to have the range shaded because especially in a technical context, yes, this is exactly how mine would look. You can choose colors that suit your fancy, but yeah, I am a fan of VWAP, and even in the context of this exercise that we're doing right now, the value area is the area between these two dotted lines, but then we bring VWAP into the equation, and it's like, okay, well, there's an even bigger value area right there in the top half. And if we get over this value area to the upside, perhaps there's a little more room to run there than if we were to get under it to the downside
100%.
with VWAP. But obviously, as with all indicators, it's trailing.
Well, I mean, statistically speaking, especially, I mean, in this case,
I don't know what length period to use.
We would have to adjust that.
That's interesting. I mean, does it not just auto update to whatever like interval you're on in your chart, or are you talking about a different length period? The V stands for very, very weighted average price?
Very weighted average price. Very, very weighted average price.
Now now you guys got me thinking about inappropriate VWAP acronyms over here.
Yeah, no. And then when it comes down to the VWAP, so we know that the VWAP is a volume-weighted average price. So, I mean, if you think about it, you can get the volume-weighted average price for any day. You can combine them day to day. You can combine them from all of last week. Now, we'll go into the settings and figure out how to do that together another time. But, I mean, it would be in the same way of use of like a volume profile. Because, for example, the fixed range volume profile is nice because when you plot it on the screen, you know exactly what data it's pulling from. Because we plotted the volume profile right here at 9:52 this morning, we know that the volume profile is taking all of the data from 9:52 this morning to right now. So now with the VWAP, right, it might be taking the data from all of yesterday. Is it a running VWAP? So to your point, you know, you can adjust the settings to
yes, Lone
however you want your VWAP at.
I'm happy somebody caught my WAP situation there.
I mean VWAP. I mean VWAP.
I personally use VWAP along with volume profile. Yeah, I mean, I can definitely agree with that setup. If I am using technicals, I will do VWAP and Ichimoku Cloud. I'm never trading completely on technicals. So if I have them on, I really prefer to have technicals that can show me things at a glance. I want it to be a supplementary bit of info that I don't have to really look at too closely to interpret what's happening. And so, yeah, anything. Which really, this is sort of a brain dead way to put that, but basically anything that has like a shaded region going on around my candles is something that I'm going to be into. So, yeah, VWAP and Ichimoku Cloud is good overlap, but I have kind of strayed from technical analysis a lot in my game as of late. I actually think it still says technical analysis is my specialty on the website. I might have to have that updated at this point.
Got to put the Ichimoku.
What's that say? Keltner channels. I cannot say I'm familiar with that.
I've heard of Keltner channels before. I can't say I know what they are.
I'm getting Bollinger Bands vibes from that.
That's the exact same category.
Yeah,
same category.
Anybody use fib retracement anymore? Or was that like a 2021 fad?
Don't knock the fibs, bro. The fibs are actually fire.
I'm not knocking the fibs. I used to use them.
I agree.
I've been off it for years.
No, I agree. So the only reason why I ever like a fib and will only use a fib is so I can find the 50% waypoint between a range that I want to see. That's the only reason why I like a fib. So it was funny when I was using Thinkorswim. Throwback, right? So I was finding the range. I was going through hundreds of charts, finding the range, and then calculating the 50% mark and 75% mark on hundreds of ranges on a chart. Little do I know, you can just use a Fibonacci band and plot it from high to low, and you can get your quadrants. And I was hand picking and doing the chopping it in half, finding the quarters, and doing all of that by hand. Little did I know you could just use a.
It's just like if there's a technical that you think could possibly be useful, somebody has thought of it before. It's sort of the.
I will say, for my sake, I was like a lot younger, and I didn't think about that.
No, yeah, that's totally valid. I wouldn't have either. I've definitely done things that are like way more tedious than they needed to be when I was early in my trading thing, my trading thing, really. I'm looking at the Sizzle Index now, as I saw that was mentioned. It measures unusual option activity by comparing the current day's options trading volume for a stock against its 5-day average volume. It's a cool feature.
Oh, it gives a little definition for it too.
Yeah.
Nice.
Interesting. Right. Fibs are great for medium term, long term. That's the thing too. Yes, is I do think that fibs gain a lot more validity as you zoom out your scope. And that's what a revolutionary thing. More data means more accurate data. But yeah, I mean, it just obviously becomes more statistically significant as you broaden your scope like that. So yeah, there absolutely are good angles in that.
All right, guys, we just adjusted the fib retracement tool. We took off all of the nonsense levels. Look, it's only a nonsense level if it doesn't mean anything to me. It might be a level that might be very profound to you, and it might mean something, but
you don't understand Fibonacci. You don't understand Fibonacci sequences and why we do this.
Exactly. I'm gonna turn off
flowers and their petals.
Yeah, I gotta track them.
I don't really, honestly, guys, like I understand that it's like golden ratios with the fib and stuff, but like there's a little disconnect missing in my brain here. I know I can see the picture of like the like spiral thing with the lines in my brain here, and I also know it's like it comes into play in nature a lot, but I'm missing a piece. I got to get sharper on what Fibonacci actually is.
There we go. We'll keep it at that. We have
for a collab with Spot Gamma in the chat. All right, mental note. We might be able to facilitate that.
What's that? What was that?
Somebody asking for collabs. Love the Mr. Hanky voice. Thank you. Technical analysis is astrology for traders. I think that is apt to a point. I mean, there's definitely validity to it. I wouldn't go as far as astrology, but I think that's totally a fair analogy, though.
It's fair. It's fair.
Okay.
It is fair.
All right. I see there's enthusiasm for the Spot Gamma collab. I will inquire about that. Organizing these things is above my pay grade, but I will bring it to the attention of the people who do.
You know what this looks like right now? Let me find. This is supposed to be a bouncy ball, right? But say you get a bouncy ball falling off the cliff like this, right? This actually is what it reminds me of. And we just
these basketballs are very important, guys, to understanding.
You know, it looks like we're running out of steam a little bit here, right? Like the ball just, it bounces and then it makes the lower highs and then it bounces. And then before you know it, yeet. I'm just kidding. I don't really know. I don't know if we're going to head lower, but I do know this 25,000 level is going to be an area of interest.
This is a classic basketball rolling down the stairs.
This is just
pattern.
Exactly. Just alley-oop.
Textbook basketball rolling down the stairs.
Textbook. I hope you guys studied this one.
Yeah.
But big deal.
I'm a big fan of the golf ball, the golf drive pattern.
Oh, that's one of my favorites.
Yeah. Backspin golf drive pattern.
Oh yeah. But big deal. I know you even mentioned 25,000 earlier today. 25,000 was a level that we were looking at to cover our short positions. So it's still going to be an area of interest. All jokes aside, for the rest of the week, whenever we come at 25,000. If we trade below 25,000 and we hold, we're going to be a little bit more bearish. We stay above 25,000, we're going to be a little bit more bullish. And if we stay above 25,000, I'm going to look to take more long positions. But if we don't, then it's going to be hands off, and we'll have a little bit more of a bear bias. But that 25,000, not only is it that psychological kind of position that we have on, but also it lines up with our level of values as well, with the data and standard deviations.
Absolutely, yeah. People calling for cat emojis, which is that is sharp.
That is a terrible request.
Well, I'm saying cat emojis like they're like saying dead cat bounce.
I was like, cats are dogs, bro. Dogs.
Although you're saying it's going to dolphin dive, though, right?
Exactly.
Okay, so maybe we need a dolphin emoji.
Exactly. A little slide cancel.
Yeah.
Slide cancel is a fake
basketball down the stairs pattern into dolphin dive.
Yeah.
Recovers into rainbow lucky charms.
Exactly.
You guys heard it here first.
you joke, but I could put this in serial terms if you want. I could do it.
Market likes to go for round numbers, except when ES goes to 69, 69. Real.
No, I'm just kidding, Frank. I don't hate cats. I really hate them. No, I'm just kidding.
I love cats.
No, they've grown on me. I'm allergic to cats, so I'm not a cat hater. They just don't like me.
I don't think they give us a dead cat emoji, though.
Oh, no, I wasn't going to do that anyways.
That would be.
I mean, you'd have to put the dead skull and then the cat.
Market is ran by psychology, so if everybody believes the same thing. That's absolutely true. Also, the comment about some traders use astrology too made me laugh. Should I like throw 1K into an astrology port? I don't even know what that means. I don't even know how I would begin to apply astrology to trading.
So actually,
I'm a Libra, so like, is it supposed to am I supposed to trade based on my astrology, or is it like stocks? Do we do it by their founding date? And how does it work?
I follow somebody on TikTok from the early days, and she grew a massive following, like 1 million or 2 million followers. And she doesn't do it now, but she started off talking about stocks and was literally related to astrology. And like if the moon was in retrograde or this or that, they would place. I'm not even joking. And like she grew a huge following from it. So, hey, I guess their astrology trading is out there, no doubt.
There's a market for it.
There's a market for everybody.
I only short when Mercury is in retrograde. A bunch of 100 emojis getting fired off at that one. Shooting star candle is in bull constellation. Real.
1719.
Real. I see. Saying dead cat bounce is super offensive. You guys seen the chicken trading Forex? I have seen the chicken trading Forex. I couldn't.
Is that an AI video I haven't seen yet?
I couldn't elaborate more on that. No, I think they have. Somebody can correct me if I'm wrong. I haven't seen this with my own eyeballs. I've just read little stories about it here and there. But they have a chicken that is placing Forex trades. Somebody can elaborate further than that. But I have read a little blurb about it before. I'm basically the chicken trading Forex, guys. I mean, I have about as much sense as that chicken does.
No,
and I
but
just
no,
keep winning all my
no.
Forex trades.
Thank you. No chicken is winning 12 out of 12 on the Forex trades. Come on now.
The lion does not concern himself.
There we go. They don't get that one. They don't get that one. That's too
You're
soon.
right.
They
You're
don't
right.
get that one. They don't
You're
get
right.
that one.
I bet somebody gets it. Somebody let me
Right
know.
when I heard you say it, though, I love that you said it.
Somebody let me know if you know about the lion does not concern himself.
The lion does not concern himself with consolidated price action. You understand that now.
The lion does not concern himself with margin calls from his risk manager.
Big deal. I get it.
Good. Thank you, guys.
No, I know we got about 10. We got about a little less than that left. The market's really slowing down.
I'd be remiss if I did not point out my poster child UNH before we were off this.
Oh, absolutely.
Which continues to make legs up.
Oh, let's
we are at 363 now, and climbing. And I mean, yeah, I just every time we make another leg up, I become more certain in my thesis here. It looks like they are very close to a resolution. They're targeting early November for a resolution on this outstanding lawsuit, and the current vibes, recommendations, and vibes are that the lawsuit be dismissed. So it's looking increasingly likely that this lawsuit could get dropped for UNH in maybe less than a month's time. And if that happens, I don't know what's stopping UNH from going back to 600, for real. I mean, they took a giant tumble when their CEO got assassinated. Fair. That hurts a little bit. But you can get a new CEO. Nothing happened to their clientele. Their fundamentals are still really good. And this lawsuit is like the only tangible thing that's hanging over this company. So I think the lid could come off this thing when that lawsuit gets dismissed. And I'm excited about it. I am aggressively bag holding. I'm up almost $100 per share on my 4 shares.
I mean, it's looking like it might be ready to rip again.
Yeah.
So I hope that 2x is from where you're already at.
Yeah, I mean, I got 254 DTE, 500 calls, and I mean, yeah, I think I'm targeting like before the end of the year. I think this thing is back at 450.
Yeah.
So it's interesting, but
UNH ripping.
Wanted to throw that out.
You can't be a technical trader and a probability trader at the same time. I want to point out what Trev mentioned. TA helps with price points. So I know sometimes we'll look at NASDAQ. It's not more so that we're trading off of the technical analysis itself. Like, we're not really deriving our conviction based off of what the candlesticks are doing. Excuse me. But partly because technical analysis allows us to define our risk when we're trading directionally, which does add to your conviction in a trade because you're able to do that. So it helps with the price points, knowing where the highs or lows, just so we can define our risk and have the confidence to pull the trigger on a trade. So that's really what it's for.
Do you have Dooley, to your point? I mean, I wouldn't say we're pushing charting outside the platform. It's just an exciting collab, and we want people to have access to whatever charts they prefer. I see it as more of a convenience thing than anything. The charts, and yes, and I appreciate the commentary about the charts in the platform. They have gotten a lot better. I still primarily use the platform charts myself. Back when I was doing more technical stuff, I was more into TradingView, but now I pretty much exclusively use the platform charts. But yeah, it's just personal preference, just giving people the opportunity to get whatever they want, and making it more convenient for the people who already use TradingView in the first place to be able to trade directly on the TradingView platform. Full port on UNH leaps. I cannot say I condone that type of behavior, but I mean, but a little sprinkle. That's where I'm at. Is sprinkle. It's just a little sprinkle, but I am very convicted about that stock. I think it's got a lot of room to the upside here. 60% of the time, it works every time. That's true too. that's
50% of the time.
Everything's 50-50.
50% of the time it works every time.
Happens or it doesn't. 50-50. But oh yes, the shares. That's a apt point as well, Stephen. Good shout. Yes, the premium on the leaps have come to be a little bit juiced. I bought my leaps at like the 280 range when it was really beaten down, and it was the put side premium that was still juiced. Now that has shifted back a little bit, the leaps are a touch pricey. So yeah, shares not a bad opportunity if, this thing has another $200 of room to the upside, and you could take off any time constraints that you've got going on in that regard.
Kim, I'm probably a technical trader.
Kim, I would say you hit the nail on the head there.
I just saw Kim just pops out right before we dip off. I haven't seen her since the beginning.
Probably.
That's funny.
Yeah. You seem to be a very successful one at that, Kim. From everything I've ever seen you posted in here, you seem to have it figured out. So yeah, and that's the thing too, and that's the beauty of trading, and that's what drew me to it originally. Is that there's just so many ways that you can choose to attack it and still be a profitable trader. It's remarkable. There's
100%.
Yeah, there's few other things in the world where there's this many people that can think this differently and all still reach the same correct conclusions. It's cool.
100%.
Probably.
We got a couple more minutes here.
Gold up, silver down. Buy the silver dip. Fox Metal Man.
Oof.
What do you got to say, Tin Man?
Oof. Let's play Would You Rather.
Sure. Okay.
I would rather buy the silver dip while gold is still ripping than buying the silver dip.
If I put a gun to your head right now and I said you have to long gold,
I'm buying the silver dip.
If you had to long gold or short silver, which would you do?
I'm longing gold.
Okay.
Until proven otherwise, right?
Yeah. Proven otherwise. That's what I keep saying.
Yeah.
Yeah, that's interesting. I think
it's just a tough one for me.
Being uninvolved,
I gotta sit on the sidelines for me.
I'll definitely be on the sidelines as well. But I mean, I definitely do see the thesis, and it's just so interesting because this is, the first time that we've gotten a gold move where it's like, it seems to be the gold has moved up. I shouldn't say the first time. That's a parabolic claim, but it's not common that you see gold move upside alongside the.
No, it never does.
Usually those two things stay relatively uncorrelated, as gold tends to be an inflation or fear hedge. So with the way that gold has ripped this entire time, and now there is actual legitimate uncertainty that is pushing gold even higher with the government shutdown, it does seem like silver should be next on the list. Although sitting here looking at the chart of silver, I mean, it's certainly not having a bad 3-month stretch. What holiday creates the most trash?
Go. You
what
first.
A question.
Go.
I mean, okay, locally, like within your house, I would have to say Christmas. I mean, just presents, right?
Right. Everyone's thinking Christmas right off the bat.
Yeah.
But now I think, is this a trick question?
Is it a trick question? Halloween has a lot of rappers involved also.
Like music?
No, like candy rappers.
I'm just kidding.
Oh, good. Yeah, a lot of rappers with Halloween. Plus, all the college kids are getting sloshed for Halloween. That's a lot of like alcohol trash.
There's a lot of alcohol trash.
I think I have to say Christmas though.
Okay, you're gonna go Christmas. I'm gonna go with Christmas too. I mean,
Mardi Gras is sharp.
We got a lot of presents. We got a lot of wrapping paper for all the presents. So we're doubled up on trash right there. We'll go Christmas. I just feel like, why would you ask us the question if it was Christmas? Because where a lot of people are gonna think Christmas.
That's true. 4th of July. 4th of July is a good point as well. It's not a trick. I was thinking 4th of July.
Okay. Yeah, I thought of 4th of July too.
All right. Well, I guess that's gonna be our final discussion here: is which holiday creates the most trash. That's a good question though. That did make me think.
Yeah. Oh, I thought you was gonna be like your birthday. I was like, hey, that's a diss.
Yeah, that's true.
No, anything else before we wrap today?
No, I got nothing else. I'm happy to be back.
Cool. We'll see where the market ends up by the end of the day. We got about a couple hours left till market close. We appreciate everybody in here. Big deal, Jason, Kim, Steph, T-Port, Trev, Jared, everybody else. Thanks for taking the time to hang out with us. Be sure to stay tuned for more coming on next. We'll catch you guys next time. Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Tuesday edition of what it is that we are trying to do. And don't look now, but I think the market might be down like 40 basis points. Yes, you are seeing that correctly. The internet is in shambles. So welcome to the show. I'm glad that you are here. Johnny Pools 47. Man, he is getting absolutely ironed out today. And so thank you guys for watching the show. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube if it is indeed in real time, right around 2 o'clock Eastern time, October 7th, 2025. You can join the conversation and join the discussion and communicate with your brethren who are also watching the program. Man, you can celebrate if you're a bear today. This will be the first day in 96 days. So let's pop in. John, bring us into the market. Man, is this still happening? Is this really happening? Like, is this real life? Look at this. Look at this. EMI/S&P is down 38. Risk-free instrument, also known as the NASDAQ futures, not exactly risk-free in today, down 175. Guys, look at this. Boomers down 190. Russell 2000 futures index down 31. Man, hold your horses. It has arrived. Right? Again, we are 60 basis points off of all-time highs. The apocalypse is indeed here. Where's iPod Touch? Is iPod Touch in the chat? Where's my man with the event horizon? Like, this is it. Like, it's actually happening. I can't believe it. Of course, we're going to close green, but at least right now, we can all kind of take a quick little victory lap around the bases. You got bonds are actually up today. You got notes up a little bit. You got oil down 11 cents. You got UB40 up on the day. Man, look at the shifties. Man, look at these guys and gals. The shifties. Gold up 24 points, up to $4,000 an ounce. Man, I got to hand it to him. I got to hand it to our boy Peter Schiff. Like, he nailed it. He 100% nailed it. My man's been calling for $4,000 an ounce gold since 1986. And here you go, 2025, he finally got there. And so my hat's off to him, of course. Very, very, very good call. I mean, I'm very similar, right? We're not wrong. We're just early. Right, we're not wrong. We're just a wee little bit, before our time. And so gold up to 4,000 ounce. What's silver doing? Oh, silver's getting smashed today. So, man, look at this. Somebody check on your local Hunt Brothers. Maybe get like some takeout pizza or something just to support, their endeavors, because silver's down $1.10 on the day. That's pretty crazy. Again, you don't normally see a gold-silver divergence, but I feel like, again, I feel like we've had this conversation a half a dozen times in just the last month or two. There's been more days where gold and silver have diverged. There's been more days where gold and silver have not necessarily followed each other through the forest. Now, what does that mean? I'm not exactly sure. Like, I think generally speaking, generally speaking, I just saw a message from Beth in the corner of my screen, so I meant to say Beth. I'm like, I'm not talking about Beth. I'm talking about silver. Generally speaking, silver is going to be more of a risk on, just a risk on type of play. So generally speaking, silver is not necessarily going to have the safe haven, the kind of flight to quality, kind of natural characteristic baked into it like gold does. Like gold has, it can wear the risk on hat. It's been wearing that hat for the last couple of months now. It can also wear kind of that flight to quality, that, man, I don't know what's going to happen to the US dollar. I don't know what's going to happen to fiat, like things like that. Like, what do people think about? They think about gold generally. Now, could they also think about, silver, copper, some platinum for my platinum traders out there? I mean, they could, and sometimes it does, belong in that category. But again, by and large, just generally speaking, gold is going to be the one that's going to wear that hat. But silver, as being more of a risk-on type of play, it sort of makes sense that it would kind of diverge from gold from time to time. But I'm still surprised. I'm surprised that it has diverged as much and as often as it has over the course of the last couple of months. And so, man, let's take a look at Bitcoin. What's Bitcoin doing today? Bitcoin. Wow, look at Bitcoin. Bitcoin getting absolutely smashed. Now, again, I say that, of course, it's like, 2% off of all-time highs at $121,000 per Bitcoin. But I don't know, maybe it's got a little ways to go to get to its digital gold status. Because on a day when, I don't know, what's the reason, guys? What's the story? Like, what are they trying to tell us? What are the powers that be? What are they trying to communicate to us is the narrative surrounding this move? I don't know. I can't keep up. Like, is it the durable goods print that dropped this morning? Was it the housing starts coming out of Canada that dropped this morning? Like, I can't remember. I just can't keep up. You guys tell me, what is the narrative that explains this move? But Bitcoin down when gold is ripping, you wouldn't necessarily expect to see that if Bitcoin is indeed going to command this kind of digital gold status, which it might do that one day, but it doesn't necessarily appear to be where today is that day. So gold down a little bit. What's volatility doing today? Volatility futures up 60 cents on the day. And then spot volatility up to 18. Man, how about that? What's spot volatility doing? What's VIX doing? They still in business? Yeah, barely. VIX up $1.12, up to 17.49. Guys, let me tell you something. If the VIX gets to 20 and it stays there for more than 10 milliseconds, the internet, Johnny Poole's 47, Johnny Poole's 48, Johnny Poole's 49, even all the way up to Johnny Poole's 50, they are going to be in complete meltdown. That's a VIX at 20. If we get beyond 100 basis points off of all-time highs, man, it is over. It is over for your local neighborhood internet furu. So make sure that you are checking on these guys, you're checking on these gals, because it ain't going to be good, man. It ain't going to be good at all. And so anyway, VIX up $1.14. And so we have to check with VIX HQ to see if that's a real print, because you can never quite be sure these days with the old VIX. All right, let's go into, let's see. I want to get to you guys, man. I see you guys, man. Look at you guys, man. Look at this. Man, I see you guys in the house. Ash Finn is in the house, man. Andrew Cortado's in the house. Man, I appreciate you guys. Paul Heyman in the house. I'm gonna surprise and delight somebody. You got me laughing, Paul. I'm gonna surprise and delight somebody early before I even get to the question. This is too funny. Paul Heyman says, and by the way, if you're ever confused where I'm getting these questions from, I'm getting them from the YouTube chat. I'm getting them from the live chat. So if you're watching over on the Tasty Live Network, I would bounce on over to YouTube if it is real time. Even if you're watching the playback, like in the archives, YouTube might be your spot because you can watch the comments come in like when they came in. So Paul Heyman. So Paul Heyman is piggybacking off of yesterday's conversation with Tony and Nick. Paul Heyman says, anyone who pays $14 a pound for chicken should be driving a BMW. How much is Dad's chicken per pound? Well, it's not Dad. I'm not a dad yet. It's Daddy's chicken. And so the chicken that we buy is $14 a pound. That is a true stat. It's unbelievable. Like, it's incredible. Like, again, I have very strict instructions, very strict instructions that, the chickens, it's not enough to be organic. It's not enough to be farm to table. Like, I've got to go like I've got to have firsthand experience of these chickens. I've got to be in the field, like monitoring the chickens. I can't be grabbing an outcast. I can't be grabbing, one of the ones that no other chickens like. Like, he's got to be very well liked from by his peers. He's got to come from a nice neighborhood, like, a chicken from like a 2-parent household, like things like that. Like, these chickens need to be A+++++. And so, yes, it is $14 a pound, but that's the reason why I can't drive a BMW, because I've got to get my wife her $14 a pound chicken. And by my wife, I mean I'm eating most of it. And so anyway, but Paul, you had me laughing there with with the chicken comment. But all right, let's go ahead. I'm going to get to you guys, man. I'm going to get to as many of you guys as I can here in a minute. I usually get to somewhere between 0.5 and 0.7 questions per show. Let's take a look. I want to, man, we are just getting, man, Rigatoni taking us out. Man, I mean, IWM helping the cause a little bit. Palo Alto helping the cause a little bit. So these are obviously really, really good. And we've got earnings coming on down the chutes. And so I don't want to do too many things today because we have so many things that are happening in the next couple of weeks with earnings coming up. And if you look at, if you go to like a Tom's watch list, again, let's give my man that 35-cent royalty to help finance that second Range Rover. But especially given the fact that he's unemployed now. If you sort by earnings, I mean, you can see, today is October 7th, right? So you got all the financials coming out in about a week. And then you've got, some of the other guys. Netflix is coming out, right? You got IBM and Tesla coming out. You got Procter & Gamble coming out. Everybody's going to be trading Procter & Gamble earnings, obviously. If this is indeed the apocalypse, then I'm certainly going to be trading some Procter & Gamble to the upside, of course. And then you go to the end of the month, right around kind of Halloween. You've got, Apple and Amazon, right? October 30th. You've got Microsoft and Roku, right? October 29th. I haven't traded Roku in quite a while. And so you've got, AMD, man. Look at AMD up another $7 today. That's crazy stuff, man. November 4th. And then I think you've got, let me think here. It's going to be, so today is October 7th. Yeah, it's 10/29, right? So right here on 10/29, let me grab a different color. Let's grab the Glacier Freeze, right? My Starbucks, 10/29. Microsoft, Roku, 10/29, right? Meta, Chipotle, 10/29. Man, 10/29 is going to be one for the history books. Like 10/21, or 10/29, I should say. This is going to be one that they write about for centuries to come. 10/29 is also the USA earnings, because Uncle Jay is going to report the status of the United States of America on 10/29. That is going to be the next Fed meeting. And listen, guys, if you're multitasking, come back to me, because this is important. Guys, I've been trading for a very long time. I started trading in 2007 when I was second-year PhD student, third-year PhD student, second-year PhD student. It's been almost 20 years now. I've been through a lot of things. I've been through the great financial crisis. I studied the internet bubble. I wasn't trading that actively at that time, but I've been through COVID. I've been through flash crashes. I've been through all these different things, right? Monitored, studied, researched many, many different economic data points and traded a number of them over the last 20 years. This Fed meeting that's coming up on 10/29, this is not good, guys. There is no close second, the most important Fed meeting that the financial markets will have ever had to absorb. And so you've got 3 weeks. You've got 3 weeks. Normally, we don't know this until like the final day or the final hours. You now have 3 weeks. So if your bunker is not fully equipped with Wi-Fi and snacks and electricity and all the things that you need, that's on you, man. That is 100% on you. And so 10/29, they're going to write about it for many, many, many millennia to come. But that's crazy stuff. So I don't want to do too many things today because we have so many things happening here in the future. But I do want to, one thing I do want to talk about is I want to talk about, there's really nothing to, man, rigatoni's just, man, that's something. This is real. I'm more of a penne type of guy, so that makes sense. But man, this is really, it's something, man. It's just crazy. It's totally crazy. What I want to do, though, is I want to talk about this Home Depot trade, because this is really interesting. So you can see that Home Depot, we're actually still up on the trade. We're barely up. We're only up like 5 or 6 cents. But it's a little bit surprising that we're up at all. Right now, we don't do calendar spreads that often. We do all the other strategies all the time, like strangles and verticals and all the other things we have going on. So I'm kind of skipping over those right now because there's not too much to do in those strategies. And so I want to spend more time on Home Depot because this is really interesting. We don't do that many calendar spreads, and it's a bright spot. Like it's a little bit of a something, right? I mean, the P&L Open Bros, I mean, they're coming to get us, man. And by coming to get us, I mean they got us. They 100% got us, but they don't got us here. We got our 8 cents in Home Depot. And that is what we are going to hang our hats on. And so the mark price of Home Depot calendar spread is $6.50. The trade price is $6.44. So we're up a few pennies on the trade. But the interesting part about this is the simple fact that Home Depot is down to $3.87. It's under $3.87. That's pretty surprising. Like, that's pretty surprising that the strategy is holding up so well. And so I started to think about it. I'm like, all right, when you do a calendar spread, what do you want to have happen? Well, you want the stock to settle right around that shared strike area. Like that's where you want the stock to settle. And so the simple fact that we've overshot that by almost 10 points now, maybe 8 points to the downside, and we're still able to scratch out just a wee little bit of a profit right here and right now, it is a testament to how the strategy is set up, and also one of the main reasons why we prefer calendar spreads on the put side over calendar spreads on the call side. Because remember, if you go back to here, let me bring up my chains here. Let's bring up our trusty chains. Speaking of trusty things, look at the video. The video is holding out again. We're now 11 minutes into the show, and we're still doing okay, so that's pretty solid. But we did this trade back on 10-1. So we did this trade on October 1st, so it'd be 6 days ago. So you can go back, you can watch the show on October 1st, and you can see when I put this trade on. So I did the calendar spread at 242. I probably started talking about it around 222. And so that's where I would start my analysis if you're looking for a timestamp to begin watching that show. You'll see me talk about the calendar spread. You'll see me talk about all the things I'm doing. I think one of you, I think Joel James may have brought us this calendar spread on Home Depot. So thank you there, Joel. Or if I'm misremembering, thank you to the other person who brought us this calendar spread. But one of the things about choosing calendar spreads is you want this to be a long volatility play, because the way that the spread is naturally set up, you are short in the front month, you are long in the back month, right? It's very similar to my hairstyle. Very similar to my hairstyle. I'm short in the front, I'm long in the back, although I'm kind of long in the front and longer in the back, but still the relative standing between the two, it's exactly the same. When you are short in the front and long in the back, in the markets at least, you are going to be positioned for greater volatility. And maybe it's very similar with my hairstyle, actually, from a volatility standpoint. When volatility goes up, that's going to benefit the strategy because the back month, that long option, has a higher vega than the short option in the front month. And so naturally, the strategy is already set up for a volatility spike. Okay. If you want to position yourself to take advantage of that even more effectively, then choosing the put options is going to be more advantageous over or relative to choosing the call options. Because remember, if I'm choosing some strikes that are a little bit away from where the stock is right now, where I'm trying to position my shared strike, the short and the long on top of each other, at some price point away from where the stock is right now, so I want to weave in a little bit of directional bias, usually we're going to favor the downside over the upside, because when stocks go down, generally speaking, this doesn't happen every single time. There are some stocks where they do tend to move together. I mean, AMD might be one example of that, actually. But usually you're going to see this inverse relationship between market volatility and market prices. You're going to see a situation where if the stock goes down, the volatility in that stock is going to be rising. Okay, I have a calendar spread. It's already set up. It's already structured as a long volatility play, as a positive vega play. Okay, if I choose put options, which is what we did here in Home Depot, then I'm positioning myself to potentially take advantage of the volatility spike. Well, that is exactly what's happening here. Because remember, if you miss the shared strike on a calendar spread, that's how you lose money. Like if you miss it on either side, that's how you end up losing money. If you stay near the shared strike, then you're going to make money. But here with Home Depot, we've missed it by $8, and yet we're still up a little bit. Well, take a look at this. If I stay in my chains here really quick, and I right click on when we put the trade on, and I go to view market state snapshots, you can see we did the trade again on 10-1. But if I look at the IV index, right, look at my little yellow diamond there in the middle. The IV index at the time of the trade was 20.7. 20.7%. Okay, what is the IV index now? Well, let me go over to the overview tab for Home Depot here. Overview. Let me grab my marker here. Overview. There's IV rank, right? 13.6. But there's IV index, 22.5. So what do we see? Excuse me. We see that volatility has ticked up by about 2%. Right. Again, if I bring my mouse back to where you can see it if you go over to the y-axis too, but if I just hover over it, you can see it very clearly. The IV index at the time of the trade was 20.7. It is now 22.5. And so I picked up almost 2 volatility points on the way down. That is what is essentially saving this strategy. Well, that, and we do have the positive theta. This is a positive theta play. So the extrinsic value is coming off of, the calendar spread and things like that. But the volatility is the reason why we've been able to keep our head above water to this point. So really interesting little teachable moment that we don't always run into because I don't do that many calendar spreads on the show. Maybe I should do more because this is the only strategy in the portfolio that's not getting crushed, that's not getting creamed. And so maybe this is going to become from theory to calendar spread here pretty soon. But there's some Home Depot calendar spread commentary for you guys and some analysis. Hopefully that helps you guys out there for those of you out there that are also trading calendar spreads. And then, yeah, I mean, looking on down the, there's just not much. I mean, Pepsi's working out okay, but I'm going to sit tight. Let's try to get, a little bit closer to our profit target on that. Starbucks is getting smashed again, down to 81. That's really, really wild. Again, though, I mean, you've got to keep in mind what this trade has been the entire time. I mean, Best Buy and Chipotle, I mean, these were both busted earnings trades. And so I don't feel any type of way with either one of these trades. I mean, I want to hang into them, both of them for at least another day or two and kind of see if we can't, kind of right the ship. But these were busted earnings trades that kind of turned into longer term holdings. We kind of ended up inventorying these positions. And that's just what happens sometimes when you have short puts that go in the money. And I think it's a huge advantage if you are playing the market to the upside, you're willing to hold the position long term. Like those are big advantages to using strategies like short puts. Starbucks is totally different though. Starbucks was a trade that I did at the end of December last year. And I did it by just buying the shares to begin with. And then we've just been selling calls against it strategically along the way. So its intention is to be a long-term holding. So right now I'm looking at Starbucks when it's down to 81, just like you guys out there. Like here, you guys out there that have longer-term holdings. Maybe you've been holding the stock for many, many more years than just a year. Maybe you've held the stock for 5 or 6 or 7 years and you like the company, you like what it makes, you use the good, you use the service, whatever, and you have a very, very, very long-term horizon for that position. What do you do when the stock drops 10%? Like Starbucks was just at 90 like a few weeks ago, it feels like. What do you do when the stock drops 10%? You probably don't do anything. You certainly don't sell, right? You would, if anything, add to the position. You would kind of dollar cost average your way in, kind of build up more shares at a better basis and, maintain that long-term horizon. Unless the story or the narrative around the company has completely changed, you're not going to do anything. And so I'm trying to use this Starbucks position as, I mean, it's been like almost a year-long case study at this point. And so this has been a great opportunity for us to kind of mimic what so many of you guys out there that are longer-term investors, and you do have a lot of stocks where you have longer-term viewpoints. This is something that you guys are dealing with all the time. And I know a number of you, because my email inbox supports this phenomenon, you have been, kind of passive investors for a long time. And now you're trying to figure out what else can I do? Like now you're trying to, kind of say, hey, can I be a bit more active? Like, can I do a couple more things around the edges of kind of the base long portfolio that I've been holding that's treated me really, really, really well, but I don't know that the market's going to go up 30% every year into the indefinite future. Spoiler alert, it's not. Like if history is any guide, it's not. And so you might be thinking, all right, I need some other things to do. And this could be something that you could do. So anyway, I digress. But there's some Starbucks commentary on you too. Starbucks, man, just getting absolutely crushed. All right. So let's go in here. Where are you guys at? Man, I see you guys. I see you guys. Oh man, you guys are, this is some good stuff. And so Peter says, let's change the name of the strategy from calendar to mullet. Yeah, I don't have quite a mullet yet. So I've talked about this. I've talked about this a lot with my wife, and I've been very clear about this. I say, hey, listen, I've never had a moldy beard. I mean, I've never had hair this long in my life, ever, never, ever. So it's fun. It's fun. It's different. It's whatever, right? Well, I told my wife, I said, hey, when I go back to short hair, which will happen at some point, when I go back to short hair, I was like, what I'm probably going to do for like the 4 to 8 week transition period is I'm going full mullet, just full. This is not really this is like a very half-hearted attempt at a mullet. This isn't even an attempt. This is just nature kind of taking its course. Like if you're going to really do a mullet, you've got to go in to the stylist and be like, hey, show her or him a picture of a mullet and say, that's what I want, right? And that's what I'm going to do. That's where we've got like shaved sides, right? Like shaved sides. And I'm talking like 1999 party in the back. I'm talking like we got the strobe lights, we got the smoke, we got everything going on back there. So that's going to be in the transition period. My wife doesn't love it. She's not really on board with the idea, but that's the beautiful thing about marriage in one flesh. That's the beautiful thing about marriage is, we are one entity. And so she just has to roll with it. And so anyway, I appreciate you guys. And so let me see if man, you guys are you guys bringing some B or B plus quality trolls today? I think you might be. Man, look at you guys. Let me try to find somebody in the middle though. With an actual, I see 07. 07's in the house. Hold on. This is actually related to the portfolio. 07 in the house says humble questions, but most of the strategies in the screen are losing a lot of money. Am I right? Yes, you are 100% right. You are 100% right there, 07. Thank you for being here. 100%. And you are 100. You couldn't possibly be more right. However, right? This is the joke I make when I say the P&L open roast, because that's what this column is. And I'm not going to shy away from it. It's right there. Right? I mean, there it is, right? Oh, there it is right there. I almost drew the beta weighted delta column. I mean, there it is right there. I mean, all we got to do is kind of one of these jobs. And then it's not there anymore, but it's still there in spirit. And so the P&L open column, I mean, I joke about it. And I mean, obviously Best Buy, we've gotten crushed. Chipotle, we've gotten crushed. Starbucks, we've gotten crushed. I mean, we've gotten crushed across the board on a few positions. But you have to understand, 07, you may be brand new to the tasty world. Like, welcome to the tasty bubble. I hope you stick around. I hope you kind of poke around at the different shows. My show, Liz and Jenny. You've got Jamal, who's right after me. I mean, you've got the Options Trading Concepts Lives. You got Nick and Tony in the morning. Like, there's so many resources for you. Generally speaking, though, we like to manage our positions early. So we want to manage our winners early. I should be even more specific. If you're managing your winners early, you're never going to really have a situation where your P&L opens are significantly green. Now, that doesn't mean they have to be as impressively red as mine are, but you're never going to have a situation where your P&L open is like, up $2,000, up $4,000, whatever. I mean, it's all account size relative, of course, but that's our strategy. We prefer to, manage the winners early and give the losers duration. And so because of that, I would be willing to bet that every tasty trader that's watching this show, you guys back me up. Back me up on this in the comments. Are your P&L opens mostly red? The answer to that question, I think, is going to be mostly yes. Right now, it depends on how many positions you have on and things like that, but generally speaking, it's going to be mostly yes. And so, yeah. So, but thank you there, 07. Thank you for being here. And again, I wouldn't necessarily, I won't take it personally at all if you're like, man, I'm not watching that guy. Like, that guy's the worst, right? Watch Liz and Jenny. Right. Watch, Jamal right after me. Right. Watch, Chris and Ilya before me when Chris gets back from paternity leave. Hey, watch Errol and Gus. I mean, I saw them earlier. I mean, they're doing some crazy stuff, man. I mean, Errol's he's printing money on MNQ. Print money on MNQ. So that's who you probably need to be following. But there's a ton of good resources on here. And of course, as the seasoned pros in the chat can assure you, if you just do the opposite of everything I do on the show directionally, like, you'll do just fine. You will 100% do just fine. And so let's see. Let's go to the beginning, though. Where are we at? Man, I see you guys are really... Man, look at you guys. Man, this is some funny stuff. I read all the comments when I'm done with the show, by the way. So if you put one in there, I will read it. And, man, you guys are really, really making me laugh. And so, but let's see. Big Deal Donuts in the house. What's going on there, Big Deal Donuts? Let's see. Oh, Mr. Pillows is talking about, the conversation that Gus and E were having before the show about which holiday has the most trash. I don't know. I mean, I would probably say Christmas, but I don't know. I mean, Mr. Pillow says generally between Thanksgiving and Christmas is a pretty waste heavy period in the United States, and that makes sense with all the holidays and all the gifts and things like that. And so let's see. Ashfin's in the house. I see you, Andrew Cortado. Appreciate you. Ashfin, what's up? Big Deal Donut says we need trivia back. I think you're talking about Gus and E, because I don't think I've done trivia before. But maybe we should bring that in for the show. I think that would be maybe potentially fun. Oh, and don't forget a little housekeeping. Tomorrow we are going to do some educational content to kick off the show. Tomorrow and Thursday, I'm going to do a little defined risk and undefined risk. So if you are brand new, like 07 or whoever else, tomorrow and Thursday could be great shows for you to tune in. The first 5 to 10 minutes, 19 minutes of each show, I'm going to work through kind of an educational piece that's intended to be for a beginner trader. It's intended to be something for somebody that's just getting started. And so if that does describe you, there 07 or whoever else might be watching the show, then I would tune in tomorrow. Tomorrow we're going to do defined risk, and then the following day we're going to talk about undefined risk. And it's going to be very, very high level, like very zoomed out. Like, what should you begin to think about when it comes to this category of risk or that category of risk? That's what these types of content pieces are designed to do, and that's exactly what we're going to do tomorrow and the following day. We're not going to get into all the ins and outs and strip it down to the chrome when it comes to vertical spreads and strangle management and things like that. Like, we'll do all that kind of stuff down the road, but we're just kind of getting our feet wet when it comes to this. But let's see. Oh, Scramble Everything says, Dr. Jim, it seems like a strangle and rigatoni is like a kid blowing bubbles in their chocolate milk. It's kind of fun when they start out, but left unattended, they just leave you with a big brown mess. Yeah, it's something, man. Man, look at this thing. Wow, it's crazy. We could roll. We could roll the put up and straddle this guy off. Hold on, let's take a look at this. I've got a couple extra seconds. Let me take a look at this. I'm going to see what an inverted triangle would look like now. It might be time, because this thing is just a runaway train. I mean, it's really just, it's crazy. So if I buy back my 28 put, I'm going to stay in this November cycle. What if I were to sell like the 42 put? So I can collect another 598, and that would give me a $10 wide inverted triangle. I think we might actually do this. This makes some sense. What is my my basis on this position? So I've collected a total of 796. I actually like this move a lot. So thank you there, Scramble Everything, for bringing this to my attention, because I think it does make sense. I see the production team is blowing me up in the chat, but I don't have the chat up, so I can't. If I try to navigate to it, it's too risky. So Laura, Ryan, I appreciate you guys. I'm gonna have to check it after the show, though. I didn't get it set up before the show, and if I navigate away, videos could stop, everything could freeze, and so it's too much risk. And so, but I'm sure they're trolling me pretty good on the production side there. They do a good job of it. They're usually consistently around a B. Like, y'all are good for the B minus. They're about 1 or 2 ticks above you guys. And so they're usually pretty solid. But if I go inverted on this, I'll pick up about $6 on the credit. That'll bring my total credits collected up to almost $14. Yeah, I actually like this a lot. So I'll have a almost $14 in credits on an inverted triangle that's only $10 wide. You want to have a buffer between the two. You want to have a buffer between your credits collected and the width of the inversion. And so I like this because it will make us a lot less bearish. We'll be a lot more neutral in Rigetti computing. And then if the stock just hangs out here and potentially stays between our 2 short strikes, which will be 32 and 42, I mean, this could actually, believe it or not, end up being an okay trade in the end. And so let's go ahead and make this adjustment. We'll go inverted on Rigetti computing for 599. We got filled. And so there you go. We now have on a 32, which is right here, 42, which is right here, inverted triangle. So now the objective is just for Rigetti to just hang out here. We ideally want it between 32 and 42. Any price between 32 and 42 is good for us. If it's more central, that's better. But any price essentially can work in the end between 32 and 42. And so it's kind of similar to a regular strangle in that regard. Like when you have a regular strangle on, right? Essentially any price between the 2 short strikes will work for you, but you would prefer it to be in the middle. It's the exact same thing with an inverted triangle. Now, it looks a lot different and it feels a lot different because the options are potentially both in the money, which is what you want. But the ultimate objective and the ultimate goal is actually exactly the same. And so, all right, so we are now inverted on Rigetti. And now we keep our fingers crossed, man. Like, that's all you can do. And so let's see. We've got Emmett Morrison in the house. What's going on there, Emmett? I appreciate you, my friend. Thank you for being here. Emmett Morrison, part of the core position. holding it down there in Chicago, I believe, right? You're in the Chicago or Chicago suburbs. And so, man, praying for you, bro. Like winter's coming. In fact, I'm pretty sure y'all had some flurries today. Did you not? Like it's coming. Like it's coming. And it might already be happening, actually, by you. So, man, my thoughts go out to you, my friend. So, Emmett Morrison, Daniel Perkins in the house. Dr. Jim, please reopen the government. Yes. Yeah, because clearly we need the government reopened. I mean, my life is no different. Your life is probably no different. And I say that sort of jokingly because some people that are obviously depending on government paychecks, it matters a lot to them. But it is kind of interesting that it's like, man, we're still functioning pretty well as a society. And so it's like, maybe we need to make some changes. Like maybe we do need to do some things where we don't have so much, kind of government kind of fat that's just lingering out there. But anyway, I digress. But please reopen the government so we can get our market data. Yes, that's what we need. We need that made up, those imaginary data points that just so we can all kind of trade off of all that fictitiousness. Otherwise, it's just the most important Yankee game of all time. And I think we can all agree that's terrible. That is terrible. And but I got to be honest. If they get swept, it's tonight, right? It should be tonight. If they get swept, I ain't mad at you, man. Not at all. Like if they get swept, they're going to be in Cancun with us. Like that's where they belong, right? And so I'm certainly rooting for the Blue Jays tonight. And so let's see. Big Deal Donuts. Can Dr. Jim explain liquidity sweeps and still get at least a BC humor? I can get the BC humor in, but I'm not a liquidity sweep guy. I'm not like like dark pools, and that's not even related to liquidity sweeps. But there are certainly limits to my understanding and knowledge. You don't have to go too far before you run up against those limits. But like liquidity sweeps and like looking for like stop hunts and like above like recent highs and recent lows and all those kinds of things. I don't really I'm aware of what they are, but I've never taken the time to try to understand them because I'm not even sure if they're real, to be perfectly honest with you. I'm not even sure if there's anything there. Now I know like there are people that might be watching this, might be listening to this, like, man, I've been trading liquidity sweeps for 19 years and it's been unbelievable. And that's incredible. Like that's amazing. And I mean, Gus and E were even talking about this before the show. It is amazing at how in the markets, like there are so many different ways to be successful. Like there are so many different ways to kind of blaze your own trail through the forest. And, if you like liquidity sweeps or whatever, by all means, go for it. It's not something that I understand too well. Other than the basic idea of kind of, these kind of, draws on liquidity being, above recent highs or below recent lows or whatever. That's about the limits of my knowledge. So I can't explain it any further than that because I don't really understand it any further than that. And so maybe another time there, Big Deal Donuts. But because I'm not opposed to learning, I'm certainly not opposed to learning and growing. But that's one area that I haven't really taken the time to understand just yet. Well, let's see. E-Media's in the house. What's up there, E-Media? Stefan is in the house. Red equals green. It's about time. Yeah, I don't know. I'm pretty sure it's going to be green equals green here pretty soon because we still have an hour and a half left. And, the market is still down. You got the NASDAQ down 150. E-Mid S&P's down 30. Are they really going to keep them down here? Not if enough of you guys restart your computers. We've done this before, right? If enough of you guys just give me a Control-Alt-Delete, like we'll be back to only down, 20 on the NASDAQ, down 3.5 on the E-mini S&Ps. And so it's really up to you guys now at this point. And so let's see. Where am I? Andrew's in the house. Hey, Dr. Jim, I'm ready for the B- humor. Man, it is here. It is 100% here. Big Deal Donuts says, darn, I said BC humor. Now I'm thinking about Jesus, which you should be thinking about more often than you probably are. I need to be thinking about it more often than I probably am. And so that would be a good use of your mental efforts, 100%. Crash, Daniel Perkins says, crash confirmed. Yes, again, 40 basis points off of all-time highs. It's here. It has indeed arrived, 1,000,000%. And so I'm right there with you. Sam L's in the house. What's up there, Sam L? Happy Tuesday, Doc. Market's flat. Market's not flat. Market's flat. Caffeine's high and the pre-workout's kicking in. Time for another B- masterclass in control chaos. Man, I don't know, dude. It's certainly not a market flat. We've stuck out the market down a little bit, at least for the time being. And so we'll see what happens, though. We will 100% see what happens. Let's see. Jared Kramer, it's time for Dr. Jim. I need that B+ humor and some Tendy ideas. Man, I'll give you some Tendy ideas if you do the opposite, but I can't give you any B+ humor because, again, the limits of my abilities, they're right at B-. B- is a stretch. Like, I got to work for it, man. Like, it takes a tremendous amount of effort for me to, reach the B- level. And so you have to understand, like B plus, it's a region of infeasibility. Like you guys remember, for those of you that like took economics in college or whatever, potentially even high school, but I'm really thinking more like my college economics classes. You would draw all those graphs, all right? You draw like a graph of like a monopoly and draw like a graph of like an oligopoly or like whatever. And there would be these areas on the graph where it would be a region of infeasibility, where it's like the company wants to produce there because they make more money or whatever, but they can't. They can't because of the supply constraints. They can't because of the demand constraints or whatever. Well, we're experiencing the exact same thing. Like my reaching beyond the B minus level, we're constrained. Like there's a lot of constraints that are placed on that. But Sam L says, Doc, I gotta side with Arnold. Where am I at here? I gotta side with Arnold. He's the original gym bro. That's true. Stallone had the movies, but Arnold had the mindset, the muscle, and the pre-workout before pre-workout even existed. Well, yeah, Arnold had a lot of vitamin S. That's what Arnold had. But but the question yesterday was my favorite action hero for movies. It would be Stallone. In terms of like who's had a bigger impact on my life, it would 100% be Arnold. $1,000,000% be Arnold. But yeah, in terms of like actually like in terms of actual acting ability, I would have to go with Sly on that one. Let's see where we at. Jason says, I need more down than this. Yeah, you're not alone, my friend. Frank Masai says, I'm going to lose 11,000 today. Ooh, man, I'm sorry to hear that. But ooh, that's tricky. It's always, I mean, if that's because, I'm assuming you're long, right? Obviously being long, I mean, you've won every day. You've won every day for the last 900 days in a row, right? It's always tricky being long at the tippity top. In my opinion. Now, obviously, the momentum bros, like, they're going to rake me over the coals for saying that. Man, they're going to rake me over the coals for just thinking that. Right. And so they're like, man, my whole career is built off of being long at the tippity top and staying long at the tippity top and getting longer at the tippity top. And hey, again, this is another example of the fact that there are so many ways to be successful, at doing this. That's not the way that I see the market. That's not the way that a lot of us here in the tasty world see the market. And so you just got to be careful. I mean, you don't really have the luxury of letting the losers, of extending the losers as much as you might if you are short at the top. And so this is one of the reasons why, and I know this is a crazy thing to say, but this is one of the reasons why, like, shorting the top, in my opinion, is, I don't want to call it easy because it's not easy, but it's from a like getting crushed standpoint, unless you're going in with like mega pint levels of leverage, you should be okay because you're probably just going to have to take a lot of small losses. You're probably just going to have to get comfortable just kind of getting nickel and dimed, right? Where you're not necessarily going to get ironed out with like a 3% up move on one day or whatever, but you're going to have to deal with a lot of, 40 basis points to the upside, 65 basis points to the upside and things like that. Whereas if you're long, now all of a sudden the 3% drop is very real. The 5% drop is very real, not necessarily in one day, but potentially it could be one day, but potentially a couple of days. And so, I mean, again, this is really nothing. I know we were joking about it and whatever, but this is nothing. This is like a bid-ask bounce. Like EME S&P is being down 30 off of all-time highs is nothing. We're not even at 0.5% yet. And so, Frank, I hope you're able to get out of it 1,000,000%. I hope you're able to adjust, to control your risk, and put yourself in a better spot. But something to think about, if you do want to be long, while the market continues to print high after high after high, you may very well be right. You may very well be the one that's laughing in the end. Like, don't get me wrong, that could 100% happen. But just make sure you have a plan for, when it goes against you. And that plan might involve potentially cutting off your losers more quickly than you might if you were on the other side of that trade. And again, the $11,000 drop, that might very well, be within reason for you, and it could very well be within the plan. And so, I mean, I don't want to put words in your mouth, but those are some thoughts. Hopefully, they help you a little bit and give you some things to think about. Well, let's see. Big Deal Donut says, I thought real was defined as something that can't be replaced. I don't know. I'd have to think about that. I'm not sure what that's in relation to. It could be right. But Andrew Fansler says that was Dr. Jim's assistant's assistant. The Copilot window. Oh, did the Copilot window pop up? Oh, I don't know. It was a Teams message. You guys should not have seen that. If you guys saw that, then something's very wrong with my setup. But let's see. Sam L says, Doc, is it true that your doctoral dissertation was on the Dr. Mike PhD controversy? We need that peer reviewed by the B- committee ASAP. Yeah, that's funny. I heard about all that, the Dr. Mike stuff. Yeah, I mean, I commiserate with him a little bit on this. I didn't see his actual I didn't see his dissertation or anything, but I know that he came out of some fire because it wasn't that great or whatever. Man, if y'all found mine, like it's not that great. I mean, I got the job done. I ended up publishing a few papers out of it. When it was all said and done, I mean, I think I did an okay job, and my dissertation committee agreed. And so, I mean, that's all that I really care about at that point. Like if I put that thing out there now, 15, 16 years later, I mean, it was 2009. So, I have it on my computer somewhere, and people have asked me for it, and I've sent it to them. But don't necessarily ask me for it because it's going to take me a long time to find. If I can find it, I'll send it to you, but it may be difficult because I don't think it's on this computer. It's on a previous computer. So I'm weaseling my way out of having to share it with you guys now. But it's not that great. It really is not that great at all. So I'm right there with Dr. Mike on that one, where he kind of said, hey, it's not that great. And hey, you do what you got to do, man, And so let's see. Daniel, Andrew Cortado, what's going on? Daniel Lau says, time to get long silver. Do you think so, my friend? You think this is it? You think that, let's see, where are we at? Yeah, I mean, 47.44, it was down to, it was right down to what? Let's see here. This is a 1 minute chart. It was lower than that, actually. Hang on. It was down to 47 even, right? Yeah, right here, 47.01. And so, yeah, I don't know, man. Maybe it is time to get long silver. This is not really a big drop, though. Like, this is a similar thing to like what, my comments related to Frank's comment. So Frank, thanks for popping in, my friend. I don't recall you having joined the chat before. And so maybe you have, and I'm misremembering. That's very possible because my blueberry intake, it's been a little spotty. Like consistency has not necessarily been the name of the game. And so, but thank you, Frank. Thanks for being here. I hope that you come back, and I'm happy to help you in any way that I possibly can. But when it comes to, it's the same type of thing here with being long in the metals, in my opinion. If you want to be long in the metals, be long in the metals. Like, hey, go for it. But you just have to be aware that, man, we are like way, 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 way overstretched on the upside. Now, of course, like if you're all in on the metals, you got a Peter Schiff shirt, you got the Peter Schiff hat, you got the Peter Schiff, fathead doll like on your or fathead doll, a bobblehead doll on your desk, fathead poster on your wall. That's what I meant to say. Then you're like, man, we are just getting started. Like this isn't even the end of the first inning. Like this thing's going to be 6,500 by the end of next year. And you might be right. But just generally speaking, with natural marketplace dynamics, I mean, if you had to ask me, what are we going to see first, 4,400 or 3,600? I would have to say 3,600. Just in terms of just a natural kind of breathe, like let this thing take a breath. Like let this thing breathe a little bit. And similar thing for silver, like, 47.50. Are we going to see 50 or are we going to see 45? I'd probably say 45. And even if you're bullish on silver, I think that just letting it kind of chillax a little bit and then getting back to being long, that might be the move to make. But man, I can't believe it. I'm out of time. That's crazy. It goes so fast, especially with, tangents on tangents on tangents. It goes even faster. And so I appreciate you guys, though, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform.
Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's going on, everybody? It can't stop. It won't stop. Gold hits another new high. We'll talk about that and the trade I decided to finally do. There is yet another company that the U.S. government is taking a stake in an attempt to get all parts of the supply chain when it comes to metals and minerals. So we'll talk about that company. And finally, we hear more about the resurgence, or I should say the surgence, if you will, of betting markets. There is a stake that has been taken by one of the exchanges in one of the more prominent betting markets, if you will. So we'll talk about those three things and more. Not really many earnings to speak of. Again, earnings don't really start until next week. But there's a lot going on in this market. Even though we're fading a little bit today, I think it's really good for us. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. We got a big game this weekend. My kid does. Football team. We're 6-0. We're tied for the division lead. There's another team that's 6-0 with us. We play a team that's 5-1, though. We don't play the other 6-0 team. We play a 5-1 team. It's a good challenge. Most of the teams we've been dominating. Again, another shutout last week, 6-0, and we're keeping it rolling. But this week is going to provide a real test, folks. It's going to provide a real test. I told our coaches, I said, we haven't lost a game all season, and we need to remind them of what losing feels like. I told them they should show them the tape from the last game of last season where we lost in the playoffs. We basically got cheated. It was kind of messed up. It was really annoying. And I think the boys need to revisit that. They need to see what that looks like again. But so far, the motivation is working. They haven't seen that, but what we did show them, the coaches showed them, remember the Titans a couple of weekends ago, and the boys have been humming ever since. I mean, they have been hyped. So it's going to be fun. It's going to be awesome. You know who needs one of the, if I could donate a win, I would donate it to the Cubs. Damn, it doesn't really look good right now. I mean, last night was just really rough. On top of all of that, I had to deal with my wife cheering around the house because she's a Brewers fan. These are tough times, folks. I don't know. I mean, is it too early to bet on and winning of the series for the Cubs and the Yankees? The Yankees are in a bad way, too, right about now. They're down 0-2. In that series. Looks like Philadelphia went down 0-2 in their series last night. Dodgers, I don't see anybody beating them, man. It's really tough. What can I say? I love sports. Let's pull up the slides. Let's talk about what's going on in the markets. Speaking of sports, I won in all 3 of my fantasy leagues that I'm in this week. Is that an ominous sign? I don't know. Gold's above 4K. First time we've ever seen it. Look, there's narrative flexibility here in gold. It doesn't matter what you say. Doesn't matter if the dollar is down. Doesn't matter if the dollar is up. Doesn't matter if bonds are down. Doesn't matter if bonds are up. Gold continues to rise. In a stock market that's up, in a stock market that's down, doesn't really matter. However, I always find it fascinating when things like gold or whatever it may be that's surging hit key round numbers. Today we hit 4,000, and I just woke up and was like, yeah, let's try it here. So I sold an MGC contract today at 4,005, and that's where we're holding. I can't remember. You know what? I got to remember. I did it early this morning. I can't remember if I posted it or not. I'll have to check and see. But, a lot of times at round numbers, things act weird. I went back to look, and the last time gold was doing crazy, I did put it in there. Last time gold was was kind of mooning, if you will. I looked back over time. What time frame was that? I feel like it was in maybe 2015 was another time. I just looked it up on the chart, but I saw another time when it was reaching about 2,100, it faded. When it was reaching 2,000, it stopped and then faded. And so I figured, why not try at 4,000? Let's just see if over the next couple of days it gets a little sort of quiet and jittery and sits for a while and then eventually fades. And I'm not trying to be a hero here. I mean, if I can get it down to basically, and I'll show you the guys this one when we get to the platform, I would try to fade it to the 1 week moving average. That's actually been an area of strong resistance for gold. Or I should say support, excuse me. Support has been the 1 week moving average. Usually when it's been riding on that, and then it'll rise above it, and then when it fades back, if it touches that, it usually bounces higher. So what I would do is I'm going to try the fade here. The 1 week moving average is about 39.31. We'll see what we can get from that. U.S. government takes a stake in another minerals company. This time it's out of Canada. It is Trilogy Metals, TMQ. Never even heard of it. I mean, basically a penny stock, a stock that nobody was paying attention to until today. And now the government has a 10% stake. And it's fascinating how they're doing this, right? It really does remind me of what the government was doing to save companies during the financial crisis, when they were not only taking stakes, but they would get these warrants, right? And it's just an easy way for the government to make money. You wonder why the government hasn't done this more often in a way. I mean, seriously. Because you always hear about the deficit. You always hear about, how much money the government owes and how much of a deficit if it's in. But if they're investing in these companies and these companies immediately get, double and triple the value, that should solve a deficit problem over time, right? I mean, I'm not here to debate efficiency of governments. I'm just saying that seems like a pretty damn good idea. Honestly, I mean, if you would have asked me before, it would have been like, well, I don't think the government can and should buy into companies. But now, I mean, if they're going to do that and they're going to make money on it, then not only should we not have a deficit, but follow me here. Why should we pay taxes? We shouldn't have to pay taxes, right? I mean, if the government's going to make money off of the stock market, just like general people are, we shouldn't have to pay taxes. Give me a like on that one. You know what I'm saying? That just came to me in my head. Intercontinental Exchange, the ICE exchange, buys a stake, and that seems to be a huge resounding thing here, people buying stakes, but they're buying a stake in Polymarket. Essentially, they're hedging their bets, right? An exchange buying essentially another exchange seems like a pretty good idea. This recent buy that they made, I think they got a $2 billion stake, and it basically values the company at Polymarket, it is over $8 billion. You're hearing more and more about Polymarket, about Kalshi, especially with these event contracts now that they have sports-related stuff. They've really popped up more recently, and I mean, this seems like a good idea by them. I'm surprised other exchanges haven't really followed suit. You see this a lot, right? You see companies like this sort of buy into another company that could potentially be a threat overall, right? I mean, I don't think exchanges like that are going away, but hell, you never know. And so it's really smart for them to buy a stake in something that they know and understand. I was talking about this recently with somebody about how, back in the day when we were younger, you guys have probably thought about this or noticed it. I don't know if you ever have. There are a lot of things that a lot of companies used to buy things to try and diversify, but they were really buying into stuff that they really didn't understand. So case in point, I don't know if you know about this, but Six Flags, for example, at least the Six Flags in Illinois, Great America, which is one of the flagships, right? The Marriott Corporation used to own that. And on the surface, that seems like a good idea, that a hotel company would own something that has not only a lot of real estate, but a destination place so that people will actually go there, which is in the middle of nowhere at the time for sure, Gurnee, Illinois. There was nothing there 50 years ago whenever they made that. And yeah, people are going to have to stay at nearby hotels. And oh yeah, let's just put our hotels, Marriott probably said, right? But they really didn't understand the idea of a theme park business and how to really run that, like what really entails. And so eventually they realize that, and then they sell it off, right? And then you had times, especially in the 90s, where a lot of Hollywood studios or music studios are buying things like that, like just having assets, but they just didn't know how to work with it. And so now I think it's more tailored and it's more smart the way that companies invest their money. And the idea of another exchange buying another exchange is probably a really good idea. Leftovers. These are the world's most valuable unicorns. Let's move to the next slide. Well, what do we have here? Oh, well, hold on. I messed up the colors. I hate when I do that. So, of course, these are the most valuable unicorns, basically, right? Some of the large, a lot of times any company that's private, that's a $1 billion valuation, that's considered a unicorn. And these are the massive unicorns, if you will. OpenAI, as you can see out of these, what do I have right here? 2, 4, 6, 8. 5 of them are out of the U.S. OpenAI is worth $500 billion. SpaceX, of course, that's going to be a hell of a. Both of these are going to be like massive IPOs someday if they ever do it. SpaceX worth $400 billion, so not too far behind. After that, though, you know, it's at least a 50% haircut when you're looking at ByteDance, which again, ByteDance is one of the largest. I mean, when we looked at this, I've looked at this a couple of times over the years. And if it was 3 years ago, ByteDance was probably the largest at the time. Of course, that's the parent of TikTok. It has since been surpassed by OpenAI and SpaceX. Anthropic, another AI company, is up there. Obviously, you see 3 AI companies up there. Databricks, Anthropic, and OpenAI. 3 of the top 8. I mean, that tells you something. 2 of them are in the top 5. So, again, you're talking about AI is a fad. Well, they're putting a whole lot of damn money into a fad. I can tell you that right now. So ByteDance is 3, Anthropic is 4 at 183 billion. Ant Group is 150 billion. And again, they were one of the tops for a while there, but now they're number 5. Reliance Retail is $100 billion unicorn now, and then Databricks, like we just mentioned, 100 billion, and then Stripe, 92 billion. So it's almost like the fintech has kind of gotten passed by the software AI, because I feel like the fintech companies, these were a little higher on the list, and now just getting smoked by a lot of the AI companies, if you will. Let's move to the next slide. Consumer staples. And all this time we've been talking about markets on highs, and usually when markets are on highs, that means consumer discretionary is on highs. And usually that happens at the expense of consumer staples, you know, the boring stuff, right? And you know what's interesting? I've noticed a couple of consumer staples names sort of moving positively today, but always keep in mind when things seem to be a little bit out of whack, consumer discretionary is very high on the list right now. It could be a good idea to delve into the consumer staples, look at a couple of those names, see if there's anything worth doing, getting long. You know, because those names have definitely kind of been passed over. And you can see this chart goes back to 2018. You can see, so you can see where the last time we were this low, where we really haven't been this low, honestly. And other times we have been, we get a little bit of a bounce. So again, it usually is the correction that causes it. We had a correction, of course, most of 2022. You can see that bounce from January onward. A lot of it was consumer staples. It was more of like consumer discretionary getting rocked than consumer staples actually rebounding. But those are the stocks that you're going to look for at those times. So if you think a market correction is on the way at some point, probably want to find some consumer staples. There's your warning. Let's move to the next slide. This is the current state of things. This is a correlation 1 month is the orange line there. It's basically like the VIX, right? Usually when volatility goes up, when the VIX goes up, correlation goes up. Stocks kind of move the same way, usually to the downside. And right now you can see the big deviation between where correlation is. 1 month correlation is down below 10 right now. And the S&P 500, of course, is at around all-time highs, if you will. Sooner or later, though, you know, this phenomenon won't necessarily last, right? I mean, this has only been, you know, this year, but we'll see some changes at some point. Let's move to the next slide. I don't know about you, but I thought rates were supposed to be going down, and ever since we've had the Fed meeting, we've seen rates sort of drifting higher. Have you noticed that? Is it just me? But I've definitely seen rates drifting higher, and I thought it was crazy, but then I pulled up this chart and I was like, yeah, Yeah, it's true, especially in the middle of the curve. 2s through 10s, for sure. We've seen higher rates since the Fed meeting. Even though we're supposed to be cutting rates, they seem to have buoyed a little bit. So I wonder if this is going to change. I really haven't traded bonds much at all. I've seen them ebb and flow. I've seen the long bond ebb and flow quite a bit over the last couple of trading days, but I have no bond position right now. But it is kind of surprising to me that we've seen rates bounce. Let's move to the last slide. No earnings today. Amazon Prime days are today and tomorrow. In the past, we've seen a bump in Amazon stock after the Prime days. I'm not sure what's going on today. And again, well, you might be late to the party if you're doing Prime days. Not that I care. I don't get anything. There's no promotion for me. But I used to, a lot of times, I've always heard that it was good to put things in your cart prior to Prime Day. It's probably too late for that exercise. It's one day you can actually see if you're getting, one way you can see if you're actually getting a deal on something. We're supposed to have FOMC meeting minutes tomorrow. I mean, I don't know if that's not happening because of government, but I think it should happen. And then Powell is supposed to speak on Thursday, so a little bit of something from the Fed there. Number of S&P 500 stocks above the 50-day moving average. We're sitting around the 50+% range, a little between 50 and 60% for the last several trading days here. And I don't think much is going to change. Even if we break out to new highs, I think only changes if we fade hard in the market and then we drop. This will drop. Let's move to the platform. Looking in the chat here. What's going on, guys? How you doing? What's going on? How you doing? How you doing? How you doing? How you doing? Yeah, warrants, for those who don't know, are like they're like call options. I mean, they're basic, very similar to call options. Very, very similar. Yeah, it's always kind of been a thing. So you can get warrants, get free warrants from your company. Tell them to give you a warrant. These are the positions we got. Netflix is finally bouncing back. This is a calendar call spread. It's interesting how, my book lines up here, and you can kind of see. So I always sort by days to expiration, okay? I don't do calendar call spreads much further out than maybe 1 month. So you can see a lot of these positions right here, they're calendar call spreads. Netflix, calendar call spread. And I've tried to incorporate being long the earnings and short something in front of it. In these situations, and these are all upside. So I have a 1300. I wanted to do a more near-term one, like the 1275, but it got a little expensive. You can see this is the 1300 calendar call, and this is $1,500. The plan, most of these I would like to make 50% on prior to earnings. If not, maybe I'd take it off before earnings. Anyway, Meta, calendar call spread, 800 strike. Costco, a couple of different ones. These are actually pretty cheap comparatively. I mean, again, I got 3 of these on compared to just 1 on in Meta. That tells you a little bit something about vol and upside, right? I have 1 on in Meta. And again, this is a $900 stock, so it should be comparable to the price for the Meta and or Netflix calendar calls, but they're not. I mean, these are just so much cheaper in Costco. So much that I added another one yesterday. I added the 950. So I initially had 1,000, then I had the 975, I added the 950. And actually, I think I added the 975 first. I just got filled on it first, then the 1,000. But yeah, now I have the 950 as well. So I got 3. Deer is also a calendar call spread, a couple of calendar calls, maybe even a diagonal in there. ETHA was added yesterday. This is a zebra, if you will. Yeah, this is a zebra. And a bad ticket becomes a warrant. That is true. That is true. A bad ticket can become a warrant, actually. SMH is a put diagonal, if you will. It's it's the 340, 320 diagonal. I don't know why it's called a calendar, because it's not. I mean, it is a calendarized diagonal, but whatever. So yeah, AMD, actually, the vol is coming in today. We like this. This is nice. This is working out well. We sold this. I wonder if I should cover it here. I sold it yesterday when IVR was around 59. Again, my thinking was that I usually don't like to sell earnings, right? But the huge move created an additional vol spike on top of the vol that there is for earnings. And so I think you can make money in those type of situations. 60 vol right now. Right now it's working. It's 14%. We're going to sit and leave it for now. If this flattens out to the point where I'm only making 20% P&L, I'm going to keep an eye on what my P&L is. And if it ceases to make money, and it kind of, which is what I expect to happen. I expect it to get to a point where, okay, the vol will come in, but it's like it still has earnings, so it's not coming in much more than that. Then that I will leave alone. I feel you, cat over deer, and I think cat is the name, obviously, just based on the stock. But that's why I'm playing deer, just to see if there's some type of catch up and some type of bounce back. I mean, look at this stock. Which one would you rather have a calendar call in? This one or this one? Personally, I'd rather the other one. And so that's why I got the deer calendar calls on. UNH is getting close to a close for me. This is taking up a large amount of capital, right? When you look at the net lick versus the capital requirement, it's taking up at least $4,000 in capital for me for this position. It's a Jade Lizard. Obviously, it's a $300 name. Being short of putting $300 name is never going to be cheap. It's a really good one because I got way more than the credit to the upside. So this is like absolutely unlimited risk to the unlimited. There is no risk to the upside. That's what I meant to say. It is riskless to the upside because I sold this total package for $11. And as you can see, the most this call spread's ever going to be worth is 10. So at least I make $100 at the very least on this whole spread. I want to make more than that, though, and I am making more than that currently. So I could close this in the coming days. Maybe 40% is enough to close this. Maybe, I don't know, if reach 50%. We'll see. Stephen Bivens, I feel you, man. You had a put, right? I think you just had a put, so that works. It's funny, Kim mentions IRIN. I was looking at this earlier. I'm really tempted to sell a strangle in here, but man, I feel like, having the AMD, having the Oracle, right? Having those type of names that have made huge moves recently to the upside, and then being short strangles in these, I think I'm pushing it enough as is. And these are, again, I feel comfortable in these because they're huge names. I'm a little nervous about doing a strangle in IRIN, even if it looks good, which it does. I'm not going to lie. Like the strangle, not the stock. Just the fact that you can do NOV, which is in the 45-day window. You can sell the 40. You can sell the 85. Both of those are $20 away from stock is right now. I looked at this same strangle earlier, and it was $7.70. Now it's $8.17. That tells you vol is going higher. I'm going to pass, respectfully, but it is tempting to sell a strangle in here, where you can sell the 12 delta and it's a 36 delta, though. I think this is being pumped up, honestly. I mean, as soon as the stock were to fade some, this call comes in really, really much. I mean, quite a bit. But yeah, Donald, it's a good one. It's a good-looking one. If I didn't have other strangles on, again, when I look across the book here, I mean, I got an Oracle strangle, I got this Accenture strangle, I got the AMD strangle. I'm pretty set with that. I got a couple of other names I'm dabbling in. D-King is getting smoked today, but again, I think this is another situation of the huge deal for Polymarket. Again, the companies that seem to be the most nervous about those the prediction markets it does seem to be betting markets, if you will. When you look at Flutter, when you look at DraftKings, they are taking it on the chin the most in this situation. So they seem to be the most nervous as a result of these. Begging me not to trade DE. It's just a calendar call spread. We'll see. We'll see what it does. And again, it's working out on a day like today. I have so many high flyer type names in the portfolio that I need a name like Deere. I need a name like Costco to sort of balance it out. So it's kind of a way to balance it out, if you will. Amazon, any trade? Well, I tell you what. I mean, it's been. I feel like Amazon is one of those where it's I don't know. I want to get. If I do anything, it would be to get long. I've had a zebra in here before. I did like that trade. maybe it's something worth exploring again. I think we could probably see a pop. I don't necessarily know if it pops from these. I wonder if it pops from these Prime days. The last Prime Day was July, right? I mean, isn't that usually when Prime days are, right? Amazon Prime Day. Amazon Prime Day 1. Was it July? Yeah, what day was that? It was July 8th. Yeah. So what did it do last time? Did it do anything? I felt like it didn't really do much. So I don't really feel the need to rush to put on a trade. Not for Prime Day, but I do feel like if there's a name that eventually, you know, we were talking about this yesterday on Overtime about a lot of the names that recently have had huge pops. Tesla, we talk about a lot of the Mag 7 names. Apple had its day in the sun not too long ago as a result of some of that, some of its own stuff, but also the Google sort of ruling on the antitrust stuff, and it popped on that too. And so I feel like at some point Amazon is due for a pop in some way, shape, or form. It's been fairly quiet when compared to the rest of the Mag 7 names. So right now, I think the play for me at some point ends up being, I mean, it's a little early to do any earnings. Earnings are earnings are several weeks away. Maybe I just wait for earnings and put a play on. But it's basic. It's an interesting trade. I'm just not going to do anything yet. I'm not doing anything as of right now. No real interesting trade there for me. I got so many other different trades on to pay attention to right now that unless something's really actionable, it's got to be a really great trade in order for me to put it on and then look at something else that maybe I want to take off. And as of right now, there's not anything that stands out. The closest position that I may end up taking off is UNH. Again, if I can get a drop, and I wanted to show you guys this, what I was talking about in gold. Sold today at 4,005.5. Don't forget the half. It's very important. And then there's the 10-day moving average here that we see, right? The 5-day moving average, the 1-week moving average. That has been the thing. If you look at it with gold for a while now, during this bull run, gold essentially is riding the 1-week moving average. When you look at this green line, look at each day. It's just on there. The low that it gets is just maybe the 1-week moving average. Even on a pullback like 9.4, 1-week moving average. That is the line of demarcation, basically, right? So what I'm going to do is try for one of these type of fades, right? This was an $80 range. I would love to see that happen. Basically getting down to that 39.31 area, I would take it off and just be happy as a clam if that ends up working out for the time being. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, trade them often. See you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, Tim Knight. Well, we've got my kind of day going on. It's not a big down day, but it's down. We're red across the board a little bit, and metals are up. I had spoken last week about the big round number for gold of 4,000. Well, at long last, for the first time in the 13.7 billion year history of this galaxy, it's there. And I've yet to get through my entire list of symbols since the retooling of this show into the Tasty chart platform, but we're going to try. One of these days, I'm going to get through them all. So let's jump in and give it a shot. So on the spider, we're below the wedge still, and it's starting to show a little bit of weakness. On an intraday basis, another lifetime high. We started off strong this morning, but thanks to some hints that maybe this AI bubble ain't making nobody any money, it started to sell off some. So we've got a bearish engulfing pattern at the moment. So a little bit of a step in the right direction. As far as the diamonds go, oh, this is so frustrating. Okay, I've tried to be polite, but I've got to explain. The drawn objects move around on their own. I've placed them again and again and again, and they keep moving. It's like they have a mind of their own. So forgive me, I'm actually pretty good at charting. They're not in the wrong place, they just move. So before the show, I moved them all back, and then, anyway. There we go. So here's the diamonds, and we had our bullish pattern here, and we broke above it, but same wedge, and we are starting to break down on that too. We got right up close a couple of days ago to the underbelly of that wedge, and now we're starting to break away. So this is kind of cool because it was contained, then started to get a little raspy, as I say here, a little bit fuzzy, tapping below. Then it finally broke cleanly below the wedge, has stayed there below ever since. Tried on Friday, I guess it would be. Nope, didn't do it. Pushed back, and down we go. So these aren't big moves. I mean, this is down 0.3%, but I will happily take it. The cubes are down a little more aggressively. We're down triple digits on the NQ. Oh, look, a moving trend line. How fun. Okay, so now we have to spend time moving this around too. Okay. Ooh, yeah. Okay. There we go. Move that. And all right, we'll see. That'll probably do. And this was in some totally rando place. Terrific. All right, so we'll just say bye-bye to that one. See ya. So this is the cubes, and this is still in raspy mode, as you can see. So about the past couple of weeks has been kind of teasing that line. And I fully hope, of course, that we start to break that with a little more strength. Let's just change that in honor of the raspiness to blue, just to show it's not holding up so perfectly as it was. Once again, lifetime high on an intraday basis, but we are breaking down some. It's, listen, it happened on Friday as well. Didn't mean anything, but I'll put it this way: 25 short positions. Like one portfolio, for example, I've got 12 short positions in that. 11 are down, and one is up 0.16%. So that's pretty good. So we're definitely under the surface, starting to get some of those breaks. One thing that's helped in particular is the semiconductors. This is SMH. I think I mentioned yesterday that I shorted SMH at a lifetime high, and so far so good. We're down 1.7% on that. Even if it just tags the trend line, which is still bullishly configured, that's a good move. And so we'll see if that persists. But yeah, the SMH short doing good things. I would also say China is looking kind of sketchy as well. Sorry, gotta fix this. We'll move this down like so to the anchor point where God intended. Okay, and the fib, we're just gonna torch because that's moved too. So here's the FXI like so, and we've made a sharp move down, 1.27%. My only China exposure is Alibaba. And that's worked out. I'm going to hang on to that. But I do think FXI is prone to further weakness. It's very dependent upon U.S. tech strength, your Palantirs and your Oracles and your NVIDIAs and so forth. All right, let's turn our attention to the belle of the ball, gold, which, as you can see, has a leading digit of 4 now. That's great. I think it is possible that this might be a sell the news moment, only because 4 is such a big deal. These big round numbers are widely followed and celebrated. And listen, my occasional bearishness on precious metals generally doesn't work out, although I've gotten lucky with a couple of dust plays lately. But it does seem to me that the fervor for this might breathe a little bit. We'll see. It is an extraordinarily powerful move, as we've seen day after day, you and I, following this terrific consolidation period and this smaller one here. But on the whole, it's just been lurching higher, like so. And we're at a lifetime high now. There's no particular reason that this should fall. But yeah, like I say, human psychology is a funny beast, and we'll see if the big round number thing has a surprising weakness following it. Gold itself, by way of GLD, obviously is also up. This was the resistance for a while, and the last time it was below that was early last month, and it's been just zipping higher ever since. Gold, GLD, has had a terrific time of it. Here's the same consolidation period, which was really completed back in March of 2024. And it has pretty much doubled since then. And so in spite of all the hoopla over the likes of things like NVIDIA, in 2025, precious metals have ruled. Now, silver, interestingly enough, is down. And this is where we're starting to see a little bit of what I would think of as exhaustion in this area. We've spoken in the past about silver setup, which was this beautiful base here, followed by this months of just screwing around and faking people out and just being frustrating. And then finally, starting in April, having the kind of move that I was looking for. And it's been very powerful. And I think it's got a terrific long-term future. But geez, there's gotta be some profit taking here and there somewhere. So now those of you who have watched me even a little bit know that as much as I like gold and silver, I'm kind of most fascinated by palladium. Now, I've just got to level with you. I'm known for being earnest, so I'm just going to tell you, I've gone ahead and taken profits again on this. Why do I say that? Well, first of all, it's the truth. Secondly, if it falls to pieces, I don't want to mention a week from now, a week ago I sold it. It could just keep going up. But I got to level with you that I've made about 20% on the trade. I'm satisfied with that for now. It's a wonderful breakout, but I'm just too concerned still about gold and silver backing off and palladium, dragging palladium down with it. It has definitely happened before that I'll sell and just keep going higher, and I'll be kicking myself. But for the moment, I've taken profits. But nothing about the long-term pattern has changed. It looks absolutely terrific. And this whole range down here, beautiful base, is doing exactly what it's supposed to. Should we get selling in precious metals, and should this get bashed down to anywhere around here, it wouldn't take much. It could be a very appealing entry point again. But at the moment, palladium's up again. The future's up 2.26%. It's been a very profitable trade. I would also mention, just to keep poking at it, that I shorted XME today, which was at a lifetime high. It's well above its own trend line, so we can back away from this. And you can see how sharp, and this is a log scale, you can see even with a logarithmic scale how sharp that ascent has been. So any weakness in copper and gold and so forth, I think would start to weaken that rather swiftly. How are we doing on time? We're doing okay. We've got 5 minutes. That is a treasure chest of time to work with. Let's talk about some short positions right now. As I said, it's a good day for the bears for a change. A lot of red on the screen, even though on an intraday basis, lifetime highs across the board today. But here's a few that I plucked out. Here's one we talked about, the home builder D.R. Horton, DHI. A nice tumble on this one, about 6%, a nice gap down too. And this is kind of similar to the pattern we saw in the past that I've emphasized there with those rectangles. Halliburton down a little bit, got a bearish engulfing pattern on this, down a couple of thirds of a percent, and we are beneath a very substantial, extremely lengthy distribution top up here. So that's HAL. On semiconductors, now, I mentioned earlier that there was a study about Oracle's profitability and their this hyperscaling they're doing, all the chips and so forth, and that unimpressive fundamental information sent all tech down, including semiconductors. On is one example. I'm short all these, but that's why I'm showing them. But this is down over 4% with ON, and what I've highlighted here is this. I don't think I meant to do it that deeply, or probably changed on its own. But that's the distribution top on that one. We're at very, very large, very wide. What else have we got cooking? Very different. This is a whole mishmash. This isn't one particular sector. Here's Royal Caribbean, RCL. This is off not quite 1% today. Very sloppy pattern, but I think plenty of room for downside there. Our old friend Abercrombie & Fitch, which tumbled hard yesterday, is adding to that today, down about 1 3/4% on the day. And so just across the board, mid-tightening stops up on these. I mentioned earlier Alibaba. Here's BABA, down about 3 1/3%, turning away from that horizontal that I've drawn, which is a very ancient top back here, way back in the COVID recovery boom. This was the big top on that one, and we have just gone racing toward it, and now it's weakening away from that horizontal. And our old friend CC, which is down again nicely, almost 5%, so really good tumble on that, away from that wonderful, massive distribution top. Here's Salesforce, CRM, off about 2.5%. Hasn't quite completed its pattern there, it's working on it. It's getting there. This is a kind of a sloppy head and shoulders pattern. There's the neckline down there. As I say, haven't quite broken it yet. Earnings season is coming up in a couple of 3 weeks, and so maybe we'll start to see some resolutions on these tensions. Kohl's is down over 3% today. That's the big retailer, and a very sloppy long-term chart on this one, but I really like the shape of it. Micron, another semiconductor firm, down also, not quite 3% from a lifetime high yesterday. Massive lifetime high right there on MU. Here's another energy one, Murphy Oil. This one's down 2.22%. Oil in general is actually up pretty decently today, but a lot of these oil firms have flipped lower. And once again, we've got a multi-year distribution top on that one. What else? Maybe 1 or 2 more. Here's Oracle, big in the news today. Off its lows, but it is still off about 2.5%. And I'm happy to hold on to this one until at least we can seal up that gap. This was this enormous gap brought on by, of course, AI and the talk of tremendous new sales sometime in the future. A big portion of that pop has disappeared. And here's Skyworks, mentioned this one yesterday specifically, and we're down nicely on this, over 3%, below that long band and that tremendous price gap. And one last one on the shorts here, Wayfair. Tiptoeing down a little bit more below this extremely long horizontal. This is the 3rd time we've been in this range, and now we're starting to break down beneath that. So I will mention, just as an aside, my IEF, kind of one of the rare items I'm bullish on, is doing okay. It's a very slow mover, but as I said, long term, it needs to break above this wedge to really have a good long-term future. As it is now, it's moving very slowly. And as we reach the bottom of the hour, let's just celebrate. I actually made it to the end of the list. Here's the Russell small cap futures. And we were at a lifetime high yesterday. And we're still bullishly configured, but let's watch this trend line. If we can break below that trend line, we might just have a chance of getting some downward motion for more than a few hours. So that is it. Good. I will see you tomorrow. Thanks for coming by, and I hope you're doing all right. See ya. Bye-bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade. Named best online broker for options trading. Genius loves company.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to the last call with Liz and Jenny. We're gonna need Ryan. We're gonna need to change that theme song. It says "boys."
Exactly. Liz and Jenny taking over last call every Tuesday and Wednesday, and this is fun. End of the day.
Do you know what it reminded me of? Are you listening to me? Every Tuesday and Wednesday, 2:30 to 3 o'clock. Liz and Jenny take over on the last call.
So, okay, we have not been on, I mean, maybe in our lifetime we've been on last call, but not in a long time. And so we do want to give a public service announcement. Today's Tuesday, tomorrow's Wednesday. Tomorrow is What's Your Assumption Wednesday. We are taking assumptions. Ryan, how about pull up the art card? If people have any assumptions and you want the boys in the morning or us during our show to take a look at them and come up with a trade idea, send them to tastylive.com/assumptions.
Yes, please do that. It's fun. I love What's Your Assumption. They give us an assumption and we come up with a trade idea. What's interesting is I think sometimes what you and I come up with is completely different than what the boys come up with because we are a little bit more creative. Although I will tell you, Nikki's pretty creative.
Yeah, Nikki's pretty creative. So Nikki is pretty creative. He does a lot of, you'll see him do a lot of diagonals or crabs or zebras or whatever. Like he is pretty creative. So, but we usually come up with something different. It is kind of interesting to see two different takes on it.
I want someone to ask him how to create a synthetic zebra.
Oh.
Yeah, right? Yeah.
Funny.
Yeah.
Liz, if you want to share, Liz pulled it up. Liz pulled it up.
Oh, yes. So if you go to tastylive.com/assumption, just so people can see what it looks like, let's pop in so people can look at my idea or this. So if you look at this is what it looks like. It's really easy. Share your ideas. You can go in here. So once again, Jenny, on last call, we'd like to show with the class what's happening. You just go in here, you type in for tastylive/assumption, and you get share your idea. It's pretty easy. I wanted to show you this because Jenny, it'll tell you who you get: first name, city, state, location, what underline, and then you have to say bullish, bearish, neutral, or I don't know. Because sometimes they'll give us their assumption, and then the other thing will be clicked. Right. They'll be like, I want to sell a put in Tesla, but I'm bearish. You're just like, huh.
Well, okay, here, go from the top. I'm going to let's fill this in, and I'm going, and then we'll see if it makes it to What's Your Assumption tomorrow.
Okay. Location.
Okay, location, Chicago, Illinois.
I'm going to say undisclosed.
Nah, you could just put Chicago, Illinois.
Okay. Liz. Liz and Jenny at tastylive.com.
That one doesn't exist anymore. We're
not giving an email. No, we'll go Liz at Tasty Live. It's fine. Even though, don't email me. Email Jenny at Tasty Live.
All right. Well, underlying. So today I've traded quite a bit. You know what? What was that one I was selling puts in? SBET. SBET.
Okay. And you are bullish.
Neutral. Puts are neutral too.
Okay. Puts are neutral too.
I mean, or you might want to go with an I don't know. See what the boys do with it.
Okay, we'll go with I don't know. Time frame for your trade, 45 DTE?
Sure.
I'm going to say 20 to 45 DTE.
Okay. Excellent. Reasons. See, lots of premium and a low price product.
To see what you come up with. Okay, there we go. Didn't see your trade this week? I'm submitting it.
Okay, yeah, submit it. And then go ahead and submit it. And if it makes it in, we'll find a trade tomorrow. I'll see if you come up with the same trade I did this afternoon.
There you go. That's kind of fun. Okay, now just because it's Liz and Jenny, we like to make the show our own. We actually were talking. We have some kind of fun information. It's just information. There's nothing you can do with it.
Well, hey, people could do whatever they want with it.
But we're not saying get on this now. We were leaving the SIBO today and we were talking to some traders from the SPX pit. They told us we're not allowed to say this, so we're not going to give details. But there were a lot of what was interesting.
We're not going to give details as to who the buyer was, but there was a buyer coming in. The crowd was selling. Big firm buying, crowd selling.
And we're not going to say who the crowd was.
We're not going to say who the buyer was. We're not going to say who the transactional parties were. But
because we want to keep getting this information from Deep Throat. So if but they were telling us, and we can say it's a Boyd because that's pretty safe. He was telling us that in 27, which we looked through, they were buying calls, 1,000 out of calls.
It's almost 2028, because you're 800 days. It's December of 2027. So
what's funny, Jenny, is we had to. So he just told us in 27 they were surprised that customers were buying calls. But so we looked through the Jan, we looked through the June, and we looked through December, and we found them. So we went to volume, and you can see it's the 8,000 calls.
The 8,000 calls. You can, and they told us the crowd had to sell them. Now they didn't. They mentioned the 8. They didn't say, honestly. They didn't mention.
No, they said a customer firm bought 2,027 calls in SPX.
All right, so this makes sense, Liz. So a customer came in firm and bought 1,000 of those 8,000 calls. Now that other set 0.75 and 750 there. That could have been a spread, 8,000, 9,000 spread. That could have been a spread, separate, because the one order that came in was buying 1,000 of those 8,000 calls, which, I mean, look at the price. When I look at the price of those calls, I think I can come up with a better way to use that money.
Oh, I think so too. I just wanted to see, I wanted to look at implied volatility and see if they jacked up the 8,000s. You know how how on the trading floor you used to be able to be like, oh, we're selling
tick, 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 tick that
up. And they didn't. It's in line. It's actually higher. Yeah, it's in line.
It's in line. But you click on that $300, add on a couple zeros, 29,000.
20,000 in a margin account.
Yeah, $29,000.
Yeah. So that's a pretty interesting. I thought it was pretty interesting. Just kind of, we like to look at this stuff because we like to see the big orders that come in through the trading floor and kind of go from there. There's nothing we can do with this, right? So Jenny was looking at it being like, hey, you know what? How do you scale that down? Like if somebody wanted to do this,
not scale it down. First, I was looking at how much is an at the money zebra? Because if you went that far out and did an at the money zebra, then you could make money one for one from now until 8,000 versus that doesn't pick up until, I mean, if we get a big move up in the market, it could go up. But I think that at the money zebra was maybe 150,000.
Sell 1, buy 2. I got to go to Delta. I mean, we can just watch extrinsic value, but I don't
look at extrinsic value 900 and then 440. Do the 440, 6450 or 6400. So yeah, 136,000. So this is 100,000 more, but then you're making money one for one to the upside from now until, whatever, versus just holding on to those calls. But this is a lot more expensive, 3 times the price.
Yeah, no, that's what we're looking at. And then kind of taking a look at it. Well, I love being in the SPX pit. These are big customers. We're not exactly sure what they're doing. So, but it was just fun to kind of take a look at. The other thing,
oh my gosh, those are only down 25. 5 more points. Go. 5 more points, and we might have some of our SPX Iron Condor sellers might be okay.
They might be. Now, we did the put spread, so we are still 15 points. Actually, we're not too far away.
I think I need it up at least another $10. I want to say the long put of my spread is around 67.15, maybe like a little. Every tick up will save me a little bit of money. Because the long put of my spread is around 67.15.
Yeah, I get it.
So right around here, I need like a little bit of oomph from the market.
Yeah, well, hey, who knows? Maybe we're going to go spinning into the close. We didn't. The one thing that we wanted to do, we were going to go this to. Here's a silver gold ratio. Jenny had it on in a bigger size. This is our silver gold ratio. It's very, very small, but take a look at this. It's finally coming to fruition. The gold is up more than the silver is down. So let's
just to like put this into perspective. I mean, we did this smallest scale we could, like 1 gold share and 8 shares of silver. Very, very small. That same day I put it on, and I just used notional to notional. I used like 5,000 in gold, 5,000 in silver, notional to notional. I took it off today for $125. But I mean, I only put it on because we put it on. I wanted to watch it. But when you look at, like, we had such a small scale, it's hard to ever take a pairs trade off for a win on such a small scale. But we're going
to take this off so we can clean our sheets, right? So we have, I'm going to flip. I'm going to buy 8. Whoops. Whoa, hold on. I'm going to need one of these.
Sell 1 gold.
1, and I'm going to buy 8.
And so honestly, before you ship this, hit the chart and see how let's see what, I haven't even looked to see what this looks like, but yeah, there it is. That fall today, silver had been going up so much more than gold at a higher rate recently. And now it's starting to come back in, silver and gold are starting to come back in line.
Yeah, they are. I mean, that's that ratio coming back into line. So I'm going to ship this. I mean, this was a very, very small trade. We do this for, demonstration purposes only. I'm going to review and send. I like to do it this way, Jenny, just to make sure I'm doing it correctly. I can look at this. Gold, I'm long 1, so I'm selling 1. Silver, I am short 8, so I'm buying 8.
Yeah, and this will be nice to just get and yeah, look what we were using, $195, a couple $100 bucks. It wasn't like we could expect to make much, but we at least could watch it and see when this pair started coming back into line.
Filled
right.
And filled. So I'm going to go to activity and I'm going to do both sides.
What do you mean you're gonna do both? Oh, like both the silver.
It doesn't go. It goes. It's traded as a pair, but it's separated as two.
And I will get it all pushed out. We'll
Okay,
get it all pushed out on the follow page.
Other than that, I mean, we did have the gold, and I know Mr. Tim Knight was talking about this. Gold in its lifetime has never been this high, and you can kind of see it. You can see it better in GC. It's crossing the 4,000 level, and all those people that laughed at me for being a gold bug down here.
I mean, I can't even show my face anymore at my hairdresser because I don't know if I remember this. It was like 2 summers ago where she asked me if I thought she should get long gold, and I was like, it's already so high.
Yeah, and it was probably right here, 1900.
Sorry, Kathy.
Yeah. But it's true. I mean, it's hard. It's hard when it feels so high. But right now, I mean, things are different, right? So, I mean, you're looking at the dollar weakening and gold getting stronger. And I feel like I'm an FX trader.
Well, I'm excited that our FX filled today.
It did. We'll take
our yen, our yen trade.
Tasty FX. You go to that. I do like that filled. So wait a minute. How do we push that out? We don't push these out, do we?
We don't push these out. But if you even just go to the trade page and take a look at US dollar yen. I know you're on euro dollar US dollar.
Okay, I got to.
Oh, look, we're getting a little bit of a downward movement there.
We are getting it down. Okay, so if I go to trade page, here we go, and then I trade.
But you got to click USD JPY,
and then it'll bring up the. Look at that.
Yeah,
we had our move in, and in yen, the trend is your friend.
So okay, so here and I want to go back to this because again, we're like new to FX. So this chart going up means US dollar is getting stronger, Japanese yen's getting weaker compared to the yen. And then if you go to the euro,
it's the opposite. Let's go like this.
Well,
whichever is first.
Yeah. So here also, this means euro is getting weaker, dollar is getting stronger.
Yes, that's correct. And I like that. I mean, that actually makes it clear. So whatever is first is what's happening. So that it's getting weaker against the other one.
So euro is getting weaker, dollar is getting stronger.
What is our euro US dollar position? Oh no, we don't. We have euro
pound, and then we still have that silly shekel position on.
The shekel. We thought that was a gimme.
Okay, so as far as
there's no earnings for today, so there's not many things to trade. Usually we'll be trading earnings on here.
But today, I don't know if I know I've made some trades today.
So we were on the train. It was pretty interesting because we were on the train and I'm in the middle of a housing crisis. So I'm kind of cranky. And Jenny did a lot of trades. And I actually decided to sit on my hands because I did not want to panic. My account has done pretty well. We were talking about that. So the last couple of days, it's been stock picking instead of you'll see ups and downs. And it's kind of that same way here. But we never saw really the indices going anywhere big. So I wanted to sit on my hands. I mean, they're going somewhere, but it's not like it's a big move, unlike, your AMDs.
No, but I think it's a kind of a fun thing. If we're going to be on last call, it's kind of a fun thing to say, like, what did you do today? Well, this is what I did today. Because it's always interesting to hear what other people are doing. So I do think that, but today you really didn't do much because you're dealing with college.
No, but I wanted to sit on my hands because I wanted to say, is this day one? I didn't want to panic and trade anything. I've got some bullish and some bearish positions in, and I actually am an over manager. I really truly am. So I try to open up my positions every single day, and sometimes every day I'll make adjustments. And you know this because the entire flight home from Germany I was trading. I opened every single position and adjusted it.
Adjusted it. I know. And I didn't do, the only position I adjusted was DraftKings. That was my only position I adjusted. I was just looking for new trades.
We adjusted our position. We actually,
we adjusted our DraftKings.
Now, what did you do in DraftKings? Like, what's a new subscriber to do in this?
Oh God, I just took off. All my puts were deep in the money. I just took them all off and bought stock. That's my DraftKings adjustment. My DraftKings adjustment was take off all my in the money puts because they're all so deep in the money, and I just bought stock. That was it. So when I say adjusted my position, it's just going to sit there. But I did, as far as new trades go, Upstart. I think Upstart selling puts in Upstart is not bad. I don't know if we have that.
So we don't have that, but this isn't a new position for you. This is something you've had a long time on, right?
But I did add. So when things are down and SBET, I added some puts in there.
So the hard part with Upstart is it's a very capital intensive trade for this account. So I mean, $1,400 for a $40 stock is a lot.
I guess so. Okay. So you know what? This is a good comparison. So if selling puts in Upstart, you're looking at getting $2 and using $1,400. And now go to SBET. I was selling puts in SBET today. If you go to SBET,
okay.
And when you compare like here, this is a $17 product, so it's half the price. But there's still, if you open up the 45 day, there's a lot of premium in there for the price. So there, getting $2, this is just 70 cents, but we were getting $2. Like if you want to compare apples to apples, here you would, if you did 2 of these, you get $2, or here you're $2 and using $700 versus getting $2 and using how much was the other one, Upstart?
$1,400.
Yeah, so double.
Yeah, and so when you take a look at this, you're using $1,400. I mean, granted, it's a $51 product versus a cheaper product, but a lot of times that's what we're looking at is we want a bigger bang for our buck for the capital that you put up there. And I think the problem, and we have this in our head, is TP.
Well, you know what? For me personally, I like the Upstart puts better than the SBET puts because I like the probability better. So if you look at the P50. And this is, again, the handcuff of a smaller account, right? So the P50 here, you're getting almost $200 using $1,400, but you're getting a P50 of almost 90. It was like 88 or something.
Yeah, 88 right there. But I was going to say it's a little bit different because when you are using the at the moneys, so you'd almost have to go at the money to at the money. But
no,
here,
that's why I wouldn't sell the at the money, and that in SBET I didn't sell the at the money. So I think we have to compare apples to apples. So
okay, Jenny, I've got a question for you while we're on here, only because I glanced at the thing, Mr. Pillows, which I think is a great handle. Does SoFi have earnings?
Go ahead and check. I did adjust my SoFi position today.
I just wanted to know because he says go in SoFi call diagonal for earnings. Oh, I think it's a earnings setup diagonal.
Yeah, sure. I don't mind. I mean, SoFi's up so much; it's up another $1.77 today. But what the heck?
Yeah, I mean, this is crazy.
But
I don't mind the Upstart puts, and I didn't mean to stop you. I just, when I glanced, they saw SoFi, and I know we were trading SoFi. I didn't want to miss earnings if they had it because I do like being in them.
As far as the Upstart versus SBET, again, it's
and they're two different products.
It's just to show like buying power. Like SBET, yeah, you can get $1 and use $500, or Upstart you can get $2 and use $1,400. It's more, it uses more buying power, but I like the higher pop. I like the higher pop. I don't want to be at the money.
And look at the SBET. So you got what's crazy about SBET is it's got a 17 rank versus Upstart, which has a 45.
Yeah.
And like I said, they are not correlated by any stretch of the imagination. There's no correlation between these two.
I said when I sold the puts, I didn't think like, it uses a lot of capital, and I think this is part of the problem in the handcuff of a small account where then you have to either find products that don't use as much buying power or bring the strike up because you're trying to collect enough to justify it, or TP would create a spread.
It is the plight of a smaller account.
Yeah.
I'm putting this in for one more penny higher because I feel like we can get out of this today.
I know this is good. Yeah, I think you figured there you go.
I just paid 1 penny up from where we were. Sorry.
Okay. So Spoos, come on. Can we get Spoos down? Like Spoos down 15 at the end of the day would be a miracle.
Do you remember? I can't believe I'm going to say this story on air because we actually did this when our kids were small. We had all 4 small kids and we had them all chanting "Spoos down, Spoos down, Spoos down."
That was a dark day, Liz. That was a dark day. We had our positions were way too big. When we were younger and newer retail traders, our positions were way too big.
Well, I think it's a hard transition from being a floor trader because the floor, the bigger the badder, the better you were, right? And it's exactly opposite. That's why we say every single day, trade small, trade often, because it's the way we have to keep reminding ourselves.
Yeah, and so that was a dark day when we made our children all try to chant for the SPOOs to go down.
Yes.
But speaking of, with SPOOs only down 25, and they've been sitting here most of the day now. What is the VIX doing? Is the VIX still up?
Okay, hold on. You're gonna guess only because we can do this live. The VIX was up when we were leaving, but SPOOs were down about, I don't know, 30. What do you think it is right now?
1689. It was in the 17 handle when we left the floor, but I'm gonna guess it's
1718. Oh yeah, it's still keeping its wings up. I mean, we've got, how much time is left? We've got about 4 minutes left before the closing bell, and we're holding strong at down 25.
Yeah, I want a 10-point rally. 10-point. We've got 4 minutes.
Yeah, we've got. I would love it rallying into the close. I want to take a look real quick at what the bonds are doing here. We're still saying at the 116.
Still right there.
We haven't. I just want to glance at it real quick. Taking a look at the chart. We like them a little bit lower on the 16 handle before we will kind of dabble, right?
I mean, I guess you could sell some puts, or the rank's only 5. I wouldn't.
No, the rank is 5. This is what's saving us, and that's kind of the reason why we're not looking at it right now, is because the rank is 5.
Yeah.
But don't you think everything's kind of cyclical, right? Right now, the creme de la creme is AMD, and it's up again today. Another 4% today. $7 in AMD. It's pretty good. Ooh, it's getting close to the magic number.
Put in your 217 calendar. And then let's go back for the viewer who wanted a SoFi diagonal, because we have 3 minutes.
Okay, let's go SoFi diagonal. We'll do AMD calendar tomorrow.
Yeah, let's do the SoFi diagonal.
Okay. So this would be an earnings setup diagonal, which would be a calendar diagonal for earnings. So I would be buying the 28 in the 24 day, and I'm going to go to make it pretty.
And just sell. We want to make sure it's wide enough. 28.31, $3 wide. Maybe go to the 32. Or you know what? Instead of the 28, bring it down a little bit. Bring it down so you're not paying so much extrinsic value. I hate buying that at the money.
So here we've got the 27.
Yeah.
27.32. So you're $5 wide for one.
Oh, wait. You see it flipped it and moved it to the 17 day. Put it all in the same cycle.
Oh, hey. Thank you. Good eye. Good eye, Jenny Andrews. Good eye. So selling let's look up here.
You're buying in this cycle.
I'm gonna do, let me delete that. We're buying, we went down. So I'm gonna buy, wanted to go a little bit in the money and pay 180 in extrinsic value instead of 235.
And we know it'll keep some because of earnings. So then sell the one with, I don't care, 32 with 56 cents. Then we have a $5 wide for 250. And that's okay, I think, paying 50% of the width of the spread.
Well, and I don't mind getting 25% on 25%, meaning we're selling something for 50 cents and only paying 250. That's not bad. You want to make sure you're getting something for the one you're selling. What we don't like in a diagonal is I'm going to sell this 38. That doesn't make any sense. You want to make sure you're getting something. I'm going to ship this one. Let me see.
All right. Yeah, it's 3 o'clock. So bell's going to ring. Where are SPOOs? Go to SPX.
No. I want to get filled.
And then go to SPX and we will watch it.
Done. We got in just under the wire. Hold on.
All right.
SPX.
I need a little rally. This is not good.
I don't think you're gonna get it. I mean, you've got about 30 seconds left.
Wah. But I can't remember. Do you remember where blue wackadoo strikes were? Or I don't remember.
No, I don't. But I know that Blue Wackadoo and Jack Tucker are very good at making adjustments. So I'm hoping.
That's true. I made 0 adjustments. I mean, mine's baby small, but I made 0 adjustments. But
you know,
and at 9 a.m. I sold the 20 delta put. So, look, we had this little rally.
Oh, it was.
I think I can maybe save myself 1 point. Like, here, 67.14.59. So I saved myself, 40 cents, 42 cents.
Oh, 42 cents. It's 42 cents you didn't have a minute ago. All right, Jenny, it's been a real joy doing 2 shows with you today. Guess what? We'll be back like Chuck Woolery, we'll be back for 2 shows tomorrow as well. One will be live from the SIBO and the other one will be live from our home studios.
Yes, everyone have a wonderful evening. And remember to trade small, trade often.
Laugh with us, learn with us, and watch us on Last Call. We'll see you tomorrow, everybody.
When the market moves, traders need to move faster. tastytrade Active Trader tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I have made a deal with the devil and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is until proven otherwise, which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I have made a deal with the devil and I'm long UNH.
What's your most controversial market opinion?
Well, my newest phrase of the year is until proven otherwise, which basically means buy every dip because they've been gobbled up pretty quickly. And even like the tariff stuff, at the bottom of the tariff stuff, I was like, ooh, maybe things are different. And now here we are at all-time highs, like 2 months later. So I think you still got to keep your size in check, but I think the dip buying is here to stay.
Well, I mean, I already told you my UNH trade. I have made a deal with the devil and I'm long UNH. So I think that is pretty controversial. I don't know a lot of people that know about that stock, let alone trade it, let alone want to be long it. And so I feel like it's a whirlwind of just heinous attitude that has to be to the upside now.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
And we are back, and no, your eyes do not deceive you. This is a whole new lineup yet again. I'm Elias Pievek here in San Francisco. That's Thomas Westwater in Chicago. And joining us, a very, very special guest, the Bat himself. Welcome to Overtime, everybody. How goes it?
Going well. No complaints here. Thank you very much for having me on your show. I mean, I had to come on the show for the first down day. I mean, how else can I explain it but being here for the first down day? I wouldn't miss it for the world.
That's what we need. Somebody's got to walk me off the ledge here because, of course, my knives are being sharpened as we speak. Somebody's got to tell me to stop thinking and stop selling.
So today,
gentlemen, what do you make of this down today? Does it mean anything?
I don't think it means too much in the grand scheme of things. I mean, coming off highs, we've done it before several times during this rally. It's been 2-3 days at most. So, I mean, maybe we could get some extension down into Thursday, Friday. But I don't think there's any reason to ring the alarm bells yet.
I mean, you had a 1% move in the Russell, right? I mean, that was probably the biggest mover. The rest were pretty much inside the expected move. I mean, the S&Ps, NASDAQ, and the Dow. Volatility crept up a little bit. You got a nice 2.5% move in volatility. It's closed kind of mid-range after the mini S&Ps kind of rallied off of their lows. I mean, they made lows about 20 handles away from where they closed it. 20 handles away from their old close. New 6,800 again on the mini S&Ps. I mean, the kids did tell me it was supposed to be October in Bitcoin, but it was, down as much.
Is that what they said?
That's what they told me. But it was down as much as it was up the other day. I mean, I think I'm here with Westwater saying it's much to do about nothing. I mean, if we were up 20 handles, we'd be saying it's Groundhog Day again.
Yeah. I mean, in my mind, sort of in the simple world of putting horizontal levels of maybe significance across the chart, I go, okay, well, if by definition a trend higher is higher highs and higher lows, then we don't have a lower low. And that's sort of what tells me that this is not anything to write home about today. A pullback here, I mean, obviously we're just a hair off record highs, but we didn't basically undo this breakout. So whatever high this was that we came off, obviously we took it out, found follow through, and came back and didn't get back under. What I liked a little bit on the short side today was it looked like whatever cluster this was, whatever congestion was in here, we got through it. And so I nibbled a little bit on this one. As always, vertical, as always, SPY to keep things small, to not have big positions on, tons of duration so that I dilute my delta exposure as much as possible because I'm fighting the market here. So I don't want to do anything crazy that's going to get me kicked in the head too hard. I've been kicked in the head enough times. And so what I'm going to do here, I'm not touching the NASDAQ, which I thought held up pretty convincingly here. I mean, even if you look at the shorter term, this is a 4-hour chart right here. I mean, it doesn't take a genius to take a crayon across this chart and go, we're at the bottom of the range and we didn't clear it. The trend is there.
You did have some stocks taken on the chin in the NASDAQ.
For sure.
Tesla's been a leader. It was down 20. I'm going to throw out the Coinbases of the world and stuff like that. But I mean, you did have some stocks that took a little bit of weakness. Microsoft down $5. Google. I mean, there was definitely this one-day move that we've seen. I mean, I think really tomorrow's a much more telling day than today. I mean, if we can get a little bit of momentum going to one way or the other. $17 expected move on the E-mini S&P, stay quite low. Talked about it on the show with Nick today. I was really kind of shy on doing a 0-day trade. He pulled the trigger and was able to take maybe 20% out of the trade that we did. But if you didn't, you took heat all day long on the trade with volatility expanding and now coming back. Now, again, the type of trade, if you would have held it all day long, you probably would have been close to a max loser, only to come all the way back and probably almost have a max winner. I mean, these 0-day trades are $17 expected move. We moved 21 bucks on even the S&Ps. You know, you probably made a couple of bucks there. Not much, but you probably made a couple of bucks.
I mean, they're nothing if not feisty. These.
Yeah. Well, you were miserable all day long, though, and you had to sit with it all day long, and you had to sit with them down 45, and maybe an 80 or 90 or 70+% loser of the max loss of what you could have had, only to come back to basically make a couple of dollars on it. Tough way to make a living when volatility is low, but this is what we have. If you haven't been doing that, then you haven't been participating in the market at all, because we've had relatively low implied volatility. We did a great study today, a market measure that we did today at top of the hour, 9 o'clock, where we showed a lot more volatile this year than the past previous 10 years, which I don't know if that's surprising to the two of you, but that was a little surprising going Friday into Monday.
I thought it was a little bit surprising.
Yeah, Friday into Monday. I should have said that. Going into the weekend risk. You don't have weekend risk right now.
The weekend risk does seem to make sense because we get a lot of these over the weekend. There's a tweet, there's some announcement, there's the Sunday shows, and somebody shows up and says something wacky about tariffs, and then everybody gets all kind of kerfuffled. But it does seem like overall things are kind of almost moving with blinders on, where as long as we can sit and hope that there will be cheap money downwind, then okay, we'll lose a little now, we'll borrow it back later for cheaper. That's okay. That seems like insulation. I think probably the thing that I keep coming back and looking at is this December SOFR contract here, because I look at it and I go, well, here's the Fed, right? This is the Fed meeting last month. And since then, SOFR has come in. And obviously this is just like bonds. So this is the rate inverted, right? That this is the price of the interest rate future. So this going down is the implied rate for essentially Fed funds, not quite Fed funds. Futures are their own thing. This is a 3-month SOFR, but basically the same. So this is telling you that the market read the Fed as a little bit hawkish, or at least a little bit less dovish than they wanted, because rates implied for next year since the Fed have come up. So the market's shaved off about a 25 basis point cut out of their expectations. And so whatever they thought of the Fed, whatever insulation the markets were going to get from Fed easing, it's less of it in their forecast now. So what I thought was really fascinating today in this context was, obviously there's no data, we're in the middle of a government shutdown, but every Fed speaker in the world is apparently on the calendar this week because they have to.
Well, they still got to get paid. I mean, they
got to tell us something. If there's no data, somebody's got to explain something about what's going on. And so I thought it was really interesting. If you look at a short-term chart of the S&P today, there it is. This right here is when they start speaking. So first you get Bostic from the Atlanta Fed. Then you get the president's favorite member of the Board of Governors, Stephen Mirren, speaking. Then you get everybody's favorite bomb thrower, Minneapolis Fed President Neil Kashkari, who apparently has never met a policy extreme he hasn't liked. He's been extremely hawkish. He's been extremely dovish. He's never been middle of the road. It's amazing. And so you get this very concerted move basically as they're talking. And so I thought it was an interesting sort of thing because what they said, even Mirren, who's super dovish, obviously, he was put there to do that. Even him kind of saying some things that maybe don't inspire the greatest of rate cut confidence in markets.
Going off script.
Totally off script. Bostic didn't really say a whole lot. He was mostly focused on the impact of AI and kind of longer term things. It was more an academic speech. But Mirren in particular said the economy was weak in the first half of the year, but we should be through that now. It's like, but you want to cut rates a lot. What? What are you saying? Why do you want to cut rates a lot? And he goes, yeah, the economy is going to be fine, but that shouldn't have a read through to monetary policy. Wait, what? How? What? So what is it that you do if not modulate the economy or attempt to do something? And it seemed like the thrust of what he was saying was being data dependent is not the thing to do because it's too backward looking, and the Fed should be more anticipatory. Which is interesting because in the same breath, he's saying the economy is going to look better. So fewer rate cuts. It's interesting. He seemed to be talking out of both sides of his mouth. Neil Kashkari, as Neil Kashkari is wont to do, came out strongly hawkish and basically said it's too soon to know if inflation from the tariffs is going to be sticky and that he's seeing stagflation signals out there. So bonds didn't really do anything crazy. They're a little bit up, but kind of within their recent range, I suppose.
Long came up a little.
A little bit, yeah. So you got a little bit of a rise here in ZB. I mean, it's kind of coming off this same sort of bottom down here that we've carved out over the past, call it 2.5 weeks, something like that. So I started nibbling on it when it pulled back here, basically thinking, okay, well, it's holding whatever inflection this was. So let's take a shot and see. It's basically in the spot where I got in, a little bit higher. But it did come up a little. So it makes you wonder kind of what it was that spooked stocks. And I'm almost kind of encouraged because there isn't a clear-cut narrative. If things were going to break, the convincing one probably happens for no discernible reason at all.
Sure, it's the devil that you don't see kind of thing. You know, if everybody's looking for it, you at least expect it. You expect it, sure. Hey, if I can switch gears for just a quick second, Ilya.
Sure,
Thomas,
of course.
You've been quiet, so I want to get you involved in here for a quick second. Nick always mentions you with commodity-based products and whether they be commodities or even the gold and metals. Please talk to me about gold, new highs, silver, basically new highs. I know it sold off of the highs, but give me something. What's the deal with gold here? I mean, we keep printing money to Ilya's point of view that it doesn't matter, gold continues to go higher, or are we done? Is the Japanese yen kind of signaling maybe something that we're a little bit done here? Maybe the dollar's getting a little bit more strength. Give me something.
Yeah, I mean, the fiscal deficits, you're expecting more and more spending, more and more money printing. It's just kind of a move that this has been in place strongly since August. I mean, and now we're accelerating higher. So I actually took off my gold long yesterday, stuck in silver. I was up big on both the trades, so I wanted to reduce my exposure a little bit. But I think this is just a mix of a lot of things. It's not one big thing. Central banks have been buying, right? Fiscal deficits are expected to continue expanding. There's political uncertainty. There's, war still going on. So I think, it's just a confluence of factors. And at this point, I think, above 4,000, we've kind of, I would expect some profit taking to come in, which is why I got out of my position. Wanted to stay in one of the precious metals just in case, we keep going higher. But I'll just be waiting for the next pullback in gold. I've seen a lot of people, try to call a top and short it. I don't think that's the move to do here. When we have had pullbacks in gold, they've been pretty short. They've been pretty modest pullbacks. So I think, there's nothing in the chart or in the story really telling you that it's time to get short gold. If your only argument is to get shorted because it's just went too far, too high, I'm not sure if that's the most convincing thing. Eventually profit taking will come in, but I think a lot of the buying right now, is, interesting, especially because October is not a seasonally strong month for gold, even though you have things like Diwali and stuff, which boost demand for jewelry and just gold buying. It's really, I expect this to keep going. If we got a pullback to 3,900, 3,950, I'll be buying it up.
That close. We're 4,000 and change. You're talking about $50. It could move $50 in a day.
Right.
I would say the only other thing that, and I love to look at volatility. Volatility finally started percolating a little bit. It actually had been coming down, not quite yesterday, but the previous 3 or 4 days. Gold volatility had been coming down. It caught this bid again, and then a spike in volatility. To your point, everybody's could be calling a high in gold for quite some time, and you would have been wrong for no more, right for no more than a day, wrong into eternity here. But I think the out of the money calls here are getting a little bit juiced up, which means the vertical spreads themselves, call spreads, are being cheap because that out of the money option has a higher implied volatility than the closer to the money option. So a broken wing butterfly, play it in a small way. I did that today on my option trades today, where I put on a broken wing call butterfly. You've got upside room. It's omnidirectional. I'm the world's worst commodity trader, so you're better at this. And if I only have price to go with, then too far, too fast, I'll hang my hat on that with a little bit of volatility cushion. I don't know. We'll see how it works out. But I played it for the first time in quite some time, a little bit to the short side in gold today.
I think you did this way better than I did. I got shaken out of my gold long, like right here.
Oh, no, that's my recent gold short. I was short GDX for $10. And I just bit the bullet and, went another $10 or $12 higher after that. No, this is not my first time getting spanked in a commodity. I've been doing
I had a nice run, basically looking at this range breaking out. And then I got cold feet right around here. But then I kept silver, and silver kept running. And then I finally took it off today because this was not the greatest sort of day. But again, I'm looking at this and I'm like, well, did I go too early? But I didn't like that whatever this consolidation thing was broke down. So I got out of it today. I took my P&L on it. I got in like right here on this little range breakout and rode this part of it. So I'm out of metals here, but I'm with Thomas. I don't think this has anything to do with the Fed cutting rates necessarily. I don't think this has anything to do with the dollar necessarily, because the dollar has actually been strengthening and gold doesn't care. Yields have been a little bit higher since the Fed meeting. Gold doesn't care. So whatever is going on here doesn't seem to be like a monetary policy gold classic kind of thing. So maybe that calculus is out the window. Maybe what we're looking at is a different kind of just generalized, the world is crazy, let's own some gold kind of a thing. I wouldn't be surprised, actually, if a lot of this gold buying, and this is a totally unsubstantiated, entirely guesswork kind of a idea, but we've got this thing coming up with the Supreme Court ruling on the tariffs, and whether you can justify the bulk of them on national security grounds. And that's coming up this month, next month. We're supposed to get a ruling. I think end of this month, second half of this month. They're supposed to rule on it. We've just spent between April, let's call it early April, and now, with the markets benchmarking what they think this is. If you threw a curve ball at them now and told them what you thought isn't it, it's something else, why not own a little protection? Because you don't know what's going to happen on the other side of that.
What would be the protection play?
Just own gold on general uncertainty grounds.
And then
just on general, who knows what this thing is if the Supreme Court tosses it.
And what if they don't toss it? I mean,
what if they don't toss it?
Sell off in gold?
Right. Because it doesn't seem to follow kind of the usual gold rhyme or reason. You'd think since mid-September, dollar is up, yields are up, not a lot, but up, and gold is ripping. It should be kryptonite for gold that the dollar and yields are going up. It yields nothing. It's an anti-fiat kind of a thing. Dollar going up, yields going up should be terrible for gold.
You know, and there's also demand from exchange traded funds, just the function of price going higher itself. It's not that there's actual demand for the ETFs. It's the price of the ETF goes up. The ETF needs to hold more gold as collateral. So, I mean, that plays a lot into it, I think, too.
Yeah. It's a good point. That is a very good point. What else do you see in the commodities space, Thomas?
I got long natty gas today, finally, after being out for a few weeks. You got feed gas flows, which are essentially LNG. So export demand is picking up from the U.S. And the flows they're around 16 billion cubic feet, which is not quite a record, but it's getting higher. And we're coming into this seasonal strength here, even though very mild weather across the U.S. So I like this price rise because it's not being driven by demand in the U.S. yet. So when that does come in, that's just another layer to help drive the price up. And I'm trading the Z contract, so the next one out, and it's already above 4. So it's also a technical break. Play on a technical bullishness going above that 4 level, and continue to accelerate throughout the day. We're at pretty much cleared resistance if you see it as a close above recent closing highs. We cleared that range from early September. So, I mean, it's looking like this is potentially a bottom here that we're playing. And now, you can play that seasonality to get long through October, through November. And there's great volatility in the product to trade it.
What about
I am still struggling to find how to get exposure. Like, I look at it and I go, okay, NG is too big. It's a large contract. If you did it through ETFs, they're not big enough. They're super, super thin.
There's MNG, it's a 1/10 of the size. There's QG, it's a 1/5 of the size. I mean, NG is a big product. So, even QG, it's still a pretty big product if you don't have a big account. But MNG is pretty manageable. But, there's no options on it. So you have to take an outright position.
Right.
What about on the currency side, Thomas? This yen today got killed the last 2 days, opens what ends up being mid-range for the day and just continued to sell off all day long. Huge move, couple of deviation move over the last couple of days. What do you think about this yen trade?
Yeah, there's the election happened. I'm not sure if I'm pronouncing this right. Takeshi, it was a surprise.
Sanae Takaichi.
Yeah, Takaichi. So it's they're a party that's more acceptable for stimulus, and this comes after this October rate hike was already in jeopardy, and you started the year with a really strong view that the BOJ was going to be pretty hawkish throughout the year, and that has kind of unraveled several times now up until now. So it's just it looks like this is the card on the deck that is it's folding all these people that have been holding out for, thinking you could get long the yen, it's going to have this big rally. But really, ever since like April that we see on the chart, it's hasn't really given us much. We're still up from where we started the year, and that's probably on some residual hawkish hopes, but it's really looking more and more like the yen is not going to perform into the end of the year.
So by hawkish, you mean higher interest rates, correct?
Right.
Yes.
The BOJ is in opposition to pretty much every other major central bank because of their super low inflation environment that they've had for decades coming out of this ultra loose monetary negative rates setting. So, I mean, you've had good things for inflation in Japan. There's been the wage hikes, union agreements, things like that pushing it up. But really, and I think this is also maybe partially due to the tariffs as well. It's just not helping their economy, get to where it needs to be for those policymakers to finally pull the trigger on raising rates even more. They've done, I think, one hike.
Did you just hint that that tariffs might be hurting Japan and helping other places?
No, like just.
Oh, okay. I just want to make
just heard it
everywhere. Yeah,
just hurting Japan, not helping.
Just heard it.
Right.
Right.
There's no two sides to the coin.
There's no helping. Nobody's getting helped here.
I've seen people saying they want to get long. I don't know if this is the place to get long. We just dropped under this August low. There's not much, price action going all the way back to February. So there's low liquidity if you look at it from something like a volume profile standpoint. And I see more pain ahead. I'm not necessarily getting short. It's not. I've looked at the options. It's not, I didn't really see anything I liked or loved, so I'm just going to stick out for now. If we got down around 65, maybe I'd nibble on the long side, but I think this is something I think it's going to continue to maybe fall, but it's a hard trade.
You got to come see my friends at Tasty FX on this, because 6J is another big contract that I don't like because it's huge and it doesn't allow for nimble management. I've been doing it over here on the Tasty FX side.
You get nice and small here, which is really nice.
You get nice and small, yeah. So the size that I've got on here is 0.1 of a standard contract, which is basically the same thing as M6J. So a 10K lot, and you can put it on, no issue. Cheap the way that buying or selling an M6E or an M6B would be, but there is no M6J on our platform because it's thin and weird. So instead, just do this. So I got long dollar yen here. Also got short some Singapore dollar, which is working in tandem, but it's a very similar idea. I've had the yen on for a while. I just put the euro on as a way to kind of increase my long dollar exposure on that side, though I am definitely doing it through micro futures as well. I'm pretty short M6E, and you can do it this way. You don't need to go complicated with a 6J contract. I learned my lesson there. Even with verticals, that thing just cracks you in the side of the head, and I'm not standing in the way of it. I need my currency exposure in 10K increments.
Yeah, the yen's one trade or one instrument that I haven't had much luck with every time I trade it. So I'm also of the view that dollar long, and I think the dollar is due for an eventual rebound. I mean, we didn't see too much strength because it's mostly euro that commands the DXY, or when you're looking at a dollar index and things like that. I am short the euro, but only long the dollar via the short euro right now, whereas a few weeks ago I was short, the Canadian dollar, the Australian dollar, the euro. But I've lightened up that exposure, but I'm still expecting a dollar rebound.
Yeah, I mean, I think, and I suppose we'll look at the dollar index here, though it's basically the euro upside down. But you do see this interesting thing where here's the low in July, since then, the dollar hasn't really made a new low. It hasn't really rallied up a storm, but obviously it had an awful 6 months to start the year and has since kind of gone sideways. You'd think that for all of the rate cut talk, for all of the back and forth on the tariffs and this or that, and gold ripping and stocks ripping, this would be down. People would be selling it. And so it feels like when the price action diverges like this, when the news flow should be awful, but the price won't go, it's telling you that the market is relatively strong. And all it's going to take is a little bit of a change in the vibe, and this thing wants to go higher. So
what if the Supreme Court comes out and says the tariffs are illegal? Are you expecting the dollar to go down?
No, I'm expecting it to go up. I think what we learned about the dollar in April was you had this kind of momentary freak out, especially here, where bonds were falling at the same time that stocks were falling, at the same time that the dollar was falling. It was kind of like a sell America dynamic. And it lasted for maybe a week. And it was right after the president decided that he was going to come out with this foam board that had different tariff rates for everybody and said, this one's going to get this and this one's going to get that. And immediately the markets went, oh my God, this is so complicated. We're going to do this bilaterally with each one. This is uncertainty for a long time. It's all weird. The U.S. wants to essentially cut off its nose to spite its face. It wants to undermine its own position at the center of the global commercial order. And so the markets freaked out. And then the president very quickly turned around and said, hey, whoa. Things are getting a little bit yippy out here. Here's a 90-day pause on everything. Everybody relax. And what I think the markets learned there was the administration is not crazy. They're not attempting to break the underpinnings of the global financial system, which are the dollar and U.S. debt as a risk-free asset benchmark, that they are responsive to market discipline, that if the markets tell them this is the wrong thing, they listen. And so this idea that the dollar was almost maybe on the cusp of losing its kind of haven status, or like cash of choice when things freak out status, I think that's done. So if, in my mind, if you throw a grenade into the tariff story, either which way, if you throw a grenade into the geopolitical story, if all of a sudden you get a weird day like today that extrapolates out and you go, well, tech is leading a sell-off. Why? Did something happen? No, nothing happened. But at some point, these valuations are going to give people vertigo to some extent. So whatever happens, I think the dollar ends up being, again, the kind of anti-risk cash of choice. Because I think we're back to that now. So if things go wacky, I think the dollar rallies, just on haven grounds.
Yeah, to replace the dollar, you'd also need something to replace it with, and there's really not many great options.
Fresh out of those things.
I mean, if you saw that the dollar rallied under those conditions, would you expect it to hurt gold, or is gold going to catch a haven bid as well? I mean, it's not crazy.
I think gold keeps going. It's amazing that gold doesn't care, but it doesn't seem to care.
Right. We've seen gold and the dollar go up at the same time before. So I don't see that as a big risk either to gold.
Yeah, I don't think gold particularly cares about yields or the dollar here, which again is uncharacteristic, but it can happen.
Right.
I mean, expected move in gold futures for the next 50 days or whatever, just under, is over 200 handles. So you're talking about a decent size implied volatility in gold. So
yeah,
there, I think you can expect the unexpected to the upside or the downside. I don't think like I think like the market chops around here and doesn't like the equity market chops around here and doesn't really do too much. That's what I see in my fortune in my tea leaves. But if I had and I have a small gold position, a little bit short, but that my shorts are above 4,300. If I were to be a betting man on an exaggerated move, I think the commodity space is where you see it over the equity space, even though equities are at all-time highs too.
I actually agree. I think we were talking about this with Dylan yesterday, basically saying, look, stocks are extended, gold is extended. If I told you had to sell one, which one would you sell? Right. And I think in sort of the most simpleton kind of way, I would sell, like if I had to sell one, I'd sell gold. And it's because stocks are biased. Stocks like going higher. They don't like going down.
Yeah.
Whereas gold is more of a two-way market most of the time.
Meanwhile, silver's the one that sold off, right? Silver's big, almost 2% move, 1.75% move in silver.
That I thought was very interesting today. Silver, it can be a little bit more of a risk-on kind of a thing. So it can be a little bit more sensitive to stocks going down because it has that kind of slight cyclicality, slight industrial component that that gold doesn't. And so you got stocks down today, and silver seemed to catch a little indigestion, enough that I got shaken out of it. But it's interesting. I mean, if you kind of eyeball this, you get the sense that here was a sticking area, we got above it, we held it, and now we've kind of come back in. So maybe this means that we get a little follow through, but if we get back down here, say, call it 46 and under, so right around here, 45, 70, 46, if it starts to bottom here and shows that it's stalling and doesn't want to go under, I'm probably a buyer again.
Okay.
And actually, at 57 IV, maybe I'm a premium seller.
Yeah, yeah. I think it's a decent way to go if you're gonna play that way. Give you a little bit of stuff, or a little bit more room to be right, or at least get a little bit more strategic than just the directional nature of futures.
Yeah, I mean, it worked really well for me when I was taking the long gold side. I mean, vol was a little bit expensive, but I wanted to be directionally long. So I was doing it through selling put verticals and doing it like that. That worked very well. And so I would not be opposed at all to doing the same thing in silver here, were it to come back in a little bit. I think it still looks a little heavy. But if it came into here somewhere and started to hold, I would be looking at that.
We got earnings starting next week too. So I mean, in light of the government shutdown, that's going to be it's always the focus, but that's going to be more focused than ever, assuming we don't start getting this government data once we reopen.
Mirren actually said some interesting things about the data today. If you want to say that Nick Timrose over at the Wall Street Journal is like the Fed whisperer, where he seems to have a little birdie inside the room that chirps in his direction. And so if you read his column, you kind of get a sense for where policymakers are heading. If you wanted a little birdie from the White House in the room, Stephen Mirren's it. He's only on leave from his White House job. He hasn't even quit it. So he's technically at the White House and at the Fed, which is incredible. What a world. But what
I never thought I'd see the day.
No, it's profoundly strange. And also, he went so far as to say today in his speech that the U.S. government, he said U.S. government data remains gold standard. That's nice. Said that he's optimistic that the Fed will have the needed data by the October FOMC and that private sector data doesn't fill the gap. In other words, that we need government data and that will get it. So if you want to read the tea leaves here, then perhaps this shutdown ends sooner if we're going to get the right data by the October FOMC. He also said that insulation of monetary policy from politics is critical. Ha, ha, ha. You don't say, Stephen. You don't say.
He's got to play the part.
Sure.
But does that mean... That means saying that means he has to be a vote for no policy change if the government shutdown's continuing, because he's saying he's data dependent. If you don't have data, how can you make a decision?
It's a fantastic thing that he's doing here. It's a real logical gymnastics maneuver here to say, well, the economy is getting better, right? Because that's what the president wants to hear. Obviously, any president would want to hear that on his watch, the economy is getting better. Okay, right. So the economy is getting better, but we need aggressive rate cuts. Wait, what? Why? Is it getting better or do we need aggressive rate cuts? Which thing is it? And for some reason, the way that, and I mean, I know Will like this, but one of the things that he said today was the way that the financial markets reacted to Fed rate cuts supports the push for aggressive cuts. It's like, well, so you're saying the markets liked cheaper money. Not exactly the most controversial opinion. I mean, I wouldn't think that says that the cuts are appropriate or inappropriate. I think the market just likes cheap liquidity, obviously. And so, interesting set of comments from him today. But if he's right, then this shutdown's going to be over fast.
Since you're talking about the shutdown, today they came out talking about not giving back pay to furloughed federal workers. I don't know how that can be perceived too well by anybody, whether you're a federal worker or not on any side of the aisle. I mean,
sure.
It's probably, some sort of political feather ruffling or something like that, but I don't think it's a very helpful discussion. How about they just, go back to let's get out of the shutdown kind of thing. Like, let's try to
that would be good. Yeah.
Let's try to work with that, and let's not try to anger any side or both sides or all sides or just humanity themselves. What a silly statement to make, I think.
Yeah, I mean, it just seems mean-spirited for no reason.
I mean, yeah, a lot of people,
which is typical.
A lot of people are still working.
Yes.
But I mean, as someone that was in the government during a shutdown before, I can tell you a lot of people get very, very nervous and start doing everything. Like people that never get involved in politics before start calling, emailing their senators, congresspeople, all that. The pressure builds with each day.
So I didn't know that about you. Where did you work in the government, if you don't mind me asking?
The U.S. Army.
Oh, awesome. Got it. Right. So, yeah, so you'd be part of that whole paycheck. Yeah, sure.
Yeah, no, our money was already gone before the next paycheck. You bought your beer, you bought your gas, and then about it.
Love you long time. Sure. Got the whole thing. Understand. Yep. I'd like to change the subject, but I think I'm out of subjects.
Actually, Thomas, speaking of, I got a little bit short crude oil, and I'm wondering if you're going to try and talk me out of it. So this is not the world's most complicated idea. I looked at this and said, aha, there is a floor here. We hit it a bunch of times. We hit it here, and then here, and then here, and then whoop, we slipped.
But then you got 60.
Maybe I'll nibble on the short side a little bit here and see what happens. Thoughts?
Yeah, I mean, I don't hate it. I don't love it. I think it's going to stay. I think it's going to stay range bound. Holding 60. I don't know. If we go back down there and test it again, I'd get nervous, because if you get that second breakthrough or that second test and then you break through, it's saying something. But I mean, OPEC's saying they're going to release more. Russia's actually going to release less, but Saudi and a couple other countries are going to compensate for that. The EIA data.
You really believe all those guys, Thomas?
No. I mean, you
I
can't
only believe
say.
them in the sense that when the headlines come out and they start moving things, I go, well, obviously these guys have zero competence to do anything. So whatever the news is attributing to them, fade that.
Yeah, agreed.
Yeah, I mean, this is, I just got out of my Iron Condor yesterday, and I got out of the call side earlier, and then, or I got out of the put side earlier, and then I got out of the call side just, I think, yesterday. But, you know, this range that we had, it did get threatened. I don't know if it's quite broken yet, even though we did go under it a little bit. You know, I think it's all based on the economy. And going under 60 is just going to cause a lot of pain for U.S. producers. So
yes, it is.
But then again, production's holding up actually quite well. The one thing is inventories are rising across the globe, except for distillates. Distillates are still really down. So I mean, refining, when you're a refiner, you can't just, if you need more diesel, you have to refine other products too. So it kind of is something that's going to keep production higher. And I think trading right around where we're trading it makes sense for when you look at the economy and, you know, more production from OPEC. So I don't know. I'm not going to get short, but I think I'm going to wait till next week. I might get in another Iron Condor again if we go back into this range, get around 63, 64, 65. But eventually, you do have to get out of the range you've been trading. And I don't know when that will happen, but, you know, in the 50s, that's going to signal that the economy is weakening. Right around the 60s, it's like, you know, we're just slightly expanding, maybe staying unchanged. So I'm out of oil for now. I don't have a strong enough view to trade it.
I missed it this morning. I was trying to trade it from the long side. It rallied before I could do anything when the show was on. I'm not particularly a big fan of your short here, but I'm not a particularly big fan of a buy here either. So I think you'll have some time to manage the trade. I don't think it's a long-ish time trade. If that
no. I mean, in my mind, this is a nibble to basically see what it seems to be doing. And if it's not doing anything and we end up, let's say, like back here on a close tomorrow, I'm out. And I'm doing it through USO, again, to keep things small, to keep things contained, to not risk too much. I've got a bunch of duration in it, all to kind of say, well, these are choppy, difficult markets. Let me nibble quietly and carefully. And if I take an L and keep it to like 0.5% of equity, 1% of equity, I can do that a lot.
Yeah, sure.
Now, one thing that was interesting to me about today's sell-off was it really was a very techie sell-off. And so looking at the MAGS ETF, we're basically on some kind of a dividing line here. I mean, it's interesting. This thing hasn't really gone anywhere since basically the Fed. So the Fed's right here. So we get a little gap into it. Here's the Fed itself right there. And we're basically holding whatever range that established here. We're not really going anywhere. We're not falling either. Is this any kind of a interesting thing for either of you? Maybe not to fight the indexes, because who knows, rotation might mean they hold up better, but in these very big market cap names where so much froth seems to live, is this a better vehicle to just look at those?
Well, I'm gonna answer it. I'm gonna answer it this way. A little birdie told me that, and again, this is a product that trades 2 million shares.
It's small.
What's that? It's small. It's small. Doesn't have a lot of open interest. Let me look before I. Yeah, it doesn't have a lot of open interest. ETF style product. I believe it has only those like Amazon and Apple.
Just the 7.
Yeah, right. Meta, Microsoft, Nvidia, and Tesla. I think so. You asked me if this is something to look at. I'm going to say yes, it is, but probably not this product at this time. But I believe the CBOE is going to be coming out with a cash settled product, much like SPX is. Of the top 7, they can't do obviously the top 7 because there are other ones like this with like 3 others. I believe AMD is one of them. I forget what the other 2 were. I believe there's going to be a total of 10 stocks, but a cash settled product. I think that's going to be a very interesting product.
That's interesting.
If you have the liquidity, liquidity, I mean by liquidity providers setting it up. And if it's done by the CBOE and you have the same people that are doing the SPX, and there's going to be an SPX ARB against the S&P 500 SPX versus something like this, 10 most weighted stocks, maybe it's weighted as opposed to individual. I think it'd be pretty cool because that's what kept the OEX alive back in the day, which I know now I'm really dating myself, but we had the 1.5, which was the S&P 500 versus the S&P 100. And that kept a lot of liquidity in both products. So maybe this is something that will even make volatility a little bit greater in SPX because you're going to have a little bit of a arb between this new product that I'm talking about. Again, just Birdie's talking to me. Hopefully, maybe by Q1 of next year. I don't know. I'm going to try to get more information on it the next coming weeks. But so I don't know if this is the product to answer your question, but I think it's on people's radars and on people's lips, and I think they're really looking to do something with it.
Yeah, that would be very cool if we got some kind of a cash settled thing that's liquid to really.
Which brings us to one other thing. So if they can do a cash settled for this type of product, you might be getting cash settled stocks sometime down in the future too. So it opens up a big, world here of cash settled, maybe equity products too. Now I'm thinking ahead. I'm just going on my own here. I have no information about that. That's just me trying to put more to the line. Than
it would all, and if you got micros there, then it would almost be like on exchange CFD level flexibility. Sure. Obviously,
sure.
we don't have CFDs in the US,
cool.
But that would be cool.
That becomes cool. Yeah,
that would be very cool. We got 2 minutes here, gentlemen. Closing thoughts. How are you positioned going into tomorrow?
I do not have a lot of equity exposure. I'm long Tesla. It's one of the big equities I've only been trading. But if we get another down day tomorrow and it's at the morning, we get a 1% sell off, I'll probably do a 0-day short put spread, assuming that, the bulk of the selling is in the morning, even if it's, continuation from yesterday. Because what I've noticed is usually you get that big move and it doesn't trend lower. You're not trending down to 2 or 3%. So I'll probably do that and take a stab at it.
I kind of like your idea. If we get that move, it would be an anomaly because we've never had that before in the last 3 months or so. The market has rallied. I'm making a joke. We've had 2 down days in a row here, but I think it's a decent. Entry point. I think we're going to meander around in the equities, which means only one thing: we're going to go big in one direction or the other. If I think we're going to go sideways, so I have very.
We've got the FOMC minutes tomorrow, everybody. Hold on to your hats.
Yeah, I got very little feel for the market right now, just because of the way it moved. I guess a gun to my head, I would like to see a little bit more downside pressure, just because I think it would be healthy for the market. I don't know, something back down. Even the S&Ps in the I don't know, dare I say, like, 6,600 level or something like that.
Yeah, like right here somewhere.
Yeah, something like that. I don't know. Flirt with it, maybe.
That'd be fine.
Facility. That's my standard.
My little baby short that I have on here would be perfectly fine with a move like that, and I'd be happy and move on. I've got a little bit there. I'm long a little bit of the long end in the bonds through TLT. Probably my biggest position is I'm long dollar every which way. Short the euro, the yen, the pound, the Aussie, the Canadian dollar, you name it, I'm short it, because that seems to be the sort of best risk reward idea out there at this point. It's near the lows. It's not falling on news that should make it hurt. So let's see.
Very good.
Thank you, gentlemen. Overtime is out of time, but don't go anywhere, because if you wanted to talk about FOMC minutes in excruciating detail, Macro Money is coming your way momentarily. I'll be right back. Don't go anywhere.
Peace.
It is a down day for Wall Street for reasons unclear. And we're going to try to figure out what is going on here and see if we can't look ahead to what is the next and possibly the only meaningful piece of macro event risk this week, while we have a U.S. government shutdown and no data of substance is coming out. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is take a look, first of all, at the performance over the past 24 hours, see what these markets did, and then try to divine what might be coming at us next. Because we do have, as we say, the first real piece of macro news here by way of minutes from that fateful monetary policy announcement that we got last month. So here is how these markets did today. What we find here most of all is a situation where we have a sort of hangover, if you will, for stock markets. It didn't really seem like you have a situation here where a defined negative piece of news came out, and on that basis, the market did XYZ thing. What we have instead is a kind of soggy pullback led mainly by tech that seems to be a sort of move in the absence of news. So S&P down a little bit, off about 0.3%. NASDAQ off almost 0.5%. Yields, interestingly, coming in. So that dynamic we've been watching where the market seems to be, if any kind of consistent as far as themes are concerned, then the mood has been, if the chance of rate cuts seems to be declining, or at least if scope for rate cuts seems to be declining, then you have a situation where the markets get a little bit of indigestion and get a little bit defensive. Then you get situations where perhaps the chance for rate cuts gets a little bit more strength. For example, when you shut down the government and there is a fiscal headwind, then you have a situation where the markets tend to be relatively better supported. And that's what we've been seeing here recently. So I think as you look at this going forward, what's interesting about a day like today is those kinds of dynamics don't seem to be clearly on display. Instead, you have a kind of absence of a unifying theme. So yields lower, stocks also lower, crude oil a little bit higher, but still overall on the defensive. Of course, we had this massive slide last week of 7.4%, and this sort of baby correction here is just that for now, a correction in the context of a larger down move. Gold a little bit higher. The dollar very much back on offense, though. That move that we saw from the beginning of the week in the Japanese yen following elections in Japan, that continues to burn bright. The yen down over 1% here, and some of that dollar strength spilling out across the other major currencies. The euro off almost 0.5% here as we look and see what seems to be occurring here across markets. That's perhaps the one sort of unifying theme that has more consistently emerged in these markets, this idea that the dollar is perhaps done falling, perhaps looking at some kind of an attempt at a rebound, all of these rate cut expectations notwithstanding, because it does appear like all the news that's coming out should be dollar negative. Indeed, gold being higher seems to be the kind of an environment where the dollar might be hampered. They tend to move as foils for each other, but that clearly is not what we are seeing here. Bitcoin taking a big leg lower here and showing itself once again to be a risk-on kind of a proxy. And the situation in gold, again, seemingly impervious to other things. Silver was a little bit off today. It's a little bit more risk sensitive than gold is, but gold just continues to rise. Looking at what we saw here on the calendar side of things, again, no economic data, but of course this week was, as we discussed yesterday, a big one, and is a big one for Fed speechifying. And we got a big batch of it today. President Bostic of the Atlanta Fed didn't really go into near-term monetary policy very much. He mostly talked about long-term implications for AI. Michelle Bowman didn't say very much on the economic outlook, but we did get some very interesting tidbits from Minneapolis Fed President Neil Kashkari and, of course, resident Dove and White House fan Stephen Miran, the newest governor, the newest member of the Board of Governors in Washington, D.C. He gave us some interesting comments today as well. What's interesting is that these comments, in particular Miran and Kashkari, they start to come over the wires just as stocks start to swoon. So make of that what you will. But here's some of these comments. For Neil Kashkari, the thrust seems to be what is essentially the kind of wait and see, middle of the road consensus at the Fed. So he's saying here that it's unclear what the impact on inflation is going to be from the tariffs, basically saying that it's unclear that this inflation is going to be sticky or not sticky, but also that the data is starting to give us some stagflationary signals. And indeed, we saw this when we looked at those ISM numbers from last week, which showed us that although the price picture didn't get worse, it remains highly elevated even as employment continues to shrink. And that's, of course, an interesting sort of thing to consider here because, as we've heard endless times now from U.S. Fed Chair Powell, the objectives that the Fed is looking at here, its dual mandate of employment and inflation, they appear to be in tension. And so you get that once again reinforced from Kashkari here, basically making the argument that to go aggressively on rate cuts would be a mistake, saying if there's a massive demand for investment in data centers in particular, of course, we are talking about the impact of AI here, that will push up interest rates. And the market seems to be able to hold in its head these competing ideas saying, well, we have this AI boom, that's what's driving equity prices. But if that's the case, then that's inflationary. And so what the market seemed to be telling, according to President Kashkari here, is that there isn't a case to go aggressively on rate cuts. In fact, he says that if the Fed drastically lowers rates, one would expect that the economy will have a burst of high inflation. Then you go to Governor Miron. And here you seem to be hearing him talk out of both sides of his mouth to some extent. So first he's saying that there's a lot of uncertainty about the economy that has lifted after a soft first half. He's saying that he's optimistic that uncertainty will remain on the retreat going forward, and that, interestingly, if the economy does well, that doesn't have firm implications for monetary policy. Now, that's not the textbook story. Typically, one would think if the economy is doing well, then it's difficult to justify aggressive easing. But apparently, this is not a logical conundrum for Governor Miron. He seems to think that you can have the economy recover, you can have it be accelerating, and yet you can do aggressive easing. In fact, what we have here is him saying that, look, he's more sanguine on inflation than others. He thinks that restrictive monetary policy has risks, but also making the interesting argument here that monetary policy should be forward-looking, and that being data-dependent is too backward-looking, which I suppose is interesting because we don't have data because of this government shutdown. So that, of course, makes this next part all the more interesting. He says that U.S. government data remains the gold standard despite some issues, and that he's optimistic the Fed will have the data needed by the October FOMC, which is late this month, saying that that the private sector data that we have doesn't fill this gap. So I suppose if one were to think that Governor Miron still has some ears inside the White House, that this shutdown might be over relatively soon, or at least that's the White House's perception. But we'll see, of course, how this goes. He doesn't see the tariffs as a material driver of inflation. No shock there. But he's arguing that it's important to insulate monetary policy from politics, which is, of course, curious because he technically is still employed by the White House. He is on leave from his White House job to temporarily fill this Fed gig, and the expectation is that he is going to go back to the White House job once this is done, which is not what one would think looks like insulating monetary policy from politics, but here we are. So the markets seem to look at this, and it's unclear what they extracted from it, but whatever it was, they didn't like it. Because just as these comments started to come across the wires, that's where you got the bulk of this sell-off. Now, maybe that was a coincidence, certainly not outside the realm of possibility, but perhaps the markets looked at this and said, well, you want to insulate monetary policy from politics, but that's not what you're doing. You think the economy is going to do better, but you don't think that that changes anything about the need for aggressive rate cuts. You don't want to look at the data because that's too backward looking, but you need the data because the private sector doesn't tell you what you want to know, and the government's data is the gold standard. It seems like a lot of this is at cross purposes with itself. And so perhaps what the markets are responding to, perhaps how you end up with gold higher on a day like this, is just the signals are too mixed. And the market isn't clear on what the thrust of policy is, and to the extent that Governor Miron is a reflection of the White House consensus, perhaps the White House isn't clear where it's steering, or at least which part of this it cares about more, because clearly some of these things conflict with each other. Now, the next big piece, and the sort of important piece for the week, in the absence of other data, is going to be minutes from that fateful September FOMC meeting. We can see here from the statement, the Fed is clearly justifying its rate cut action on the basis of weakness in the labor market, saying inflation has moved up and remains somewhat elevated, but also job gains have slowed and the unemployment rate has edged up. And essentially saying right here that the committee judges that the risks to both sides of the mandate deserve attention, but that downside risks to employment have risen. And in light of that shift in the balance of risks is how you get this rate cut. That, of course, was very well telegraphed ahead of the announcement. So the really big story here is this. And perhaps this starts to line up a little bit with what Governor Miron is saying. There is an upgrade in the case for economic growth. There is an upgrade in the forecast for inflation. There's a downgrade in expectations for the jobless rate. So the median projection from Fed policy officials here is far from dovish in its underpinnings. But nevertheless, we end up with 3 rate cuts on the menu for this year, 1 for next year, 1 for 2027. And the way we end up at 3 here is right here. So this is really how we get that average. I don't think it's a shock to say that the only Fed policymaker, Stephen Miron, calling for aggressive easing is probably this dot. And that's probably how you get that median set up this way. So it's an interesting set of implications here because, of course, from the market's perspective, the Fed should be more dovish. If we look at where we are on policy expectations here, 64 basis points is what the markets have for next year. This year is essentially a given. We have at least one more cut on the board here, we can see, and about a 16 basis points out of 25 baked in on a second cut. But if you look at specific tailored probabilities per meeting, what you find is that for October, you're well into the 90s for the likelihood that you get one more 25 basis point cut. And you can see we've held steady here for at least a week. This is a week ago right here. Here's where we are today. We're a little bit more dovish even than a week ago, although slightly less so than yesterday for December. But the upshot here seems to be we're still well over 80% chance of getting a cut. So this hardly seems like the main story. Instead, it's this disconnect for next year that probably moves the needle. The markets have 64 basis points on the menu. That's way in excess of what the Fed has, as we saw right here, from 3.6 to 3.4. That's one 25 basis point rate cut for next year. And the markets clearly have at least 2 and 14 basis points in the direction of a third. So about a 50-50 chance, give or take, of a third. And so it is this disconnect that should be most interesting in these FOMC minutes. The markets ostensibly saying, well, the economy is going to need all this easing, but even the Fed is saying, well, no, actually, growth expectations we thought needed to be revised higher. Inflation expectations we thought needed to be revised higher. Unemployment expectations we thought needed to get revised lower. And in fact, that seems to be lining up with the flow of economic data for the most part. Soggy ISM numbers last week notwithstanding. We can see that this Atlanta Fed GDP Now model gives us the tone of incoming economic data through a lens of what it might mean for GDP growth. Obviously, this is not an accurate forecast, nor should we hold it to being an accurate forecast of third quarter GDP. That's still ages away. This forecast is going to change a bunch before it's within striking distance of making a reasonable call. But the tone of the data going into the model tells us that it's been relatively positive. The City Economic Surprise Index, measuring whether data is coming in better or worse than expected, well north of zero here. And in fact, has been well north of zero since basically the middle of July, showing us that U.S. economic data is tending to surprise above expectations, seemingly endorsing what the Fed is saying, but of course clashing with the market's dovish perspective. So if these minutes tell us that indeed the economy seems to be firming, that the Fed does not need to be in a hurry, that inflation is still something to think about vis-a-vis the tariffs, Stephen Mirren's perspective notwithstanding, then this relationship that the markets have developed between asset prices and Fed rate cut expectations might well turn on Wall Street. So we can see here that this rally higher in the S&P 500 came with this dovish shift in policy expectations and has been struggling to build ongoing momentum as this has stalled as well. Meanwhile, the dollar is attempting to bottom as expectations for policy get less dovish. So the market is taking the Fed's lead and saying, oh, well, they're not as committed to easing, so higher dollar and maybe slower going on stocks. If these FOMC minutes tell us the Fed's in no hurry, again, but for Stephen Mirren, then we could very well see a bit of a pullback here in risk and a further bounce in the dollar. That's kind of the way I'm positioned here going into the rest of the week. I'm still very long dollars, short the Aussie, short the pound. I've actually increased my exposure to the short side of the euro. That seems to be working, so I've scaled up a bit. Still short the Canadian dollar as well. Nursing this long-term exposure in Brazilian stocks. That's just sitting here. It's got tons of time left in it. It's not exactly a near-term idea. I nibbled a little bit on the short side of the S&P 500 through SPY today with a little put vertical. If it works, it works. If it doesn't, it doesn't. It's nice and small. And still holding the long side of the bonds and a little bit short crude oil as of this week. It seems to be trying to crack the bottom of its range. And so this is another one of these exploratory shorts to see if momentum builds or not. If not, you're wrong fast and you get out with a small loss. If yes, then the idea is asymmetric and then you scale in. And that's where we are for today. That was Macro Money. As ever, we are here after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, usually looking at the Wall Street close and where things may go therefrom. I'm writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.